to be recognized. The challenge in any such process always remains is how do you distill down these varieties of thoughts into a simple idea. So the way we evolved it was we took the basic concept of infinity as a concept of excellence, continuity, a future. The feeling of the trophy of being extremely dynamic, yet it has a poetic form. It's moving in space, and the texture on the surface creates more depth to the, more feeling to the sculpture. The thing is, we created an infinity, the symbol of infinity, yet not fully complete infinity. So, the idea of excellence is that it's continuous. Infinity is a mathematical concept which is going towards the extreme level of achievement. And I think what is very important and what I hope always happens is that the trophy outlives its time and becomes an icon into itself.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July, only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open. It's going to be tough and expected with crude close to the $95 mark, which is why you're seeing the implied down in the red. And guys, corporate results, at least the last couple of days, has been nothing to cheer about too much, save for, of course, the odd Nestle and maybe Eternal.
You know, I think that the read over here is expectations were very bad. But
for those two,
a few of the names which you know, and what's happened is they've just been slightly above estimate. So they've under-promised and over-delivered to some extent, and hence the street is still taking it with a pinch of salt. The war is not over, so the expectation is what we expected in the first quarter going to move to the second quarter.
It's like that parent who thought that their kid would fail in math and they came home and they said, okay, you got 60%, you're okay.
Exactly.
I think we're being a little harsh when it comes to Nestle.
No, not Nestle. Nestle is top of the class.
Overall mood in terms of the earnings as well.
Yeah, maybe in terms of the earnings, it's been a mixed bag, but I think the bigger concern is what's happening in the Strait of Hormuz. And the problem is it's no longer possible to understand what's happening if you see statements from leaders coming in. What is the next step to this? Do you eventually have to go into a higher octane of warfare? Will there be some kind of ground activity in Iran? Because this can't continue forever. And that's really what is bothering global markets as well. US markets have slid as the AI capex is back in focus. That has another set of worries, because if you pull up the indices, the Dow was pretty much flat overnight, but it is largely the NASDAQ which had a bit of a tumble. And in futures as well, that would be thanks to Alphabet more than anything else that used to have the NASDAQ down in the red. Here's what's happened. Alphabet was down 3% in post-market trade after its 2026 capex forecast increased to $205 billion. Remember, a whole host of companies have posted, and it's been a mixed bag largely. Meanwhile, bond yields inched higher as there's no end in sight to the US-Iran tensions. The 10-year was at 4.65%, and crude prices continue to climb. US Secretary of State Marco Rubio says Iran is not serious about a deal. Brent has now hit $96 to the barrel. If you look at the steady climb of Brent, it's definitely something which would put Indian investors at unease. Meanwhile, US President Donald Trump, during a rally in Georgia, said the strait is not a major concern for the United States and added that Iran is still not ready to strike a deal. Listen in.
This is with this skirmish we have with the Islamic Republic of Iran, and I call it that because let me tell you, they're getting hit so hard, and they want to make a deal. But I say they're not ready to make a deal, because every time they make a deal, they want to change it and everything. They're not ready. They'll be ready because let me tell you, say they're not ready to make a deal. Because every time they make a deal, they want to change it and everything. They're not ready. They'll be ready very soon. We don't need straits. We don't need anything. We don't need straight, but because we have to do it, because we cannot let Iran have a nuclear weapon. It's very...
Okay, so more of the same. Nothing. Statement from Secretary of State Marco Rubio, who said unequivocally that Iran does not want to make a deal, and that is the problem. Let's look at how Asia is performing this morning before we get to the implied open and our first conversation today. Asian markets actually up in the green. India might have a tough start, frankly, and let's look at the India implied 110 points down in the red. But let's Yardini Research, Mr. Yardini, thank you so much for speaking with us. Really, always a pleasure. The question really is, can this state of relative limbo continue, right? Are we looking at the next logical step as an escalation? Because going back to the drawing table and speaking about a deal is something which has tried and failed.
Well, I think both sides need to get this over with. Clearly, the blockade that the U.S. has imposed on Iran is doing great damage to their economy. The question is whether the government cares. I have to believe that they have to be concerned that if their economy really continues to damage to their economy, the question is whether the government cares. Tank with high inflation, that they're asking for trouble in terms of a popular uprising. So I think they'd like to get that behind them. And the U.S., meanwhile, by some reports, is running out of defensive weapons with which to protect military bases that we have in the Middle East. And of course, the midterm elections are coming up. And the last thing the president really needs is to see gasoline prices going right back up. So you would think that rationally, both sides have a reason to go back into a ceasefire mode and negotiate, but this is not, wars are never rational, and so there is certainly a possibility that this thing lasts longer, and that in turn could create some real problems for the global economy with higher oil prices once again.
Good morning from where I'm at. Good evening to you. Just to that last point, the expectation that this could last for a while. I'm referring to what happened overnight in the U.S., which is that the U.S. House has passed the $1.15 trillion military bill, which would allow for more weapons to be created and funneled towards Iran. And this is something that I think from the outside in poses the question to say that if there was a feeling earlier that the political support for a war, a protracted war, was dissipating, this seems to be suggesting otherwise.
Well, look, America really can't afford to lose this war. I mean, that's the problem for both sides. Neither side wants to be in a situation where they lose the war. The geopolitical consequences will continue to reverberate for a long time if we don't have a clear resolution of this conflict. But you make a good point, and the House still has got a majority of Republicans. The midterms are coming up, and that might change. And so I think clearly the House Republicans are going to try to do what they can while they still have a majority in the House. And there is support among Republicans for defense spending. And let's face it, the world is certainly got plenty of geopolitical risk between what's happening between Russia and Ukraine and what's happening in the Middle East, and the whole nature of war and the kind of weapons you need to fight wars these days has changed rather dramatically. So no wonder that the administration wants to see more spending on defense, and so far the Republicans are willing to go along.
This is Hiral on this side. My question to you then is, the repercussions that we are seeing in terms of the way crude prices are behaving, we've gone to the $95 per barrel mark. You talk about treasury yields as well. They have been mapping the geopolitical risks and edging higher as well. And in turn, if you see commodities like precious metals, from the lows, again, that uptick has started, right? Do you think they will come back in terms of the peaks that we saw at the highest point in terms of where the war was? Is that something which could again be a possibility now? And if so, what should you advise investors to do?
Yeah, well, look, I think when we look at the different asset classes, clearly overweighting energy makes sense as a hedge against a continued chaos in the Middle East. And the energy stocks really didn't have much of a correction the way that oil did, and they've held their own. And now it looks as though they might be going higher. So I think having energy makes sense. I think owning a diversified portfolio in the stock market makes sense, because there's a tremendous amount of liquidity in the global stock market. And so far, the resilience of the global economy in the face of higher energy prices has been, frankly, quite impressive. With regards to gold, gold got up to about $5,500 before per ounce before the war, and then everybody that assumed that the war would lead to higher gold prices was wrong. And that's because some central bankers saw their currencies really taking a dive on the higher oil prices, and they actually had to sell gold in order to intervene to prop up their currencies. Well, where are we now? Well, we're down to $4,000 an ounce, and I think we're going to find a lot of support here. I think we've seen a lot of the hot money that went in and then went out. I think that's over with, and I think the central banks are still buying. And I do think that even with the war picking up again here, it's interesting to see that the price of gold's holding up, notwithstanding the strength of the dollar. So I'm thinking the gold really still has a potential to get back up to maybe 5,000, maybe 5,500, which was the previous record high.
Mr. Yardeni, just a quick word on emerging markets in the middle of all of this, because it's more of the same and slightly worse than I would say the last month or so when we had some sort of a ceasefire. Where does that set India? Also from the perspective that the global AI trade is seeing more and more questions emerging. I mean, look at the reaction to Alphabet when they've announced an increase in capex.
Correct. Yeah. Well, look, with regards to India, it's an emerging economy for sure. It's a big emerging economy. It does have a very important information technology sector that at first looked like it might suffer because of AI. Then it got cheaper, and I think we're going to find that that sector is not going to disappear. And quite the opposite. I think India will do what other countries have done and join this AI race and benefit from it. But right now, for the here and now, the issue for India and other emerging markets that import oil is the price has gone higher. And that's putting downward pressure on their currencies, which puts upward pressure on inflation, which then puts pressure on their central bank to raise interest rates. So right now, I think India and other oil importing emerging markets are in limbo. It's hard to see much upside. But on the other hand, I think the markets are going to continue to assume that this can't go on for much longer. There's going to be pressure on both sides, Iran and the U.S., to come to some sort of agreement. And as a result, I think while the rest of the summer may be what I call a summer stall in global stock markets, I think there is a potential for the markets to regain their bullishness over the fall.
Thank you so much, Mr. Yardeni, for speaking with us. Edward Yardeni there. And, you know, we were talking about the AI trade and the IT trade. Just a quick look through some of the results that came overnight. Alphabet, cloud has surged, but the cloud revenues have surged, but the capex they've announced has spooked investors. Revenues up 24%, much better than estimates. Google Cloud is up 82%. At a $24.7 billion record growth rate. The adjusted EPS was pretty much flat, 2.85 versus 2.89. But the capex guidance was raised at an upward end of $205 billion from $190 billion yesterday. And that is what really saw the stock take a tumble. And there's ServiceNow, which has delivered a strong beat. Total revenues were up 24% for the stock year on year. Subscription revenues at $3.8 billion. This is 150 basis points above their own guidance. And ServiceNow AI has crossed $1 billion in ACVs. IBM AI spend shift has hit software demand. And remember, it was that statement from IBM which sent all Indian IT stocks tumbling. They've cut their FY26 revenue growth outlook to 4 to 5% from 5% plus earlier. Revenues at $17.2 billion versus an estimated 17.86, so it's a miss there. Adjusted EPS is also lower than what was estimated at 2.93, and software growth has slowed to 5%. If this is going to be a read-through for Indian IT, expect a bit of pain today. And I have to wrap up with Tesla. Revenue beat, but profit has collapsed. Revenue up 26% at $28.24 billion. Non-GAAP earnings per share is at 0.33. It's a miss. Gross margin is at 16.8%. This is also down about 40 basis points. Deliveries for units has gone up 25%, but it's the profits which is a problem. And it's become a bit important to also look at what some of these stocks are doing, because more and more Indians are now looking at using their LRS remittance limits and investing in some of these stocks. There are so many which give that option now, and there are many more heading that way via Gift City. So we will try and increase this coverage for our viewers as well.
No, certainly, and it bears watching the tax implications of that as well when you do that. So pay attention to that as well. But let's talk about what happened in trade yesterday. And you had an understandable fall in equity markets across the board as crude oil spiked. Both foreign institutions and domestic institutions, and likely quite a few retail investors also selling over the course of the session as that sentiment soured. You had Brent crude that crossed that $95 per barrel mark as we were closing out market trade yesterday, and that had a bearing on sentiment. In fact, the Nifty 50 dropping as much as 0.8%, with most of those constituents falling in trade. Interglobe Aviation, again, understandably, was the worst performer on the Nifty 50 because of its sensitivity to fuel prices. It was down over 3.5%. Bajaj Auto and Nestle on the other end of the spectrum were the top performers, and we spoke about why the results were significantly better than estimates had pegged it. Most sectors ended in the red, with FMCG and auto the exceptions to that rule, but those gains were not very substantial, particularly the auto index. FMCG, of course, was on account of Nestle the top gainer. Realty, PSU banks on the other end of the spectrum were the worst performers. Of course, State Bank of India was an underperformer from that pack, and because of the weightage resulted in the rest of the pack also underperforming. The broader markets declined and underperformed the benchmark. For once, you had a risk-off sentiment that led to increased selling at the broader end of the spectrum, and quite a few stocks reacting to earnings updates as well. The Nifty mid-cap index dropping over 1%, the small-cap index dropping about 1.3%. Both of those indices, I think, if I'm not mistaken, ending less than 0.1% from the low point of the day, and that's evident in the chart that is on the screen right now. Bandhan Bank was the accident of the day, as we've been calling it, and we usually do during the earnings season. We spoke to you about this yesterday. It was more so about the concerns that the return on assets projections that were expected to go higher have been pushed down the road, and that's not something that the street was very happy with. Data Patterns and M&M Financial Services on the other end of the spectrum were the top gainers for good reason.
Yeah, I mean, what we are witnessing in the last 2 to 3 trading sessions is there is that consolidation which has continued, but now at higher levels profit booking has also started to creep in. So there is that slight cautiousness amongst investors that is prevailing as well. Now, in terms of crude, as Tamanna was mentioning, $95 per barrel, $98 per barrel, all of these are levels that the street is watching out for. OMCs again will be in focus on the back of this. Paint companies have been seeing some bit of a negative reaction. Tire companies have been seeing some of a negative reaction as well. So watch out for these three spaces pretty closely. Apart from that, the question is whether you should be actually blindly buying on the dips as well, even on the good names. That's where investors should be maintaining their caution view. The question is 23,900 is that key support, right? So if markets are holding above that 23,900 and is stabilizing, that's probably when one should take a decision to start buying on dips as well. That's what analysts are talking about. So interestingly, consolidation, caution, and buy on dips only on sustainability. That's what the mood is looking like so far, Tamanna.
Okay, I kind of agree with that. Today you're going to have a little bit of a pain once again, because Nifty has fallen below the key 24,000 level and has been dragged down by Brent crude, spiking towards 95. You're still there and it's looking like it's getting worse. The escalating Middle East conflict is not really easing. Technical damage is evident across indices. Both the Nifty and the Bank Nifty have broken below their short-term moving averages. Market sentiment has turned cautious as weak earnings are being punished sharply and higher oil prices weigh on risk appetite. The immediate hurdle zone now is 24,100 to 24,150. Key resistance levels at 24,200. 23,900 to 23,915 acts as an immediate intraday support. Crucial supports at 23,800 to 23,835. The next bearish target is 23,600 to 23,650. Hope we don't see that. For the Bank Nifty, immediate support 56,980 to 57,000. Holding 57,000 on a closing basis is crucial for bulls. A failure here exposes 56,500 to 56,440. Resistance immediate hurdle is at 57,500 to 57,633, followed by 57,800 to 58,000 as well. So those are some of the key levels to watch out for. But let me go across to Puneet for the setup on the F&O side this morning.
Well, thank you for that. As you close across the week, go into the Sensex expiry as well, and as you rightly mentioned, have been under pressure consistently. So you are starting to look at the lower levels for the Nifty 50 at this point of time. So 23,800. And then unfortunately we will also be looking at 23,600 as an important level for the Nifty 50, and then there's not too much support. Then you straight at 23,200. So this 1,000-point range between 23,200 and 24,200 continues to be an important one that we're tracking in the next few days. The Bank Nifty as well has been showing you a similar trajectory at this point of time, because despite the private bank earnings and some support there from ICICI, you've largely seen the index under pressure, still holding up because at 57,200, and then there's the only supports, not very strong ones at 56,200 and 600 as well. So that clearly is a pain point from these current levels. Any downside might be some more pain in the near term for a few days. When you also look at the foreign investors, they've yet again sold about in the cash market and continue to be very bearish in the F&O side of things as well. So the index long continues to be depressed. The short positions are almost 91 to 92%, continues to be hovering around. And you've seen the put call ratio also be very similar to yesterday at that 1.1 mark. Some reductions have been visible in puts by foreign investors. That's also visible on the open interest distribution as well, because 24,000, 24,200, both levels very important at this point of time. You've seen good call writing, but puts have actually reduced around these levels. So below 24,200, you've actually seen a reduction of put contracts across key levels. So the red candle bars have actually largely disappeared from those levels, but a wait and watch clearly visible by foreign investors in the F&O market. For stock-specific action, yet again, you've not seen too many runway moves in open interest distribution to form a trend. So it's a story about benchmarks. Too many runway moves in open interest distribution to form a trend. So it's a story about benchmarks. BDL was one, but in the open interest losers, you had a few more. Substantial change in open interest. So if we can move on to the open interest losers as well, show you those. The JSW Steel, SGFC Bank, we put the stock in focus yesterday. All longs being unwinded on the stock. Grasim as well has seen a similar trajectory, so has Laurus Labs. So largely all the positions, the stocks that were doing well have actually started seeing selling, but the story continues to be about the benchmarks and post the open, hoping for some recovery post that 23,800 level as an important support.
Okay, thank you for that, Puneet. Let's start with stocks that should be on your radar. First on my watch list is Dr. Reddy's Laboratories. They reported after markets yesterday. It's not been a great set of numbers. Net profit is down 68.7% at 444 crores. Huge slide there. Revenues are down 5.5%. EBITDA is down 60%. Gone from 2,173 crores to 861 crores. Margins have sliced in less than half, from 25.3% to 10.6%, and other income in fact has increased. So actually it's even worse than what it looks like at 355 crores versus 290 crores. Global generics revenue is down 4.8% as well. We have a detailed conversation with the management, which you will see at 9:30 a.m. Our pharma analyst Farsha has looked at these numbers carefully, but let me just take you through what brokerages are saying this morning. Morgan Stanley has maintained an equal weight but cut the target price mildly actually to 1,200, still above what the current market price is. They're saying it's a weak quarter one. SEMA, now you'll hear SEMA a lot. SEMA is basically semaglutide. SEMA second half ramp up is key to track. Adjusted revenue was 2% and EBITDA was 13% below estimates. Earnings are at trough. That means the lowest point Timely resumption of semaglutide supplies and abatacept ramp-up are keys to meet the FY28 estimates. Adjusted for semaglutide disruption and impact from Middle East crisis, the margins could have been around 18% in Q1. Just going to quickly go through what BofA is saying. They've maintained a buy, cut the target price to 1480. They're saying it's a weak Q1 on lower US and SEMA API impact, again semaglutide. All eyes on that resumption. EBITDA is a miss, but hope for H2 improvement. Math on high teen margin in Q1. Confidence on semaglutide key for the stock. So this is going to be a tough morning perhaps for this stock. Couple it with everything that's happening around pharma. HEG is the other one on my radar. This is a good set of numbers. Net profit is up 16.7%, revenue is up 11%, EBITDA is up 42.5% for the quarter, and margins have gone from 17.2 to 22.1%. Revenues have grown 11% year on year, driven by stronger graphite electrode sales. Graphite business has contributed over 99% of operating revenue. PAT is nearly up 16%, aided by higher operating and investment income. Profit rebounded sharply from March quarter's investment valuation losses. The power segment remained negligible due to seasonal hydro generation, and hydro plant operations typically begin after monsoon-driven water availability. Mark-to-market investment gains boosted other income by about 8 crores odd, and investment gains have offset the GrafTech valuation volatility during the quarter. I remember the company is awaiting its final NCLT approval for restructuring scheme. The third stock on my radar is a recently listed one. This is their first set of results. After that, I'm talking about Waterways Leisure. It's not a good set of numbers. So the operating expenses are up 26%. Finance costs are up more than double, 2.4 times. Higher operating expenses and finance costs have, of course, caused pressure to the margins. Revenues are up 7.8%. EBITDA down 18.3%. Margins have gone from 31.2 to 23.6, and profits are down 34.4%. Some of the recent developments, because there was no investor presentation or conference call of the company yet, I'm not sure if they'll come and speak to the media. We hope they do. We'll be happy to speak to them. But the board has just approved a splitting of 1:10 shares within just 10 days of listing, which was quite eyebrow raising, because usually companies don't alter their capital structure for at least 6 months from the date of IPO opening. So just wanted to underline that again. So these are the first three I'm looking at.
Yeah, DRL certainly going to be one to watch. The only thing I think you might see is that because the expectations, particularly for this one, were so bleak heading into the results, that downside might be capped. But who knows? Let's see. Soon enough, we'll know. IndusInd Bank. It's a thumbs up, and this is broadly on account of the fact that asset quality is improved. It's actually strengthened with a decline in slippages as well. The microfinance asset quality is actually improved materially. You had vehicle finance that saw seasonal pressure, and there's no signs of a rise in CV stress, which is not something that you generally see. It's a seasonal aspect to the loan book. Lower provisions have led to a reduction in the credit cost, and that has improved financial metrics for the bank as a whole. The margin has seen some pressure on account of the loan mix shift towards the relatively lower yield wholesale loans, and this is something that a lot of banks are actually witnessing as more corporates look to borrow from banks rather than looking at the corporate bond markets because yields are elevated. Loan growth turnaround is seen sequentially, and that's driven by the wholesale segment. So think about it this way: loan growth is there, but the yields are getting scrimped because they're lending more to companies which don't essentially pay as much as a retail borrower would pay. So therefore, take a look at the numbers. You had the NII that was more or less flat, the profit after tax that came in 46.5% higher at 1,000 crore rupees or thereabouts. Provisions were lower, as I pointed out, and the asset quality is improved. The outlook is actually important to pay attention to. The credit growth is expected to be in line with the banking system in FY27. That could well be pretty robust because the banking system is expecting 16+% or thereabouts in the way of credit growth. Retail, MSME and rural banking are set to emerge as the primary growth engines for the bank. They expect some pressure on the net interest margin in the second quarter, and they expect asset quality to improve further. That's going to be absolutely critical for IndusInd to watch out for, led by lower stress in the MFI and PL portfolios. Now, management is targeting, and this is also crucial, a return on assets of around 1% by FY27 end. Brokerages are watching for that 1.5% mark, but it might just be a while before they reach that mark, of course. By the way, there was a conference call earlier yesterday, and my colleague Shivam, who tracks the space very closely, quizzed the Managing Director and Chief Executive Officer Rajiv Anand about the improving asset quality and the trend going forward. Listen in.
My first question is regarding the asset quality. We have seen fresh slippages declining this quarter, and in terms of provisions too, they have lowered and credit cost has also lowered. In terms of asset quality, the GNPA and NPA has also seen an improvement. So what were the key factors that has led to this improvement? And also in terms of FCNR deposits, how much amount has the banks has been mobilized till now, and what are your targets for FCNR deposits going forward?
So I think on the first question that you answered, so the first question that you had was on asset quality. We are seeing improving trends across all the segments on the microfinance, retail assets, vehicle finance, both on a Q-on-Q and YOY basis. And I think this is some of the hard work that we have done in terms of tightening our underwriting standards, improving our processes, etc., is beginning to play out. And we are fairly confident that these trends will continue in the current year. I just answered the question on FCNRB. Our market share on the FCNRs on the NRI side is about 3.6%. We are reasonably confident that we should be able to garner at least 3.6% of the flows that come into under the FCNRB scheme through a mix of unleveraged money, our own leverage through GIFT City, and leverage through partner banks.
Okay, so that number, he's talking about a percentage, but bear in mind that banks as a whole are expected to mop up upwards of $40 billion, possibly close to $50 billion. And so if he says that IndusInd Bank is expected to mop up 3.6% of that, it is a very substantial amount of money, and that will lead to deposit growth as well. But Nippon Life AMC, in fact, I've picked two AMCs that have posted numbers as my second and third. Nippon Life is actually, both of them posted pretty good set of numbers. A few data points stood out. The quarterly average assets under management have improved as much as 4% on a sequential basis, 23% year on year. Flows are likely have benefited from that broader market recovery that you saw from the low point at the end of March. So people have deployed funds. They've registered other income gain versus a loss on a sequential basis, and this is as bond yields eased. So for their treasury operations, generally falling bond yields is a very good thing for AMCs as a whole, and revenue from operations has risen as much as 4% sequentially. It's a pretty decent number. Systematic flow, and here they're talking about SIPs, that has increased as much as 13% on a year-on-year basis, 1.5% sequentially. They are, in fact, the fourth largest AMC, and so those trends are positive to look at. Robust growth in top line as well as the profitability, 31% on a sequential basis. Of course, it's a relatively low base because they saw treasury loss in the fourth quarter on account of a spike in bond yields, and the total income rising as much as 33%. UTI AMC, also good, not as good as Nippon. The quarterly average AUM has risen by as much as 1% sequentially and 9% year-on-year. Treasury gains in evidence for this company as well. I won't go into too many details here. The total income up as much as 45.5% compared with 585 crore rupees. And they've actually, for UTI AMC, in the P&L statement, they've stipulated what they've gotten from interest income as well as from mark to market. So it's important to note that for those treasury operations, it is mark to market. They're not actually booking these things.
They're not booking the profits, correct.
So it's a line item. It looks like it's profitable, it's good. All of those things look good, but at the same time, you should look at the core revenue and the core operations.
Yeah, and with this, one thing, whatever we're reading in between the lines, all of these stocks have given good returns to investors. So I think they are going to ignore all of these aspects to some extent, right? Just look at the performance from Nippon, UTI, all of them since the time they've listed to now. Interesting returns that they've given out. Now, we've been talking about JVs, we've been talking about partnerships over the last 2 days, and now you have in fact, in the auto space, after Gabriel India yesterday, so now BLW has signed 2 JVs with Denso. Now, the JV is targeting electric and hybrid powertrain systems. JV1 will focus on hybrid and electric applications for 4-wheelers and CVs, and the second JV will focus on hybrid and electric applications in the 2-wheeler and the 3-wheeler space as well. Now, they've got access to deep technology from Denso, on which you have Jefferies, which has maintained a buy, and they have a target price of 700. What they're saying is that the expanding opportunities in terms of the JV with Denso is positive. The partnership appears timely given the rising pace of EV adoption. In fact, you have Citi, which has also maintained a buy. They have a target price of 700, and what they're saying is that strengthening the position in the EV segment is positive. The powertrain business with 2 JVs with Denso is something which will aid their growth as well, and they're viewing the deal positively as it strengthens the company's position in the 4-wheeler EV powertrain segment, where its presence has been relatively limited. So an addition in terms of the scope of business as well. So don't be surprised if you see some good reaction coming in there. Now, the second one on my list, we have Eternal that will be in focus as well. The company posted numbers during market hours. If you pull up the chart of Eternal and see what happened when the numbers did come in, we did see that mild downtick and that recovery, but there is a possibility there will be some bit of short covering that could be coming in terms of Eternal today as well. You have Citi, which has maintained a buy. They've hiked the target price to a 385. What they're saying is that they're solidifying its leadership position in the quick commerce space with many structural advantages. They believe that the discounts alone are unlikely to threaten or disrupt as well. Moving on, if you talk about the next one, Morgan Stanley has maintained an overweight. They've also hiked the target price to a 373, and they're saying that execution actually drives conviction for this one. And the last brokerage I have on, when you talk about the last stock that I have, I beg your pardon, is a Gandhar Oil. Now, if you look at the numbers, very strong, sharp improvement in revenue, profitability and margins. In fact, it's the strong realizations which has aided the quarter this time around. The product mix is also moving towards a better one, and the overseas operations, they have continued to contribute meaningfully as well to the company's business. In fact, the management remains focused on expanding the PHPO segment, which is personal care, healthcare and performance oils. Net profit 192 odd crores versus 26, a 92% growth in terms of revenues. EBITDA 281 crores versus 46 crores, and margins have expanded substantially, 16.2% versus 5%. They've said that the broader strategy remains centered on sustaining double-digit volume growth, expanding the specialty product offerings, and increasing multinational customer relationships and entering new geographies, which would include Africa, Asia Pacific and South America, and the capacity expansion at the Taloja plant as utilization remains very high. So Gandhar Oil, and a very interesting counter to watch out for, because across parameters you've seen some smart moves there, and the management is confident that this is the kind of growth that they want to sustain.
The stock itself has shown quite a lot of action. Pull up the 1-year chart of Gandhar Oil and you'll see how that has performed as well. So but interesting over there, almost a 40% jump. Itself has shown quite a lot of action. Pull up the 1-year chart of Gandhar Oil and you'll see how that has performed as well. So but interesting over there, almost a 40% jump up in the last 12 months. But you know, we were talking about pharma, we were talking about Dr. Reddy's. Just listening to what US Secretary of State Marco Rubio said when asked whether India has raised concerns over the proposed tariffs on generic drug imports. Remember, he was meeting with the Indian External Affairs Minister S. Jaishankar. Rubio said the issue did not come up during their discussions. He went on to add, he thinks India should be concerned. Listen in.
I mean, not with me. I mean, we didn't get into depth on pharmaceuticals today. Obviously, I would expect them to be concerned about it, but they didn't raise it today. But they might have with others in our system, because we obviously deal with the Indians. We're very close to them.
Yeah, he seemed not to really know about it more than anything else.
Yeah, I mean, it's just, okay, you've asked me, I've responded.
Yeah, I suppose, more people we were talking about on this, including people who have been in the pharmaceutical industry, and they said, how can any company even react to this?
Yeah.
Because by the time you do it, it could change next week. So I don't know where that's really going to go. We'll take a very short break. The implied open still showing a gap down kind of an opening. Let's pull that up before we get into that break. 114 points down now. But when we come back, we'll have Khush Bora and Parag Thakkar with us. We'll talk about all the top strategies of the day. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV. India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen. What fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected.
Welcome back. You're watching India Market Open. We're going to have a down day in the market, but doesn't mean there's no opportunity there. Let's get Parag Thakkar and Khush Bora in. Khush, 24,000 has been breached. And is it looking like it's going to get worse?
It'll get worse before it gets better, yes. There's a good possibility. FOMO, very strong feeling. अब तक हम सिर्फ resistance की बात कर रहे थे, upper end of the range being tested. Bears were feeling FOMO, so here we are.
अभी जोमो हो रहा है for people who are not in the market. Joy of missing out. The opposite of FOMO.
सब मार्केट में किसी को भी जोमो नहीं है अभी फिलहाल.
नहीं जो बाहर बैठे. Thank God.
No, so there's a good possibility that we might actually test 23,800 before things get better. Now, a couple of points, right? FII selling yesterday on index futures also, they added 20,000 plus, 23,000 plus contracts, 92% short. Like I said, this is the biggest indicator for me in the markets right now, their behavior and how they are, still piling on shorts even at these levels. As you would expect, The technicals aren't the strongest right now. Nifty gave up the 20-day moving average. The next major support is at the 50-day moving average. Also happens to be close to the 23,800 mark. So yes, near-term pressures likely. But silver linings, there always are a few silver linings, right? PCR, by the way, is now at 0.8. Close to that support level of 0.7 from where we typically see a rebound. Also ties in with the fact that the Nifty is also, with this kind of a gap down opening, coming closer to its support level of 23,800. So any kind of positive trigger will bring about a sharp short covering rally. If it doesn't, then you might just consolidate around these levels. Also, I think Tamanna mentioned one level, which is 23,600, which is important from a technical standpoint if 23,800 is given way, because there is a gap that needs to be, that is still there, and could get filled if there is no positive news, if 23,800 is broken convincingly. So wait up, don't be in a hurry to buy the dip right now on the indices at least. If they take support here, they consolidate, then perhaps a positional bet can be made, not now.
Very quickly, kuch picks, if any. Any short calls?
Oh, that was a good one.
If any
was a very good one. मैं बता रहा हूँ कभी ना.
Your last sentence was don't be in a hurry to buy. So at least I know that was on the Nifty, but just extending that.
Actually, that's a very good extension. मैं तो ये भी बोलूँगा कि there are times when you add stocks to your portfolio and there are times when you add stocks to your watch list. This is the latter. तो अब हम दे रहे हैं stocks, but right now it's a good time to add the stocks to your watch list right now. GSK Pharma, by the way, stellar moves on this one. Last 3 sessions, very encouraging. Volumes also on the healthy side. 20-day moving average being respected. 26, 30, 27, 25. These are your targets. 24.70 is where you keep that stop loss. And because I'm not giving out too many calls, I'll just reiterate FEM Industries that we discussed yesterday. In a market like this, had a positive close of about 0.5% higher. So for very similar levels of 24.05, 24.80, with a stop loss at 22.60, maybe you could bump up that stop loss about a few points here or there. But these are the only 2 calls. Like I said, be cautious.
Okay, let's move on to the consumption space. Consumer demand has remained resilient this quarter. We're talking about 2 stocks now in the next few minutes. Eternal, which reported yesterday during close, and we'll also speak about Nestle, which reported in yesterday's market, and interesting reactions that they saw. Let me come to Eternal first. Delivered strong execution with improving food delivery momentum and Blinkit's profitability outlook strengthening. Nestle, on the other hand, posted an across-the-board earnings beat driven by robust volume growth, premiumization and margin expansion across all key product categories. Mahima is joining in to break it down. Mahima, are you starting with Eternal or Nestle?
I'll start with Eternal, Tamanna, because overall I think the fine print gave a better picture as compared to how the stock reacted to earnings, and then of course cooled off and also did turn into green in the last minutes of trade. But overall I think the shareholders letter and plus the con call also elaborated on the fact that the EBITDA margin guidance, the long-term guidance that they've given on Blinkit margins will be at the higher end of that 5 to 6%. Strong execution of course is driving growth, because overall if you take a look at the food delivery business, that's improved, and Blinkit performance has also improved sequentially. We're looking at it sequentially because of the inventory change that has happened for Blinkit. In terms of the PAT numbers, they did not meet the estimates by a large amount, and this was because of a one-off tax provision that they talked about in the con call in the food delivery business. Cash balance is also strengthening, so 300 odd crores is what they've added this quarter, taking the total to 18,288 odd crores. In terms of con call takeaway, I think on competition they did mention the fact that now it is becoming more predictable and is giving them comfort, and that's why a lot of brokerages have gone ahead and hiked the target prices for this one. Premiumization through launch of gourmet stores will be adopted from here on, and they believe discounts alone are unlikely to threaten or disrupt the competition in the quick commerce space. For Nestle, it was a very strong quarter. Strong beat in terms of margins despite of the inflationary pressure. All metrics, EBITDA, revenue, PAT have beaten estimates. Sales growth was strong and driven by volume growth. All 4 product categories saw double-digit growth, and that was again driven by volumes. And commodity markets of course remain mixed, but the outlook still in terms of commodity, they've taken a cautious approach. Brokerages of course have gone ahead today and hiked the target prices on this one, and there's one thing that stood out for me in the brokerage notes was that Jefferies has said that they believe growth rates should taper from H2 FY27. That will be something interesting to watch out for. So this is the overall view as to how things have panned out for Eternal and Nestle this quarter.
Thanks so much for that, Mahima. You know what I'm most curious about is whether the results that have been showcased by Nestle can be extrapolated to the rest of the pack, because there are a few SKUs or products for which Nestle is known and the others don't benefit. So let me ask this to Aditya Soman, who's Senior Research Analyst, CLSA India, joining us right now. Aditya, thanks so much for taking the time and very good morning to you. First, what do you make of Nestle? And do you think that this is a Nestle story rather than a broader FMCG story?
Hi, good morning, and thanks for having me on the show. No, absolutely. I think the way to break this down would be first the category. So I think food and beverages in general is better place than home and personal care. Two reasons for this. I think food and beverages just does better on modern channels like quick commerce, modern retail, and that's where we are seeing a lot of the incremental growth. And Nestle obviously is an F&B company. Secondly, I think the premium categories have been doing a lot better than the mass or entry level categories. And again, here we find that Nestle has a far stronger presence in the premium categories. Now, coming to Nestle specifics, obviously their execution on these modern channels over the past few quarters has been significantly better than peers. What we hear from feedback from the quick commerce channels, for example, is that Nestle is supplying to them on the same day, often significantly faster than any of the other peers. So it comes down to Nestle's execution, portfolio mix, as well as just a general shift in consumption towards discretionary and foods.
You know, Aditya, as we're seeing what the view is coming in from various brokerage houses on Nestle, one of the lines that struck me was great but wait, and simply because of valuations right now. And that becomes the key, right? I mean, I think this is the second or third consecutive quarter where Nestle has performed well. But sustenance from here on becomes a question that you would look at very closely.
Yeah, no, of course. I mean, sustainability of growth is a key question when it comes to such high value stocks. That being said, I'll make 3 points, right? So one, I think we've seen a lot of funds clamor towards sort of lower valued HPC names. However, I find that the growth there will likely continue to disappoint. And in that context, eventually you'll find investors move to safer, even more expensive names such as Nestle or in general the food names. So that's one. Second part is I think there was a comment also on sort of the second half being potentially weaker for Nestle and just as the base gets tougher. Now I do admit that from 3Q onwards the base does get tougher. However, I'll point out that the sort of milk products and nutrition business, which also includes baby food, has been a key drag on Nestle's top line growth over the past several quarters. And this was the first quarter we saw that segment also get to double-digit growth, and I feel that could sustain a higher than sector growth. So maybe not at the current sort of 20% plus levels, but still meaningfully higher than our sector going forward as well. So I remain very confident on Nestle and the broader F&B space.
Aditya, that's an interesting point that you make. But however, what I recollect is where CLSA had removed Nestle from the India focus portfolio, right, and added Eternal the last time. Does this mean Nestle will make it back to the list, taking the optimism that you have? Because we were talking about a change in consumption strategy from staples to discretionary and platform businesses when you had made that last change. What does that do to your portfolio now?
No, great question. I think this is a difference. Obviously, that strategists have taken off the India portfolio. I still have it as an outperform and remains one of my sort of top picks within the consumer staple space. That being said, overall, I do agree that we prefer the platforms and discretionary names over the consumer staples names. Within staples, we prefer names like Nestle. So just to make that point clearer, I mean, we have a 10% upside on Nestle, so it's not like we're saying this is one of those that's likely to meaningfully outperform. However, we're saying this is very stable. You're likely to see double-digit growth sustained for a long period of time. On the other hand, on names such as Eternal, for example, we have over 70% upside, and we are a lot more bullish in the near term as well on these names. And to build up sort of, I would say a balanced long-term portfolio, I would still sort of keep increasing the weights on discretionary / retail while being more selective on the FMCG space.
I do want to understand, Aditya, the call on Eternal and what you made from the numbers yesterday. There was a little bit of a fluctuation when the numbers actually came out, understandably so, because people were trying to understand how to read the numbers. And some clarity came out in the evening as well, specifically on quick commerce and the margins that are expected there, right? So how are you reading this business and why a 70% upside?
Yeah, no. three reasons for this, right? So one, obviously the initial volatility, you always see that before the shareholder letter comes because you get to these sort of headline numbers. That being said, I think in the shareholder letter, three things stood out. One, growth on top line was very strong. Second, I think management outlook on quick commerce profitability was strong. So they've sort of guided to the upper end of their original guidance of 5 to 6%, now saying they'll be closer to 6% adjusted EBITDA. But for me, what was even more sort of positive was that they are now guiding to 4% EBIT margin. Now, this is after ESOP costs, after depreciation, which is actually a very strong statement to make in an environment where they're still expanding their store network. Lastly, I think even on working capital, the outlook was strong. Them saying that working capital days should reduce to 12 from sort of 14 where we are presently and 18 where we were last year. So steady improvement in working capital and cash flows, and even on the inventory losses, they called out that it's about 1.8% of NOV, which is actually an incredibly impressive level given that even players like DMart are around that level, 1.6, 1.7%. So for a fast moving sort of e-commerce business to have that level of inventory losses is actually quite remarkable. So all in all, I came away a lot more positive after the call and reading the shareholder letter. Yes, contribution per order, a metric which I track closely, was lower, but that was also a function of lower AOV and a little bit of seasonality where we get higher delivery charges in this or delivery cost in this quarter. All in all, I came away quite positive. The absolute contribution number is very strong, and even if we were to assume sort of a very modest sort of 12 to 15% growth to this absolute contribution number, you'll see them beat the street on EBITDA estimates 2 years now.
Just curious, are you comparing an Eternal to Swiggy, Instamart and Zepto right now? Are you comparing it, when you look at it as an investment opportunity, to a DMart and some of the other FMC majors? How are you bucketing this?
No, so for me, different from DMart, and we've maintained that we remain positive on both. So I think DMart is all about sort of building a basket, building a cart, and ordering your monthly groceries. What Blinkit is trying to do is really fill the gaps in that basket. Let's say you've forgotten something and you're refilling, or for consumers who don't want to build a pantry at all, where they're encouraging the consumer to order just in time. Now this has two effects. Obviously, you see lower AOV as the consumer orders more frequently, and the consumer then effectively is just placing an order every time they need to fill their pantry rather than sort of planning the orders out. So that's the fundamental difference. So I would say more discretionary, still a relatively limited user sort of TAM compared with, I would say, a mass market retailer. However, from a value of TAM perspective, I actually feel that Eternal addresses a bigger TAM, just given that our view that the top 20% households actually account for almost 70% of value of consumption. And in many ways, Eternal is playing to that, whether it's through Blinkit or food delivery, and obviously even through more discretionary means like or channels like District or now Bistro.
Yeah, so you hone in on that particular segment of households. Thank you so much for joining in this morning and giving us your perspective on these two stocks. Aditya Suman from CLSA there. Parag bhai, thank you for your patience. You heard that whole conversation about Eternal. Is there a sense that you might see a rebound in the stock? Because there was a lack of clarity. Then you had this shareholder letter. Then you had the conference call come in. A lot of breakdown about competition as well. What are you making of what Eternal will do?
No, I think it should rebound. And I have always maintained in this space, quick commerce and food delivery space, Eternal is the best executor. And this is evident in this quarter's results in every sector. In every sector, you can say that these are the winners who have done right things, executed in a right manner.
So one winner or one or two winners per sector are visible, is that what you're saying?
Definitely, absolutely. So in Cement, Ultratech, for example, did best. In Steel, JSW Steel did best. In banking, ICICI Bank did best. In two-wheelers, TVS and Bajaj both did brilliantly. So across the sectors. Now in this sector, of course, I am sure Eternal will lead the space in this particular space.
Yeah. So
FMCG, Nestle did it, but Nestle, of course, is 60 times. So you cannot stick your neck out and say buy. You have to wait for a dip or a bad day or a bad result.
Yeah, well, I think
people have been waiting for some time.
Yeah, the companies are working on
the numbers they have shown is just mind-boggling. Like
Nestle is
like 25% sales growth, 40%.
I think second, third quarter in a row. They have
and
been on a trot.
40% PAT growth in a mature business like Nestle, like FMCG. It's.
But the point that is being raised, and I think the CLSA analysts put it well, right? The kind of products that they're selling, the way that they're executing, the premiumization that is at play. So therefore, even in the last one quarter, where HUL, probably Nestle as well, but certainly HUL has been raising prices, it's been at the higher end, and people have been consuming that nonetheless.
So see what's happened with the management as well. You are applying quick commerce and large platform sense that a Manish Tiwari has to an FMCG business. So you're beginning to see that happening. Okay, Samit Sarkar, waiting in for a while. We'll come back to your point which you wanted to finish, Parag Thakkar. But Samit Sarkar, what do you have on Heard on the Street for us this morning?
Given that we are in the earnings season, first stocks on that. Firstly, it's CG Power, Tata Power and Ambuja. There are buy flows on the large HNI and PMS desks. Dealers are expecting strong Q1 numbers from all the three names. For Bank of Baroda, it's on the other side. There are sell flows. Weak Q1 numbers is something that the street is expecting. For Polycab, there was a buzz of a block deal that is expected to happen. Now, we did indicate about this block deal buzz a while back, but what I'm picking up right now is that the demand is quite strong for this block deal, and this block deal might happen in the block window as well. For data patterns, there are buy flows. Dealers are expecting a large order win of close to around 1200 crore rupees. And when it comes to PFC and HDFC AMC, there are buy flows on the DI desk. Even the delivery volumes are on the higher side. And couple of stocks that we did indicate earlier, Dr. Reddy was on 22nd of July, that is yesterday. We did say that the numbers are expected to be quite weak for first quarter, and that has come out to be true. And for Sona BLW, we mentioned on 16th of July that there would be an announcement related to a JV, and yesterday they announced that they are forming a JV with Denso Group. So that's quite a positive announcement that has come in for Sona BLW.
Okay, so that's with regards to Sona BLW, and we took that as one of the stocks that should be on our radar as well. But apart from Sona BLW, data patterns, that's one I want to talk about with the kind of uptick that we've seen in terms of trade. Let's pull up the chart yesterday. Today, I mean, we are already at pre-open, yes, is indicating a mild bit of pressure, but there have been buy flows on H9 desk, as Somit was mentioning. On the charts, Kush, how does that look like? Because yesterday it was very strong.
And on the back of massive jump in volumes, I think about 5 or 6x of the last 20-day moving average. And this stock has a tendency of seeing these volume spikes, consolidating for some time and then going out and hitting fresh highs. So I would definitely remain invested, or if I have a position, I will continue to hold with a stop loss at 4600. Fresh buying I would avoid for now because it's already had a big spike. Plus there is a resistance at 4850 and 4900 levels. So definitely a hold. Fresh buying, fresh momentum, perhaps beyond 4900.
Okay, we have the first rates ticking in. Let's take a look at what's happening. I want to look at Eternal and Nestle because we've been speaking about it. I want to look at an IndusInd Bank. I want to look at a Dr. Reddy's. Let's pull up some of those stocks. Nothing massive happening on an Eternal right now, but at least your first ticks on your Nifty and your Sensex are not as bad as the implied showed us. IndusInd Bank 10% up. They have talked about their path to improvement from here on. Maybe that's what's exciting the market. Look at a United Spirits. Again, results which were reported and not so great as far as United Spirits is concerned. We talked to you about Dr. Reddy's. That's also showing a first tick. Remember, just the first 2 minutes, so this will change maybe. But that's also showing about a 10% down tick. BPCL is also having a down day. They have also reported results. There is so much actually to cover. We'll try and get through all of it quickly. OFSS, good set of numbers on OFSS. Oracle Financial Service Software 10% up this morning. Sona BLW has new ideas and strategies in store. That's 10% up this morning. It was on our watch list as well. HEG, another good set of numbers, about 3% up. UTI Asset Management we spoke about, also about 4% up. In fact, let me go quickly to Bharth. Another set of news makers that you have on your radar, Parth?
Yeah, so there are three earnings that investors should have on their watch list today. The first one is Oracle Financial Services. The company has reported a very strong set of numbers with their products business up 75% year on year and service business also seeing a growth of 6% year on year. The main metric to really drive up those results was the license and cloud fees that has jumped 5 times year on year. The MD has said that this quarter was an historic one for the company, but there was some negative news as well because the MD has resigned. The CEO and MD of the company has resigned as well. If we talk about the numbers, the net profit saw a growth of 68%, while revenue also saw a growth of 51.3% year on year. Their EBIT grew by 78.9%, while EBIT margin also shot up 920 basis points. The second one is Vari Renewable Technologies. They have an unexecuted order book of 5,300 crores. The company is expanding into transmission and distribution space as well, while they are also pursuing EPC opportunities in the battery energy storage system and data center segments as well. The goal of the company is to have an integrated presence across the entire clean energy value chain. About their results, the results were quite good as well. Net profit saw a growth of 34% and revenue also grew by 53% year on year. EBITDA saw a growth of 47%, while in EBITDA margins there was a slight degrowth of 70 basis points. The last one is UCO Bank, which has seen a strong quarter. Net interest income was up by 17% to reach 2,808 crores. Net profit was up marginally by 8% to reach 656 crores. Net NPA and gross NPA also saw some improvements at 0.25% and 2.08% respectively. Provisions also degrew at 235 crores, while there was a improvement in NIM.
Okay, thank you for that part. Okay, let's go quick and fast and furious. We are 5 minutes into the pre-open session. Shrikant Chauhan with us this morning. Shrikant, very good morning to you. Let's get a nifty call first.
Good morning, everyone. So while looking at the setup of the market, it is very clear that the market is forming lower top, lower bottom series. It has formed lower top around 24,300, and from there we are seeing consistent sell-off in the market. It has broken the level of 24,000, which is negative. Now the 23,800 is the next level to watch out for. This time I am of the view that the market may even break this level while looking at the entire market macros. So below 23,800, in case if we see the market is sustaining, then the chances of hitting 23,500 would turn bright. And because of this fear, I am of the view that in case if there is any rebound because of any reason, then close to 24,000, 24,050, we should look for reducing some long positions. So by and large, we need to be careful in this market because this time the market is on the verge of breaking 23,800.
So then from that perspective also on individual stocks, you're going to be cautious, Shrikant. You're going to wait on the sidelines.
I think large cap stocks are clearly under pressure. HDFC Bank and few other banks, including few other large cap companies, they are clearly under pressure, and we can very clearly see that they can fall further more from here. Larsen is the stock where we should look for creating some short positions because it is still at 3,800 levels. The stock can easily fall to the levels of 36, 36.50 based on its technical formation and the way the news flow is there. So at this level, it's a short with a stop loss at 3,860 for the target of 3,650. But yes, few stocks can do well based on their quarterly numbers because in this result season, most of the time, whenever we have seen any good numbers, we saw some supporting buying activity or some specific support for that particular stock. So in that, we like Eternal, which is around 289, 288 now. In the pre-open session. From here, the stock can move towards the levels of 305 and in the best case scenario, 315. So here we can keep a stop loss at 274, which is yesterday's lowest level. We can keep stop loss at 274 for creating any long positions on Eternal.
Okay, Eternal is the eternal favorite this morning. after yesterday's response to its stock. I want to look at where IndusInd settled and ask Parag Thakkar a view on IndusInd. This is a space that you look at closely. You think Rajiv Anand now poised to execute that turnaround that is being expected from him?
Yeah, gradually I think you will see turnaround, but in my view the core earnings were not that great.
Yeah.
It was led by corporate loans. So NII also, actually if you see adjusted NIM.
And that's where it settled actually.
Yeah.
It settled about 3% down.
And everybody knew that this result will be a good turnaround. So I would say that the stock will consolidate for a while. What Mr. Rajiv Anand is trying to do is to navigate this entire problems and turn around the bank. Now it is set for growth. It is trading at 1x price to book on FY28. So I would say that there will be some little bit of consolidation or correction, and then it will, but not a table thumping buy for me for sure. And just to continue with what Srikanth said, I am also for crude oil at 96, US 10-year at 4.65. You cannot be table thumping for anything.
Nothing, not even a table tapping.
No.
What about your
I'll run away now.
What about your favorite table thumping buys? Your HDFCs, your Bajaj Autos, your ICICI?
So I'll tell you, we have raised cash in the portfolio in last rally. Now
you've raised cash.
Yeah, just 12%, but we have not sold our core holdings like ICICI and Bajaj Autos of the world. But we are a little bit cautious for sure, and we would now like to buy gradually in a staggered manner on dips. Or you can say that if Aadhi Raat ko if something changes for positive, then of course we'll have to buy aggressively. But right now the situation which is happening because of higher crude oil and higher US 10-year and India 10-year also rising, not looking good to buy aggressively.
अगर कुछ change होना है, आधी रात को होगी. The announcement is going to come at night.
So then what we the thing is that if something is going to happen positive, 88% portfolio तो है ही ना. अगर कुछ negative होता है तो we can take advantage of that big fall by deploying that 12% cash.
Okay, so that's with regards to a couple of the banks. Two names, HPCL, BPCL also are in focus now. Two things in terms of the quarterly numbers, and you have crude which is again started to climb. Both accounts are seeing some kind of pressure. Srikanth, what would you do with the OMC space, specifically HPCL or a BPCL?
So there also we can see downward activity. The reason is because in the last up move, they have formed some rectangle sort of formation between their important resistance and support levels. And after hitting those resistance level, now again we can expect downward activity. So at this level, one thing is very clear that we should stay away from taking any bait on these stocks, because in the near term, at least they can fall further. At least 10 to 12% sort of fall is not ruled out from current levels. Currently, HPCL is around 395. The stock can again fall back to the levels of 360, 370, where it has next leg of support. And for BPCL, there also the view is similar. It has spent a lot of time close to 320.25. Now again, the stock can come back to the levels of 290 or maybe 285. So at this level, it is better to stay away. Yes, we can look for taking some bets on upstream companies, that is ONGC, which is currently around 251, 252, and the stock can again come back to the levels of 270, 75.
Okay, very quickly before we go into the opening session, and Varsha, you have a minute. Tell us what's happening with MedPlus. What's the story there?
Overall, the story is, Tamanna, that capex are put on hold. Now, non-core projects has been paused. Food park project has been put on hold. Wellness facility project has been put on hold. Now, this is followed by strong investor feedback that they have got. But the core business investment continues. Pharmacy expansion plans have remained unchanged, and the core growth capex remain, intact. Yesterday we saw the numbers, and the margins were actually in pressure because of the multiple one-off factors, and Q4, if you see, benefited from inventory related gains and some supplier discount as well. But the private label was a miss, which actually impacted the numbers. But now private label recovery is underway according to management, and they want gradual improvement. They are looking to rebuild private label mix steadily, and marketing and consumer outreach is to aid recovery. And the temporary headwinds have actually impacted the overall mix, but the capex that has been put on hold is one of the concerns that investors has.
capex hold is the biggest concern that investors could have. However, your pre-open rates are not indicating that concern right now. 3.5% up move is what you're seeing. Any view, Parag Bhai, in terms of MedPlus? Because we're talking about the earnings where mainly it's the conference call where the capex has been put on hold. Do you think that will be a negative?
No, I don't track this company, so I will not comment on it. But just as one thing that many companies do these things and then with shareholders' feedback they reverse it. Generally, I don't like this trend because you should have thought through before announcing some big capex like this.
Okay, so nothing in terms of fundamental view coming in on that front to that extent. But Srikanth, on the charts, how are you looking at a MedPlus? Because yesterday's session, all of these companies did react on tariffs. Today, are you seeing any further momentum that could pick up? Is there a reversal in place?
No, I think yesterday's news flow and the way the reaction was there in the market for all these companies, it is very clear that somebody must have taken huge call for taking some profit on the table. And we can expect some more weakness in the near future. That's the overall view. Almost all the stocks have given up, and particularly MedPlus, there also we saw deep sell-off. The next level to watch out for would be somewhere close to 550, 600, where it has made a lowest low. So at this level, it is better to stay away from taking any long bet.
Okay, Srikanth, quick word on an OFSS, Oracle Finance.
So there also, I think it is very close to its all-time highest level. And despite despite all these good numbers, I am of the view that at higher levels, again, the stock can come under some pressure because it is just a vertical up move that we saw from the lower levels for hitting the all-time high. So around this level, the stock can spend some more time. In case if there is any higher opening, as pre-open is suggesting, we should look for taking some profit on long positions.
And at any level, will you buy Dr. Reddy's today?
Dr. Reddy, I think very clearly stay away. We are focusing more on Divi's Laboratories as well as Sai Life. I think these are the two stocks where we should concentrate more.
Reddy's in the pre-open session. Is that what's going to happen? Are we going to see Eternal on top and Dr. Reddy's at the bottom of the heat map? Let's see if that's how it pairs out as we open this Thursday morning under a cloud of high Brent prices, rising yields, whether it's US or Indian bonds, and a lot of uncertainty out there. We breached 24,000 yesterday. Can we stay at least above 23,900? That's going to be really the challenge for the markets today. We're opening about 0.5% down on the Nifty. Your broader indices also not looking great. Your Nifty Bank about 0.7% down, and your advanced decline ratio clearly skewed towards the bears this Thursday morning. I want to pull up the heat map and let's see if those predictions of what we saw in the pre-open session actually pan out. At the bottom is Dr. Reddy's Laboratory, about 4% down. It's not an exciting set of numbers. Huge slides over there. There are some brokerages today that say that maybe this could be the last bit of the bad earning patch. This is the trough. H2 could be better. Not too many people seem to be wanting to make that call this morning at least, and it's a semaglutide problem they have, which is maybe ironically shrinking their profits like it's supposed to shrink waistlines. Indigo is down about 1.5%, 96 on the Brent, $96 on the Brent. It will be uncertain for this company. Infosys seeing a bit of pain. Expect some pain in IT after the IBM read through. IBM has reduced its margin guidance to the lower end, and that's not going to look good. Eternal shines bright this morning after the shareholder letter from Dipinder Goyal, after the CEO and the CFO spoke on the conference call. Some estimates say Blinkit now is larger than Swiggy, Instamart and Zepto combined in its orders and happens to be profitable. But how much more can go there? Because apart from an Eternal, everything else is not even 1% up on the Nifty. So it is a dull day with maybe a few sparks here and there. Alex, one will have to look hard to see some real winners, because the overall mood is quite negative for the markets and on the India VIX as well.
Indeed, and I don't know if the ones that we've selected that had good results or other updates will actually show that kind of spark either. Let's pull them up and see where they are. But before we do, let's take a look at the sectoral heat map just to see whether this level of red is replicated. Indeed, it is. You have FMCG as a pack that's doing okay. It was one of the gainers in trade yesterday as well. One of two or three. It's gaining about 0.4%. Nothing too much to speak of. At the bottom end, though, you have the pharma index on account of Dr. Reddy's Laboratories and the kind of pressure that it's bearing down with regard to the pack as a whole. The small cap index down close to 0.8%. The Nifty Bank underperforming as well, down about 0.8%, or rather I should say keeping pace with the benchmark and losing about 0.8% or so. And you have the PSU banking pack that's also down 0.6%. So this is broadly expected, and it's panning out the way we had anticipated as well. But let's take a look at individual counters. And Oracle Financial Services, on the back of its license and cloud fees gaining quite considerably, is up about 2.4%. It might build over the course of the day. Keep an eye on this one. IndusInd Bank turnaround with regard to asset quality, but really I think the question is going to be about when they can bolster their return on asset. They're expected to exit FY27 at a 1% ROA. Is that going to be enough? As things stand right now, the stock is under a tad bit of pressure, down about 3.5%. What about the AMCs? Nippon Life as well as UTI AMC posting numbers. Wow. Okay, Nippon Life seeing cuts of about 4.5 to 4.6%. Decent set of numbers actually. Pull up UTI AMC and see what it's doing right now, and whether or not it's reacting in the same way. We'll have to pull that up and talk about it if we can. Okay, so it's about 1.9% higher at this moment. Decent set of numbers for UTI AMC as well. HEG reacting to numbers. Margins are up and about, and so too Gandhar Oil. In fact, that is the stock of the day this morning. Gandhar Oil seeing a 7x jump in the PAT on a year-on-year basis. UCO Bank is not doing too much, down about 1.4%. HPCL, BPCL both in focus, but let's take a look at how HPCL is reacting. And United Spirits is just about 0.8% higher. Not the best set of numbers, in fact, for this particular counter. In fact, marginal EBITDA miss. Other stocks in focus, let's pull those up very quickly. Sona Comstar is partnered with Denso. How's it reacting? It's down about 2.3%. You have Azad Engineering, you have Inox Green, you have gold financing companies as well. Let's pull those up to see what they're doing. Jewelry stocks as well. Muthoot Finance is not doing too much, so too Manappuram, and I doubt that there's too much action in the gold companies or jewelry companies as well. TVS Motors launched a TVS Raider motorcycle. It's up about 0.5% or so. That goes to say something actually. Satvik Green and Wari Energies are both in focus on account of order wins. Mahindra Lifespace finally is set to expand its Chennai project as a joint venture with Sumitomo Group. It's not doing too much. And Rubicon Research finally has acquired its first US manufacturing facility here. Also, this stock is up about 4% or thereabouts, but mostly along expected lines. A couple of surprises where positive results have not borne out in the reactions.
Absolutely, well spotted there. And you know, Bluestone is another one I want to talk about. Let's just pull up a 5-day chart of Bluestone and see what's happened to that counter post earnings today as well. 4.5% up move is what you're seeing on this one. 32% is the kind of returns that Bluestone has delivered in the last 5 days. Tips Music is another one. In fact, paper companies, JK Paper, we should be watching out for that one. That stock is up nearly 3% in trade, and apart from a JK Paper, you will see Imami Paper also, because both of these counters have risen in that range of 5 to 20% in the last couple of trading sessions or from the lows. So there is that little bit of momentum coming in on those names. On the losing end, you have CIE India, which is down. Acuitas is slightly under pressure. NTPC Green, Carborundum Universal and Tips Music. In fact, we will be speaking to the management of Tips Music as well shortly, but smart moves there. Paper companies on the charts, Kush. Imami Paper, JK Paper, 5 to 20% is what kind of surge that we've seen in the recent past as well. Are you expecting that momentum to continue?
Close to resistance levels. In fact, if you see yesterday's moves on JK paper, there was a big candle, but could not sustain near the high point of the day from around 412, 413 levels. It retraced quite a bit. You're seeing a continuation of that move, but I think resistance will be kicking, also overheating apparent. So more of a hold if you want to ride the momentum, but not a fresh buy. Stop loss is close to the 385 mark.
I do want to ask about the metal pack, and Parag bhai, this is for you because ultimately there is news on commodities, and specifically there is Alcoa that was up in the US yesterday. Yes. What is the read through for Indian metal company?
So basically, I love Hindalco at this price. So if you see, the multiple is just 10 PE. On FY27, I'm seeing. And there are so many triggers coming because of the Oswego plant starting in Novelis. H2 FY27 will be stronger for Novelis. And here in India, aluminium prices are holding up above 3,000. Right now at 3180 LME price is there. Plus there is premium. So India business will report very strong numbers this quarter. And next year, there are the coal mines which are starting. So that will lead to savings of $200 per ton in terms of, so India EBITDA can increase by 3,000 crores. And Novelis, which is at $500 per ton, will gradually move towards $600 per ton over next 2 years. So last year, just to sum it up, last year the EBITDA was 34,000 crores. Market cap is 13,000 crores right now. And in next 3 to 4 years, this EBITDA from 34,000 can go to 60,000 crores. So I think it will become so cheap that at this price, if you just take aluminium at 2,900 also, and which is right now 3,190, then also Hindalco is looking like a mouth-watering thing.
Mouth-watering. Okay, you just talked about how you've raised cash, but you're going to gradually buy. Would this company be on your radar?
Absolutely.
Okay.
Absolutely.
All right. About percent up on Hindalco this morning. Not a markets story, but important to mark what the Prime Minister has just posted out on X, saying, and I quote, "Nothing is more important than the welfare and future of our youth. We have decided to set up fast-track courts to ensure swift and stringent punishment for those involved in paper leaks. Have directed the concerned authorities and officials to take all necessary steps in this regard. This continues our series of steps for safeguarding the interests of students. Those who try to harm the future of our youth will not be spared." Now, this is an important message coming in from the Prime Minister in the wake of protests led by students and other parties asking for action on the NEET paper leak. So, thought we just earmark that important story as well. All right, Shrikant Chauhan with us. Shrikant, just as we wrap up this session of our conversations, just wondering if you want to relook at the Nifty call, because after a pretty sharp drop showing some signs of recovery, or would you wait for a little more data before you take a call?
Yeah, I think while looking at the today's opening and now it is rebounding from the lows, it is again giving weightage to the levels of 23,800. But overall formation is still suggesting us that we need to be careful at higher levels. So yes, we may see the levels of 24,000, 24,050, but there we should again look for reducing some positions. It is better to stay away from taking any position on index for the time being. Yes, there are a number of companies, they are really doing well. So there we can keep a close watch, and there we can get some trades to trade in the short term. But for index, I'm a little bit careful, and I need to see that whether the market is forming any reversal formation or not, which looks difficult at this point of time.
Okay. All right. On that note, thanks so much, Shrikant, as well as Kush and Parag bhai, for joining us today and for speaking to us. Always a pleasure. All right, markets have rebounded from the low point of the day. Let's see if that continues through the session, and we're back above 23,900, at least for now, with 0.25% lower as things stand right now. We're joined this morning by Vikas Khemani, who's founder and CIO of Carnelian Asset Managers and Advisors. Vikas, always a pleasure having you on the program, and thanks so much for taking the time. Good morning to you. What is the mood as things stand right now? Because at least this week, it seems like things have taken a bit of a slide to the worst, at least at the macro level, where you have crude once again above $95 to the barrel, and that's never good news for us. But hopefully this dissipates like it has in the past. What's your mood right now?
Absolutely, these are the kind of things which you can't control, so there's nothing much you can do. We also know that they will not be permanent. Now, these kind of things do bring short-term volatility in the market. So every time such moves happen, I see more from the point of view it's a buying opportunity, because the good news is that the underlying fundamental economic factors of corporate India, of Indian economy, are fairly robust. We have seen all numbers are favorable, except this one lingering factor, which is the oil price, right? And as and when that settles down, we saw in the past when it settled down, it went down to $70, how markets rebound. And but unfortunately, the conflict continues, and every time we feel that it's over or it's getting over, it just resurfaces. So these kind of things do tend to last. We saw similar kind of situation in Ukraine war situation also. Ukraine war continued, but as the oil price settled down, and supply chain opened up, markets moved on. So I see this also happening. Now it can be 1 month here and there, but in my opinion, next couple of months, it should be behind us.
Okay, Vikas, we always love speaking about your take on the markets, but today we've called you also to congratulate you and look at a new exciting venture in your journey where you're foraying into the mutual fund space and the fund management space, really. Tell us more.
Thank you very much. Of course, it's a new chapter for us, and thanks to SEBI, we've got all approvals in time and very very fast approvals we got. And idea is to see we built this firm over last 7 years with a lot of hard work, and we have catered to a very niche segment of the market, which is HNIs and family offices. And our performance has beaten all benchmarks. We've seen how over the years, we have delivered between 23 to 32% return, or with alpha of 9 to 15% per annum. So we feel that our approach has really stood test of time throughout. A disciplined approach of investing. Can we give access to that? To a wider set of investors, retail investors, and which I think is quite possible. And a lot of our partners have been requesting for this quite some time. So we are quite excited about it. Of course, it's a long journey. It's a new chapter. You have to see everything, differently. But we are very excited about it, and I just hope that we live up to the trust of our thousands of investors.
I'm tempted to ask you, because it's a crowded space. A lot of people are already there. How do you think that you will stand out? What is going to be your edge?
I think it's a good question. Everybody's asking that. And I think, again, I would say in investing, your edge is your investing philosophy, your style, your discipline, and eventually the delivery, right? So what we have done over the years, like we have had, if anybody is watching us very carefully, we have delivered superior return without taking any kind of undue risk, stupid risk, or we've not, we've done investing in a very, very high quality manner, right? Now, in our investing, one mutual fund versus another mutual fund, given there's very little scope for innovation, right? But fact that the biggest value you can bring is your performance. So we have a great track record of delivering performance over 7 years to our investors. We hope that we are able to replicate the same or better over the years and provide that service to others. Of course, we will not be in a hurry to, we are not chasing any AUM, we are not chasing anything. We are just, doing how a business should be built on a long-term basis. We are in this game for next 1 to 2 decades. So it does not matter to us what happens in the shorter term. So we will take the same approach to building businesses. And I am quite sure India is a very large market. It's a very large investor base. We are not looking to have some millions of unit holders at this point in time. So I'm sure we will find set of investors who has been watching us, and and once we build a base, and then eventually, of course, if we don't perform, then we are just like anybody else. But if we perform, then I'm sure we will also stand out.
Mani, Hiral, first up, congratulations as well. Where are you seeing the larger opportunity? Because you're talking about, and when you talk about mutual funds, let's talk about the next 1 decade. Is it going to be offering both active and passive strategies, number one? And two, what is that category that you would want to choose to start off with, just to get a perspective around it?
Absolutely. And if I can, just probably build on a previous question as well. See, also, if you see mutual fund industry, first 25 years, when the mutual fund concept was, not there new and it was coming up, you needed a lot of institutions owned platforms. Whether ICICI Bank or HDFC Bank, all those came and built. Concept was, not there new and it was coming up. You needed a lot of institutions owned platforms. whether ICICI Bank or HDFC Bank, all those came and built credibility. And the investor did not know what it is, right? So you need a lot of credible platforms to build this business, and which has happened in last, 2.5 decades. I feel that in times to come, you will find over next 1 decade or so, a trend where a lot of investment professional-led, founder-led platforms who will come and kind of deliver a lot more value to the unit holders, which has been done. So I think you will find that shift happening. And we have already seen a few people successfully doing that, and I think that trend only will remain there. Of course, test of thing will be how well one is able to deliver, how one is more importantly carry out governance, because in this business, according to me, the governance is the most important aspect. You cannot compromise on that when you're managing third party money. So people who are able to deliver and also deliver governance along with performance would be the key winner from the category of people who are becoming founder-led platforms, because governance is delivered by the institutional-led platform. I think we can have a good chance of delivering both governance as well as performance in a superior manner over the decades, and that will build out players like us.
Because I just want to remind you of Hiral's question, which is which categories of active will you look to get into? Because those that have gotten in over the last 1 year have had a pretty standard template to open in the diversified space first and then drill down.
So we will come to that, I think, when we get to the product launch, which I think is still about, in my opinion, a month and a half away. We will be revealing those cards very soon. Right now, a lot of strategic thinking is happening, and so we will work out on that. But we will definitely be active, because in our previous conversation, I have said multiple times that I'm a big proponent of active investing. I think in India, like market, there's a huge scope for alpha generation, at least for next 1 decade. And that money should not be left on table. Like I just said, our alpha has been in last 7 years, depending on product to product, 9% to 15%. Now, if you can generate that kind of alpha, it's a lot of money leaving on table for saving. People invest into passive only for saving cost of manufacturing, which anyway is very cheap in India. So in my opinion, there's a great case of active, and we will definitely do active. We will not be right now, at least next few years, to think about on any of those things. That's the broader strategy. Now, which product to do, we will definitely, share as and when once we have decided on that.
Interesting. So it's going to be on the active side. We will be awaiting all the details as well, Vikas. But congratulations once again. And it's going to be an interesting one to watch out for. So that's with regards to where Vikas Khemani getting into the mutual fund space with the SEBI approval coming in there. But moving on, Dr. Reddy's. Now, clearly the margins have been a major issue. Semaglutide has added to the pain, and that stock is down nearly 3%. In fact, my colleague Varsha did speak to the management. Let's quickly listen in to a slice of that conversation.
Hello and welcome to NDTV Profit. My name is Varsha. Well, Dr. Reddy's lab is in focus on the back of Q1 FY27 numbers. Just for the benefit of viewers, over here the weak numbers that we saw was because of US revenue, which fell 35% year on year. This was due to sharp drop in Revlimid contribution, but company is actually now transitioning beyond Revlimid. About the India business, though India business here, this was due to sharp drop in Revlimid contribution, but company is actually now transitioning beyond Revlimid. About the India business, though India business grew strongly over almost 17 quoted India growth, price hikes and higher volumes aided to growth. But to speak more about numbers, how was Q1 and what lies ahead when it comes to further quarters, and to give us a medium term outlook, to talk to us about that, we are here joined by Mr. M.V. Ramana, who's Chief Executive Officer, Global Generics at Dr. Reddy's. Sir, welcome at NDTV Profit. Pleasure to have you.
Thank you.
We all know the reason why US revenue was down 35%. Even there was a 240 crore hit due to semaglutide API issues as well. Now, considering all this, for FY27, you were expecting almost 20% plus EBITDA margin. Are you still on track, considering the issues that we had in Q1?
So, yes, so we are confident in terms of how we are looking at growth. What you would have seen in terms of the numbers that were released, On the base business, there's a double-digit growth, and there's a double-digit growth across markets, whether it is US, whether it is Europe, whether it is emerging markets as well as India. And we have been focusing on growing the branded part of the business. And today, if you see India, emerging markets, and NRT is more than 50% of the revenues, and all of them have had good growth in quarter 1. And we believe that based on the current momentum and the new products that we're expected to launch over the next couple of quarters, followed by both the moves on the consumer health as well as innovative assets, will continue to grow. It is true that we have had an impact this quarter of the semaglutide write-offs, and also some impact because of the increase in the solvent prices because of the Middle East crisis. But overall, in terms of the base business growth, we're confident on how we expect to move forward in the rest of the year.
Understood. And sir, so considering or you have taken a 240 crore hit, this is of course due to semaglutide API issue. Now, is the problem now fully behind, or is there still risk of further write-offs and supply disruptions?
So when it comes to the write-offs, we have taken all of the write-offs in the quarter 1. And when it comes to this particular product, we have understood the root cause on why we have had this issue, and the scientists are working together on the countermeasures. On why we have had this issue, and the scientists are working together on the countermeasures. The way we would get to, and then we test the product again. Should all of this go in the right direction, then we should start having the product back in quarter 3.
Understood. And sir, have there been any customer losses or market share losses in Canada because of the supply disruption?
We have not sold the product now for the last few weeks, and obviously both in India and Canada. And we are trying to see how fast we can get back in India through partners. And for Canada, we would have to wait for us to come back in quarter 3 once the product is meeting these specifications.
Understood. And sir, North America revenue, we saw the fall of around 35%, of course, because of Revlimid normalization. What replaces the lost profit pool over the next 12 to 14 months?
So when it comes to the US, what you would also see that we have had nice launches in the quarter 1. We've launched bosutinib, where we got for 400 mg a 180-day exclusivity. We've launched a complex generics in the form of nintedanib, and we have several other launches that are coming by. So US, you would see a good number of launches that would help in growing the base business.
Understood. And
so it's the new launches that the management is watching out for, in spite of that downer on two of the aspects. But moving on, JSW Energy, a solid Q1 that the company has posted while also completing a record quarterly capacity addition. My colleague Nisha had an insightful conversation with Sharad Mahendra, Joint MD and CEO of the company. Let's listen in.
All right, let's take it across to an important set of numbers, JSW Energy, and Sharad Mahendra joins in to give us more insights into that. Pleasure to speak to you on NDTV Profit. My first question, of course, the net profit of the company for the quarter has been down 36%, and this is because of the higher cost on finance as well as depreciation. Can you give us more sense on this particular aspect, and how do you see the trajectory for the rest of the fiscal when we talk about the profits?
Yeah, thanks for inviting me here. Yes, we see when any company which is in a growth phase and the amount of capacity addition, when we come year on year, when we are comparing the interest which has gone up by almost 6% in terms of the value terms, additional interest outflow of almost 200 plus crores, and the depreciation when we capitalize. These are the two factors. And this is something, if you see that when the amount of capacity additions, what we have done, if we compare in the current year, in quarter 1 only, we have added almost 873 megawatt of capacities. We have to remember. So this has also resulted in a higher interest outflow. But more important in terms of depreciation also when we capitalize will increase. More important how the cash profit is there. That is important, which is a healthy in excess of 1,400 crores of cash profit, which is there, which enables to continue with the growth momentum.
That's right. In fact, in terms of profits, it may have taken a dip because of the expansion that you really stated, Sharad Mahindra. But when we talk about the EBITDA margins, it's at 55.17% versus the estimate, which was way lower. So you have really beat the expectations on the margin front. Can you give us a picture in terms of the operational performance? What is really working? What were the levers which boosted the margins for you? And is that also sustainable in this quarter?
Yes, one is that when we see the hydro business, we all know that because of the extremely low monsoon and the rainfall which is there, the hydrology has been, as a country, the hydrology has been extremely poor and the hydro generation has seen a negative. But for us, if you see one, that the Kutehr, which was not available in Q1, plus the early commissioning of the Tidong asset, which we acquired in the month of January 26, and we started the completion work, and we did it in a record pace. So this is where, which was earlier estimated to be commissioned in October 26, we have commissioned in the Q1, thus giving us a significant advantage of the entire hydro season and the hydrology season is the advantage we are getting. These are the incremental upsides going forward for the entire full year in terms of generations and in terms of the EBITDA and the profitability. When we come to the RE business, our generation, incremental generation, quarter on quarter, year on year, if I compare, we have a higher generation of 11% through the wind and solar because of the incremental capacities. This is despite the lower wind generation and the CUF which the country has experienced. So incremental capacity which we had added during this period has given us the advantage. Thermal, our generation has been lower by 5% as compared to last year Q1. This is primarily because of our Mahanadi plant, which experienced a force majeure outage because of the severe thunderstorm and the high wind speeds. When the outside the plant, the evacuation infrastructure got disrupted due to tower collapse. But that is something wherein it's a force majeure. The plant availability is there, so we have our fixed cost is protected in that.
Yes.
But that led to a lower generation in Q1.
All right, but that also got offset by also beating the timeline when it comes to the other areas of the business, especially coming in from renewable. Now, also must to highlight that this is also the highest ever quarterly organic capacity addition that has been done by the company in terms of the capacity expansion when we talk about the renewable space, especially solar, wind, as well as hybrid. When we talk about the target amount of capacity expansion, how are we stacked up and are we on track? Of course, in some areas we have outbeat the timelines, but how is the rest of the year looking in terms of meeting the targets?
Yes, when we compare with last year, when we saw that the inorganic capacity addition, greenfield capacity addition, was almost 1,250 odd megawatt we did in full year. As we are talking in first 100 days, including the 225 megawatt commissioning, which we have done in the month of July, we have already commissioned 1.1 gigawatt of fresh capacity. And we are well on track, and we are absolutely certain that in H1, including the balance period of Q2, we'll be crossing 1.5, maybe 1.5 to 1.6 gigawatt capacity addition we are going to see in first half of the year, which will be more than what we did in last full year. And this year, full year, we are absolutely certain of adding 3 gigawatt of new capacities during the full year, which will be all in the RE space.
All right, so that you are on track with the 3 gigawatt of addition in capacity. But when we talk about the energy storage expansion, and where are we? Because you also in this particular quarter, and it's actually falling in the present quarter that we are talking about, you've also got one BESS order, the first one that you have really clocked in, worth over 400 crore rupees. Give us a sense on this space as well.
Yeah. See, this order, when we are talking, this is from our Pune battery assembly line plant, which we are selling to the third party. So this is related to our manufacturing vertical, which is the battery assembly plant, storage plant, which we have commissioned in the month of March 26. This is to an outside party, which are very attractive margins, which we have secured the orders and will be supplying during the year as per the schedule. So this is one. In terms of our own battery energy storage capacities, we are working right now in two large projects, three large projects in fact. One is in the state of Kerala, which we have signed the power purchase agreement, and two agreements what we have signed in the state of Rajasthan. Those work have already started, and these capacities will be added during the current year.
Yes.
In addition to a part capacity addition and under the captive space of our group captive will be adding.
Right. And my final question, you just said that this particular order on BESS is high margin. So first of all, the financial impact of that, when does it kick in on your balance sheet? Will it be this quarter in Q2? And how much impact will it make? And the second important bit, if you can highlight, in terms of net debt, it stands at 61,322 crore rupees. With the expansion project, the finance cost also eating into the profits of the company. How do you give a guidance on the picture on finance cost, deleveraging, and also margin expansion because of the new projects?
Yeah, one is first the battery energy storage plant, which we have got, which we have just announced. This will kick in marginally, maybe in Q2, but significant portion will be the supplies. Really, it will start impacting and hitting on our balance sheet will be from Q3 onwards. This is one. So, and that is as per the plan what we have made.
Sure.
Second is in terms of debt, if you see our net debt to EBITDA, which was close to about 6 when we ended the year FY26 with the fundraisers and this is now in the range of 5.53. And if we remove the debt related to the construction work in progress, means net debt to EBITDA for the operational assets, it has come to a comfortable level of 4.95. So which gives us a comfortable headroom to continue with our growth plan and reaching 30 gigawatt by FY30 and current year also 3 gigawatt capacity addition. Regarding the interest cost, if we talk of in terms of the percentage interest cost on the debt of 61,000, it is at 8.36 level, which is the same which was the interest cost at the end of last year, FY26, at same 8.36.
Right.
So these are the levels which are there in interest. Net debt to EBITDA levels will remain in these ranges, what we have already achieved in Q1, because the fundraise, what we have done in Q1 has given us a headroom to reduce our total net debt, if you see, from 65,300 odd, which was at the end of FY26,
yes,
to end of Q1 at 61,200 odd crores.
All right, so that's the management of JSW Energy. The stock has clearly made it off the low point of the day, but it's more or less hum-hoing at 0.2% higher at this moment, 563 on the chart. Let's head across to the next management conversation or corporate conversation rather on the back of earnings. And this is Tips Music. You heard their music. Now let's talk about their financials. And the stock is up as much as 9.5%. The question is why? And what do they intend to do in the rest of FY27 and beyond? Mahima joining in to set up the conversation before we go to the management. Mahima?
Right, Alex. So the stock, as we can see, is hitting the high notes, right? And that's on the back of a strong Q1 earnings that they've posted, because overall the revenue has seen a good jump of 21% on year-on-year basis, and this is driven by both their digital and non-digital growth. The content investment, of course, has surged quite a bit, almost 90% year-on-year basis, and that's caused the pressure in terms of where profitability goes and also margins. But overall, I think the key development in terms of corporate action is going to be that they're going to consider a buyback on 5th of August. The board meeting is going to be on 5th of August. The YouTube subscriber base has also gone up now to around 158.3 million. In terms of numbers, of course, like I said, revenue is up 21%, EBITDA down 5%, margins at 50.3% versus that of 64.2% earlier, and net profit was down by about 4%. In terms of operation highlights, I think they released 73 songs during the quarter, and overall healthy contribution has happened from both digital and non-digital business. In terms of management commentary, I think they've said that the company has increased content investment to strengthen future catalog. That was the key takeaway for me. So this is the overall view of how Q1 has fared, and of course we're seeing a good uptick in the counter today.
Counter is seeing good uptick, but what is the outlook and what is the profitability outlook? Kumar S. Taurani, Chairman and MD of Tips Music, with us this morning. Mr. Taurani, thank you so much for your time to us here at NDTV Profit. I want to actually ask about your content investment, which is surging 90%, and of course it's had its impact on your profitability numbers, on your EBITDA and your margins, etc. But how are you deploying this money for content investment? What are you picking? Because this is a very tricky space, isn't it?
Actually, it's not. For us, actually, we have always said to our investors and people like you, we will invest around 22 to 25% in our content. Whatever our top line will be, revenue will be, we'll invest 20 to 25%. See, one movie of this Hai Jawani To Ishq Hona Hai, a very expensive movie, it was supposed to release last quarter. I already said last quarter was, we had a very bumper profit because this movie was not come. And that has shifted to this quarter. So that's why we have a content increased. So our budget for content was increased this year. And please remember, we write off entire content cost in the same quarter. So that also we are taking hit. So,
Mr. Taurani, if you can just explain this, which movie was this? And because, if I understand correctly, because this movie is releasing this quarter, that's why you've taken that content hit this quarter. That means next quarter, this will not be the case.
Yes, absolutely. I'm saying that. That was a Hai Jawani To Ishq Hona Hai, was supposed to release in March, April, but we shifted to June. So we can't release so early music. For music, we need 6 to 8 weeks before we release our music. So that's why we have seen this content suddenly going up.
Where are you looking at margins going back to for quarter 2? Are you looking at going back to your 64% odd? Are you looking at EBITDA coming back as well once this one movie's write-off goes out of the window? Or do you have a quarter 2? Are you looking at going back to your 64% odd? Are you looking at EBITDA coming back as well once this one movie's write-off goes out of the window? Or do you have another big one next quarter?
No, big ones will come and go. But as a yearly kind of a company, so this year our projection is 20% top line and 20% PAT. So this will remain.
You know, another thing that I'm finding interesting and I want to understand is, what is your revenue breakup now on digital and non-digital?
Around 75% is digital, 1-2% here and there it fluctuates, and around 25% is non-digital.
How does this work? If you can just give us a little more detail, because you mentioned in your presentation also your YouTube subscribers, etc. So what are the sources of these digital income streams?
So in digital, there are 3 major things: YouTube, Spotify, and Instagram. And in non-digital, there is a publishing, and then there is a public performance and broadcasting. These are 3-4 major things.
And if you can give me that breakup on the digital, because you're saying digital is 75% of the revenue. You mentioned YouTube, Instagram, and Spotify. What is the breakup there?
Around, I think, if I calculate a whole, around 45% is YouTube, and balance 25% will be Spotify and Instagram, and sorry, 32% will be that, and balance 3-4% other small apps and all those things.
I just want to understand. So Mr. Taurani, the streaming service and essentially the revenue model for music has changed over the last couple of decades, right? It's moved from that royalty model to the streaming model, and so therefore your Spotify becomes more important to you going forward as well. But I'm just wondering about Apple Music. Do you not get a revenue stream from there?
See, actually, yes, we are getting revenues from three things. One is a subscription. Whatever subscriber pay money to the Spotify, we will get share. And then there is the advertising model, and there is a per stream also, where there is no advertising or no subscription. Still, we get monies from that.
Okay. Mr. Taurani, good morning. Hirala, you indicated that 90 to 100 odd crores is what that content spend could look like in terms of FY27, right? Now, on the back of the release pipeline that you have, what will that convert to in terms of profitability and margins for FY27?
See, we can't calculate that individually. See, whatever in content we invest, we tell people like you, we will recover those money in next 4 to 5 years. So actually, majorly 15% we collect from new releases, and you can say 85% is the catalog earnings.
And Mr. Taurani, my last question is, I think in the month of August, you have a board meeting to consider a buyback. What's the rationale with regards to where the buyback goes?
We have always done buybacks, and we are the we do many buybacks previously also. We feel that small shareholders must get some exit route and must have some profitability. Now government is coming with this market buyback. So we are waiting for the 1st August, what government is announcing. Accordingly, we will take a call.
Taurani, just checking, and of course buybacks are a great way to reward small shareholders, but will the promoters be participating in the buyback?
No, promoters won't participating in this. Also, let me tell you, whatever we do profits in our company, we give 100% dividend or a buyback in the next year. See, in 25 we did around 166 was our bottom line. We paid entire money to our shareholders in 26. So this year also we are going to distribute around 217 CR this year. That will include dividend and buyback.
I think that's very interesting, and that takes me to the long-term earnings profile of the company. Is the revenue mix then shifting towards subscription versus advertising? Because if the shareholders are being rewarded, that mix and that shift becomes very interesting to see now.
See, this subscription business, it will be very, very huge. Spotify is projected in next 8 to 10 years, they will have around 15 crore subscribers. And if they are paying 100 rupees a month, you can imagine what kind of money we are talking here. So I think this music business only will, maybe 1 or 2 years, we will grow 20%, 15%, 20%, 25%. But then suddenly there will be a big jumps will come. The way there was a big jump came in TV industry, there suddenly their distribution model has given them so much money. So I think the subscription and that small, that short content, plus this public performance, you have seen that Diljit Dosanjh shows happen. So these three things, I feel will be a big earners for entire music business.
Slightly broader question, Mr. Taurani, because you've spoken about so much. In your space, what is the impact you're seeing of AI generation of music? Because a lot of individual content creators are going out there, creating music themselves. They don't have to pay you any licensing. You're not the only one in the game, right? There was a time when you had to be with a label to create music. Now anyone can do whatever they want, and there's a huge amount of AI generation. Do you see this as long-term threats?
No. These are not threats. In India, we have been protected by law. Nobody can touch my content. My content is my exclusive property. So nobody will touch, and we are talking to government.
I'm not talking about IP. I'm not talking about IP. I'm talking about the flood of content that is coming.
No, actually, Spotify is removing so many. I think in millions of content they have removed. So nobody is interested. Which content? Maybe in say in 1 crore, one content can be successful. It's no threat. And whatever songs belongs to me for last 40 years, we have collected or we have purchased, we have acquired, we have created. It's exclusive property. And see, please understand, whatever music you like that for forever, for lifetime. And you will include new releases, new song. Again, you like this year, from all the songs you like, 1 or 2 songs, you will add to your list. So you'll keep repeating and listening to those songs. So we have, touch wood, we are in a safe and best business, I feel.
Okay, thank you so much for speaking with us. That is Mr. Taurani, Kumar S. Taurani of Tips Music, speaking with us on their quarterly results. But an interesting business to look at, because all these creative fields are looking at new distribution. It was quite interesting for me to understand that so much of their revenue is coming from digital streams, and YouTube is a bulk of it.
Yep. And they have been expanding, and I think, that's what Alex was pointing towards, right? Your Apple Music, your Spotify. These are the channels that everyone is utilizing.
YouTube will have the lion's share.
And the third one, correct, exactly. Yeah. Just adding on to that. So I think that's where the revenues will come in from, and subscription is what they're betting big on. So that's the story there now.
Yeah, okay, interesting space. All right, let's talk about Indo MIM. The IPO opens for subscription today with a total issue size of over 3,800 crores. But what's interesting about this is the pedigree of its anchor book. A lot of top investors there in that list. Parth joining in for a SWOT analysis. Parth, tell us about Indo MIM.
Yeah, so Indo MIM IPO has opened today, and the IPO will be closing on 27th of July. The price band has been set between 461 rupees to 485 rupees per share, with a lot size of 30 shares. The total issue size is somewhere around 3,800 crores, out of which approximately 500 crores is towards the fresh issue, and 3,300 crores is an OFS component. Now, from the 500 crores fresh issue, around 400 crores will be going towards the repayment of borrowings by the company. If we understand a little bit about the company first, they are a global precision engineering components manufacturer, and they use that metal injection molding technology. They have 15 facilities across various countries like India, US, UK and Mexico. They make over 6,400 products and serve more than 1,000 customers in FY26. Now let's do a SWOT analysis. Coming to the strengths of the company first, they have the world's largest installed MIM manufacturing capacity, and they are diversified across various sectors as well. The sectors include automotive, defense, medical, consumer and aerospace as well. Coming to the weaknesses of the company, it is an export oriented business, so it is definitely exposed to those global demand fluctuations. Also, the EBITDA margins of the company is something you need to watch out for, because they have declined to 25.5% in FY26 versus 28% in FY25. Now coming to the opportunities, we all know that there is a rising demand of these precision components in high value industries. So that is a big opportunity for the company. Another one is that they are expanding into advanced manufacturing and 3D metal printing as well. So if they are able to scale that up, definitely it will help in their margins as well. And lastly, if we talk about the threats, then customer concentration and slowdown in end user industries will remain a concern for the company. Also, the raw material price volatility and global disruptions, because we just spoke that they are exposed to that. They are exposed to a lot of countries. So if there is any global disruptions that come in, it could affect the company. So that's an entire outlook about the IPO as well as SWOT analysis of Indo MIM.
Got it. Okay. Thanks, Parth, for that. And we have to slip in a very quick break. We'll be back on the other side to talk about markets and a lot more. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
Hey,
लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV. India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen. What fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV.
Welcome back. You're watching India Market Open. We're off the low point of the day, heading towards 23,950. Actually, we've crossed that mark in trade today. Pull up the intraday chart. We're significantly off the low point of the day and possibly heading towards the 24,000 mark. We'll see over the course of the morning whether that continues or whether we lose a little bit of ground. Of course, Dr. Reddy's Laboratories, one of the stocks that was under tremendous pressure today, is off the low point of the day, considerably so. In fact, it's gained as much as 4% from the low point. But one stock that continues to remain under pressure from the banking pack, and despite an improvement in asset quality, is IndusInd Bank. And that stock is down about 5.3%. It follows a couple of downgrades by brokerages, both Kotak as well as CLSA coming in and downgrading their rating on the stock. Let's find out what they're saying and why they're negative on the stock. Let's go across to Somit to find out. Somit?
Basically, the run-up that we have seen in the share price of IndusInd Bank in the last 1 month is the major reason behind this downgrade. None of the brokerages are saying that the earnings are not great for the first quarter of FY27, but it's only the run-up which has led to this downgrade. So first downgrade is by Kotak Securities, where they have downgraded the rating to sell from reduce, but have hiked the target price to 850 from 800. Now they're saying that the operational progress is meeting the elevated expectations of the street, lower provisioning is driving the strong earnings growth, and they're also seeing gradual improvement over a lower base, where the guidance has been maintained, but it's the valuations that are just running ahead of the fundamentals, the major reason behind the downgrade by Kotak Securities. When it comes to CLSA, they have downgraded the rating to underperform from hold. They have also hiked the target price to 925 from 850. They are saying that a better quarter, but still a long way from getting a return on asset of close to around 1%. They are saying that the NIIs are in line, asset quality has improved and has surprised positively. Loan growth has also been strong. They have also hiked their EPS estimates over FY27 to FY29 by around 1 to 3%, but they have downgraded the rating just because of the 17% run-up that we have seen in the share prices of IndusInd Bank in the last 1 month.
So thank you so much for that, and that's the reason why 5% downtick coming in there. Vaibhav Sanghvi, CEO Ask Head Solutions, also joins us to have a discussion in terms of what's happening with the markets right now. Vaibhav, welcome to the show. Always a pleasure to speak to you. You know, before we talk something broad-based, let's pick it up from an IndusInd Bank, from where Somit left it. And let's look at the entire space. You had a HDFC Bank as well. You have ICICI Bank, which has outperformed versus what the others have done in the private banking space. What is your view in terms of the private banks' earnings so far versus whatever the PSU banks have reported? I know SBI is yet to come, but how are you looking at the setup there?
Thank you very much for having me on the show. And, with respect to your question in terms of the private banks, let's take a step back and see for the last 2 months when, from the steps which the government had taken in terms of the FCNR, ECB, and the GSEC reforms. I think we had a very positive sentiment around the overall private banks. In addition to that, if you see the pre-quarterly updates, I think those were factored in pretty much well by the street in assumption that the performance has kind of started to improve. The only disappointment which we've seen in some of those banks is basically the pressure or larger pressure than expected in terms of the net interest margins. While the other parameters continue to be stable and doing well, I think street somehow has got a little bit disappointed on that. And to add to it is basically the Middle East concerns which are coming about in terms of the oil prices back again, which is kind of getting into an environment where it is slightly risk off, and because of which we are seeing some amount of pressure on all those names as well.
Vaibhav, hi, morning. Alex here. So I just want to take that forward. So pressure on NIMs in the first quarter, okay, understandable. A couple have actually performed better than anticipated, and I guess those are the ones that are getting rewarded. But going forward as well, even if I look at an IndusInd Bank, if I look at an Axis Bank, if I look at maybe even a Kotak to a certain extent, the corporate lending has gone up, and that's understandable because from the perspective or the lens of the corporate, if they're looking at the bond market where they were raising funds, yields have gone up. So comparatively, bank funding is cheaper. And so we could well see that continue through FY27. So the point is that you could see further erosion in NIMs going forward, Vaibhav. So how does that change your view on the space?
See, of course, the street is starting to discount some of it for sure, but I would only refrain from coming at that conclusion at this point in time. The reason being that most of the private banks would be the beneficiaries of the FCNR deposits as well. So what not only that will probably improve their credit deposit ratio, but at the same time would be marginal cheaper in terms of the cost of borrowing. Now, also, those amount of deposits will be between 3 to 5 years, which is pretty steady and long-term money as well. So maybe I think I will just refrain from that view, at least for a quarter for now, and then probably will round up, post the next quarter results to see where we are. So let's wait and watch. I think this pressure, in our view, is a little transitory. I think it will start recovering from a quarter, after this.
Vaibhav, overall, if you have to look at what's happening in the markets, do you think that the story or the narrative for the Indian markets is actually shifting from a capex-driven narrative to a consumption-driven narrative, and that's what the street is watching out for?
See, I think in the shorter term or extremely shorter term, I think depending upon the price movement and the valuations, somewhere you may see those kind of rotation probably happening. But from when you look at from a medium to longer term perspective, I think manufacturing as a theme is likely to continue to do well over the next 3 to 5 years. Looking at what the government has been in terms of supporting the whole sector, in terms of various reforms and measures, my sense is basically one should definitely look at the whole industrial space or capex driven themes at every declines. So I'm not saying that it may not probably correct in a very shorter term and depending upon the overall market sentiment, but from a medium term to longer term perspective, I think the story is extremely robust, and we are quite bullish on the overall theme from a longer term standpoint.
It's a pretty wide space though, Vaibhav, and others before you have highlighted that those manufacturers that are also focused on expanding their global or export footprint should be preferred. But how do you slice this space, and where does your preference lie?
So, Alex, I think very interesting question. I think two parts to it. One, of course, as you mentioned, the exports, as a theme for sure. But at the same time, also, what we are also looking for from a perspective of a supply chain in the data center theme. We all know that the data centers, which are currently close to about 1.5, 1.7 gigawatts, is likely to go more than 10 gigawatts within 4 to 5 years. And that is the kind of capex which is likely to happen, which is anywhere between 80 to 90 billion dollars. Then my sense is the whole supply chain within that, including switch gears, electrical equipments, probably diesel gensets, utilities, chillers, the whole space of that industrials is likely to do well, in the medium term. So, yes, exports is a theme, but accompanied by all of these, including the transformers, and is something which we really like from a manufacturing standpoint.
Weber, you're talking about the positivity that you have, the segments, which you're betting big on. However, if you have to look at the next 2 years, would you choose between earnings growth or valuation re-rating? What would be the key drivers to get returns in the next 2 years?
So in our view, earnings growth is paramount. And when you see earnings growth, then valuation re-rating kind of follows in some sense. So we will be focused on the earnings growth, which are the companies or sectors which are likely to deliver that, along with the overall sectoral tailwinds as well. So that would be our focus for the next 2 years at least.
So let me ask you this. If you were to, at this moment, construct a portfolio, Vaibhav, or adjust the weights in your portfolio, what is the kind of weightage that you would give to each of the things that we've spoken about so far? So we've discussed financials, we've discussed industrials, we've discussed consumption as well. So, and then let's throw in maybe an IT, which has been something that everybody's been confused about for good reason. And some people have gone so far as to say that they will reduce their weight to practically zero. So how do you look at weightage as things stand right now?
See, Alex, I think we are, from our perspective, we are a long short fund, right? And we have the liberty of choosing the sectors both ways in some sense. So when we talk about our outperformers sectors, as you rightly mentioned, financials definitely will occupy some amount of space. Honestly, we were not very keen a couple of months back, but what the government has done in terms of those measures, my sense is once the Middle East situation kind of solves a little bit, then you will see financials, a lot of interest coming back into the financials. So we are keen, and fundamentally we do like that space. In addition to the industrials theme, which we mentioned, lastly, I think the CDMO space is something we additionally like from an overall medium to longer term perspective. Why? On the negative side, I think what we are avoiding currently very clearly is the global commodity space, which is metals, and to some extent, IT space as well. Lastly, we are on watch out for consumers, especially to frame a very concrete view, depending upon how the progress on monsoons is happening in the light of El Nino as well. So that is something which is on a wait and watch mode, but otherwise, I think that would be broadly a construction of our portfolios.
Vaibhav, you mentioned about industrials as well. How big a portion of that is the data center, ancillary part of it playing out, because you're talking about cooling equipments, transformers, utilities. Is that a space that you're going big on? And two, pharma as a sector, because you've already spoken about tariffs, but no one really knows whether that is going to have a material impact. And you have been fairly positive when it comes to the CDMO space. Does anything change on that front?
No, of course. Taking the second question first, I think the CDMO space, I think we are more enthused from the medium to longer term kind of opportunity in the wake of Biosecure Act. And you are seeing, on ground incremental RFQs kind of on a continuous basis kind of coming about. So we do like that space. The companies are doing capex, are only reflecting the confidence of the upcoming growth, coming within them. So that's something which we like. And when we talk about the industrials and the data center theme, I think a large part of my industrial exposures is within this data center theme, right from switch gear equipment, electrical equipments, diesel gensets, utilities, and so on and so forth. While we always keep on looking at the right time of entry within these sub themes, But overall, I think we are fairly positive on the overall fundamentals.
Okay. How much of your view, Vaibhav, will change based on macro at this moment? And I know that for a bottom-up stock investor, peripheral knowledge of macro, and some people even scoff at it. How much are you talking about macro? But let's face it, ultimately, if crude oil is at $95 to the barrel, that is ultimately going to bleed through into inflation, and then consumption has a bearing on consumption. So how much of your direction or your decision making will depend on macro?
Of course, I think a lot of importance is something which we give or weightage we will give to the overall macros as well. Now, over the last 2 years, in some way and fashion, while the companies have continued to deliver, because of what's happening from a macro standpoint, especially from the geopolitical standpoint, we've not seen much of interest coming to India as compared to the other global economies, especially on the AI theme. So what we do focus heavily is on the relative positioning of India within the global markets and especially within the emerging markets. And that is how we do take a call on our active long and short or our net exposures on an overall basis. So yes, that forms a very critical and an important part of our portfolio decision making approach.
So macro is also a key component that one should be watching out for. But thank you, Weber, so much for joining in. It's always a pleasure to speak to you as well. But moving on, let's just quickly address the markets right now, because there is that mild recovery that we're seeing as well from where we actually opened up. There you go. From the day's lowest levels, we're still under pressure, but we've reclaimed that 23,950 mark right now. So that's a positive. And everyone's been of the opinion that if we are able to sustain above 23,900, that's when you should be starting to take decisive bets as well. Let's just quickly pull up Bank Nifty on the screens as well and see if that recovery is coming in there, or is that the one which is actually not letting Nifty 50 recover. There you go. Not that much, 0.5% downtick coming in terms of Bank Nifty. However, OMCs are in focus. One, on the back of earnings, and two, with what's happening in terms of crude prices. HPCL, BPCL, two stocks on our radar. Somit is joining us to tell us more. Somit, a recovery in terms of BPCL, 0.5% up move coming in there. And if you have to look at HPCL as well, what do you make of the numbers? What do you think that the street is looking at? And two, in terms of the way crude prices are panning out, I think the investors are going to be confused.
Well, what investors are looking at is just the movement in crude oil prices. Crude is at $95, $96, and that will be negative for the oil marketing companies, and hence they are down in trade. It's not an earnings reaction, it's just a crude movement reaction. But when it comes to earnings, BPCL numbers were actually much better compared to what the analysts were expecting, and the flip side, HPCL numbers were on the weaker side. Now, loss was expected by both the oil marketing companies. In fact, IOCL will also report a loss, and this loss was largely expected because of a weaker marketing segment in the first quarter of FY27. Because of higher crude oil prices, the marketing margins on petrol and diesel were deep in red, and that's the reason the EBITDA was expected to be in the negative side. Now, BPCL's EBITDA loss came in at just 4,080 crore rupees. Analysts were expecting this number to be close to 13,700. PAT loss came in at just 4,000 crore as against estimate of close to 12,600 crore. For HPCL, on the other hand, the EBITDA loss came in at close to 16,000 crore rupees, much more than what the analysts were expecting, at close to 12,600, while the PAT loss was largely in line with the street estimates. Now, what worked for BPCL? The beat was largely on the back of higher refining margins, lower expenditure, and lower inventory losses in the first quarter. And apart from that, there was a forex gain as well of 350 crore rupees for BPCL, which worked out for them. Debt increase was expected but was very limited at just 6,920 crore rupees on a Q-on-Q basis. While on the other hand, for HPCL, if you look at, given the fact that they have higher earnings still towards marketing segment, the losses were much more compared to what the street was expecting. GRMs came in at around $23.8 per barrel as against $14. Now, this is an improvement on a Q-on-Q basis, but compared to analyst estimates, this is still lower. And debt, that saw a sharp jump. It increased by nearly 25,000 crore rupees on a sequential basis to close to 72,600, which also led to higher earnings costs and also weighed on the overall financials of HPCL in the first quarter.
Okay, so thank you so much for that. In fact, the HPL conference call is down, and you can see the commentary coming in at the bottom of your screens as well on the ticker screen. But moving on, Cipla, that's another stock to focus on after Dr. Reddy's. Cipla will be posting their numbers today. My colleague Varsha is standing by to tell us what one should be watching out for, because just ahead of the numbers, the stock is down nearly 0.7%. Varsha, over to you.
Well, overall, a weak set of numbers is expected when it comes to Cipla. There, you might see some kind of growth in revenue, but EBITDA will be under pressure. Margins are expected at 17% versus 26%, and net profit may fall, 35%. Now, why the weak numbers? One is, of course, US business is expected to remain weak because of the absence of Revlimid, which will hurt growth, which we also saw in Dr. Reddy's case, and there will be no meaningful lanreotide, which is an hormonal drug, contribution this quarter, and US sales are estimated between $150 to $173 million. India continues to be growth driver, is expected to grow at around 11 to 15%. Respiratory portfolio will be strong for the company, and the consumer health will also continue to do well. Margins will be under pressure because of absence of high margin Revlimid, which will actually hurt the margins. Revlimid is nothing but a cancer drug that all the companies were into. And the consumer health will also continue to do well. Margins will be under pressure. EBITDA margin is expected to decline sharply, and unfavorable product mix will likely weigh on profits. So overall, a weak set of numbers is expected when it comes to Cipla.
Okay, so thank you so much for that. 0.6% lower is what you're seeing on the counter ahead of numbers. All of this excitement one way, Alex. The other excitement that all of us have been talking about is what's going to happen this Sunday.
Really?
What do you think it is? I'm sure you know what it is. I'm sure viewers also by now know what we're talking about. But the question is, they all want to know, are you prepared, guns blazing, to get ready and walk the red carpet?
Oh, for sure. In fact, if anything, I'm going to walk in first because I'm hosting.
That's the reason I'm saying you're the first one who's going to be walking the red carpet.
Now, so what are we talking about? 3 days to go for the Business Leadership Awards, where the top of the top, the creme de la creme, will get awarded and will get recognized. And we also have a Lifetime Achievement Award for India Inc. There's so much that's going to take place this Sunday. We've got the finance minister coming over. We've got the who's who that make waves on Dalal Street every time they speak.
Yeah, you're talking about innovators, disruptors, value creators, visionaries who've actually shaped and are going to shape the next decade from here on.
Yeah, and some of those metrics that decide those winners, it's not just people that have stood out on innovation and technology and everything else. It's important to also have created wealth for investors, that is you. I'm sure that you're excited to find out who the winning list is. And in fact, that is exactly what you will find out. Just days now to go, as we pointed out, 3 days for the Business Leadership Awards of 2026 after a gap of 13 years. We're ready for that big reveal. A trophy that is a striking expression of ambition in motion. It's been conceived by internationally acclaimed designer Mukul Goyal. That trophy, of course, embodies growth, transformation and aspiration, captures the relentless pursuit of excellence that defines great leadership. Here's a look at the inspiration and the craftsmanship behind the making of the NDTV Business Leadership Awards trophy.
As a country, the way we are growing, the way we're going forward, I think we have made great strides in the last couple of decades. Thanks to a lot of these business leaders who have achieved a lot of in their own domains, we as a country and their contributions have to be recognized. The challenge in any such process always remains is how do you distill down these varieties of thoughts into a simple idea. So the way we evolved it was we took the basic concept of infinity as a concept of excellence, continuity, a future. The feeling of the trophy of being extremely dynamic, yet it has a poetic form. It's moving in space, and the texture on the surface creates more depth to the, more feeling to the sculpture. The thing is, we created an infinity, the symbol of infinity, yet not fully complete infinity. So, the idea of excellence is that it's continuous. Infinity is a mathematical concept which is going towards the extreme level of achievement. And I think what is very important and what I hope always happens is that the trophy outlives its time and becomes an icon into itself.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where do you need charging infrastructure? You need it on high.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch. Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin dips below the $66,000 mark amid macro headwinds. S&P and Pantera launch crypto index. And Bitcoin ownership overtakes gold for American investors. Lastly, crypto industry hopes Clarity Act is expected to pass soon. First one is Bitcoin that has dipped below that $66,000 mark, and of course there is macro headwinds coming in, but the retreat from the resistance level at $67,000, now that has been pressurized. Why? Because of the rising oil prices and secondly the inflation concerns. Remember, there are two triggers: key earnings and also the Fed cues. The S&P Dow Jones Indices and Pantera Capital, which is a VC firm in crypto space, has launched the S&P Pantera Digital Asset Index. Now, of course, this is a new benchmark that selects digital assets using revenue, market size, and of course, the liquidity measures. The index currently holds around 18 digital assets and targets institutional investors seeking a structured way to track a broader part of the crypto market. Interestingly, Bitcoin has overtaken gold as the preferred hard asset amongst the American investors. As per a report by Bitcoin financial services firm River, 49.6 million Americans, or 18.6% of the total adult population, now own Bitcoin compared to just 28.8 million, or 10.8% of those who hold just gold. Now, this shows the growing acceptance in retail for crypto. And lastly, the crypto leaders expect Digital Asset Market Clarity Act to be passed. Now, they have cited that Ripple's institutional momentum is already coming out. It is a proposed US federal bill which is designed to regulate crypto and blockchain tokens. Remember, the critical deadline for this act is August recess. That means around the first week of August, it is expected that this Clarity Act would be passed, and this would actually give a very important regulatory push, especially for the crypto ecosystem. And before we wrap, here's a quick check to the changes to the crypto prices over the last 24 hours. And largely, it's a narrow range move with a little bit of negative sentiment coming in. Bitcoin, Ethereum, XRP, Solana, all in the red. But remember, it's a very tight range. And if you are looking at the support resistance, it's between $64,000 to $67,000 when it comes to Bitcoin. Well, time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind. Looking at the overall crypto strategy, the market outlook is still cautious consolidation. Remember, there is a dip, but it's a healthy correction because the broader uptrend is still strong and giving a bullish sentiment. The support range becomes tight between that $63,000 to $65,000 mark. But remember, there is an overhang of global tensions and inflation fears is there. So 3 things to look out for: Fed cues, earnings and Clarity Act. They remain the key triggers for the crypto space. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Let's focus on the earnings and coming in from the banking space. And IndusInd Bank is in focus as the company announces its quarterly numbers with asset quality improvement seen in the quarter. In fact, we are joined by Rajiv Anand, the MD and CEO of IndusInd Bank. Rajiv, always a pleasure to welcome you on NDTV Profit. Now, my first question to you, Rajiv, what is it that the street does not seem to like? The stock has been punished in trade over 4% down.
That's not a question for me to answer. What I have control on is how I manage my business. I leave it to the markets on how they want to react on a day-to-day basis.
Right. So even if the brokerage reports have really given an upgrade because you are at the cusp of a reversal and a turnaround with wholesale book also showing promising results, what is the trajectory and the guidance you want to give for the rest of this financial year, Rajiv, for the stakeholders to have much more comfort in the valuations of the stock?
So Nisha, what we've been saying is that this is the year. And in a sense, this is the quarter of where this is the inflection point for us. A lot of the repair work that we undertook last year is behind us and now really focused on growth. 27 is all about getting back to market level growth and be able to deliver 1% ROA on an exit basis in the current year. And that's what we are really focused on. YOY comparisons are, there's a lot of noise in the denominator currently. And so therefore, if you look at it on a Q1Q basis, we've seen growth both on the assets and liabilities side. There's a lot of work that's already beginning to happen on some of the other engines of growth. The traditional retail assets, for example, disbursements are up 16% on a Q1Q basis, which means that while the book is flat, for the current quarter, we will see the book begin to grow, which is really credit cards, personal loans, business loans, home loans, gold loans, etc. I mean, I think that whole engine is now being refurbished and is ready for growth. On the microfinance business, traditionally Q1 is a relatively weak quarter, but despite that, we've been able to grow disbursements broadly in line with Q4, which means that we should see pretty strong growth on the microfinance business in its traditionally strong Q2, Q3, Q4. On the vehicle finance business, it's been a relatively weak quarter, somewhat by the fact that we have slowed significantly growth on the two-wheeler business because of some credit issues that we are dealing with. But otherwise, the rest of the portfolio is beginning to grow, and I do believe that there is enough momentum there for us to grow for the rest of the quarter. So we should see broad-based growth and broadly in line with market during the current year.
Right. So, Rajiv, a lot of, momentum or at least expectation is building around IndusInd Bank after this particular quarterly result on the improvement trajectory beginning now. In your view and your in-house estimates and targets, when do you think that some meaningful results of this will come out? What's the timeline that we are really looking at for long-term shareholders in the company?
Like I said, Nisha, this is the year when we will start to grow in line with market. You're beginning to see that momentum in Q1. You've also seen, even after taking off the one-off, that ROAs have improved on a Q-on-Q basis. So clearly you can see that the momentum is beginning to build within the franchise. There are enough engines for us to grow. From an asset perspective, there's a lot of fee income that we are currently either under delivering or not delivering at all, and I think some of those there is work that is happening around that as well, and there is continued cost optimization that we are working on. So really, it's across the entire ROA tree. That work is happening, and to superimpose market level growth. I do believe that the exit position that IndusInd Bank will have at the end of 2027 will then position us to be able to dominate in our focus areas from 28 onwards.
Right. So, Rajiv, of course, ROA target of 1% for this fiscal is something to watch out for. And also, a lot of retailization of your book is what I hear in your commentary. But your NIMs are down by 4 bips. And also, you have given an outlook that you'll see pressure in Q2. Can you elaborate and what will push up the NIMs? Because I think that is something that the market is most sensitive about from the banking space now.
So I think
outlook that you'll see pressure in Q2. Can you elaborate and what will push up the NIMs? Because I think that is something that the market is most sensitive about from the banking space.
Let me break this into 2 parts. The short term, we have said that we will get about 3.6% of the total inflows on the FCNRB side. And so therefore, to that extent, it does take a little bit of time before we deploy this large pool of savings that will come in. And so therefore, to that extent, we do believe that there potentially could be a little bit of margin pressure in Q2. But we do believe that there is some upside to margins from there on, as the higher yielding businesses, which is our vehicle finance business, microfinance, and the core retail businesses begin to show growth. We do believe that Q3 onwards, we should expect NIMs to improve.
Right.
But I do believe that, if I can just add, I think the focus that we have really is on ROA, meaning that we are optimizing for ROA. So there may be some businesses which are relatively lower NIM businesses, but if they are coming to us at lower OPEX and lower credit costs such that it does not dilute ROA, we are quite happy to build those businesses as well.
All right, your MF area book is also improving. So by Q3, there will be margin improvement that is being seen that you have guided. But funding is a raw material for any bank and financial institution, Rajiv, and many of the mid-cap financial services as well as banks have really attracted a lot of deep-pocketed strategic players and financial investors. What we do gather from our market grapevine is also that IndusInd Bank has been in touch with several types of investors and explored that particular bit. Can you throw more light on the funding, foreign funding, attracting that, and also recapitalizing the bank in the same way as many of your peers have done?
We have taken an enabling resolution in this board meeting to raise both debt and equity, but that's really just an enabling resolution. Our capital position continues to be very strong at an overall basis, in excess of 17%, and CET1 in excess of 16%. So at this point in time, we don't see any requirement for capital. At some appropriate time over the next, let's say, 12 months, as ECL begins to kick in, growth begins to kick in, we may contemplate a fundraise, but at this point in time, we have no plans to raise money.
So strengthening the balance sheet and the operational matrices, and then probably look at fundraising in the next 12 months or so is what you're guiding. Rajiv Anand, always a pleasure to chat with you. Thank you so much for joining in here. And IndusInd Bank in focus, over 4% down in trade. The NIMs were down by 4 basis points for this particular bank. All right, let me now toss over to my colleague Mahima, who has more news on the go. Mahima, over to you.
Right, Nisha, thank you so much for taking that conversation ahead. The other one that we're putting spotlight on is Mahindra Holidays, by the way. It's in focus, after its Q1 earnings. Let's try to pull up the stock and see as to how it's doing in trade right now, up 2.5%. Overall, in terms of operational metrics, they've improved, on a strong footing. But I think the transformative journey that's still underway is kind of putting pressure on margins and profitability as well. But to, understand as to what lies ahead for FY27 and how things are shaping up with the company, we're now joined by Manoj Bhatt, who's the MD and CEO of Mahindra Holidays, joining us now. Manoj, thank you so much for taking out the time. Mahima this side. I think my first question to you is the same, that I was just talking about, because operationally things have improved a lot this quarter, but there is also a transformative journey which is underway for Mahindra Holidays. Just want to get a sense for FY27. What are the kind of timelines that you've set for this transformation, and considering that, how much of your overall cost pressure should impact your margins as well as your bottom line?
Thank you, Mahima, and good morning to all the viewers. And you're right, I think absolutely right. I think we had articulated a transformation journey which was built on 3 elements. One is scale, which is we had said we'll reach 10,000 keys by F30. Second was about looking at our portfolio and talking about how do we really upscale the portfolio overall. And third is about, how do we change the membership model and move towards more premium and focused on creating more of a pull product. I think these are the 3 elements. So as I talk about each one of them, let me first talk about growth. And as you know, last year we added about 1,000 keys, but we also gave up about 500, 600 keys, which were of quality which we felt was not meeting our quality levels which we desire. This year again, we will add about 1,000 keys plus and add about 7 or 8 resorts. And to me, this is something which I think kind of denotes the kind of journey we are on scaling. We'll also give up about 600, 700 keys again. And hopefully with that, I think the portfolio should be at an acceptable level of higher quality, which we desire. Talking about this particular quarter, of course, we have exited about 300 odd keys in this quarter, which is why you see some of the room counts going down. But if I look at the next 3 quarters, I think right now we shortly expect something to open in Goa. We shortly expect 2 more resorts to open in Maharashtra, and then we're looking at Rajasthan. So again, the next 2 or 3 quarters, I think we're going to continue that journey of growing. The second element of resort transformation, about 400 keys are going transformation and renovation as we speak. They're out of operation, not available for guests. Again, towards the second half of the year, some of that will be available and they'll come back into the mix. And lastly, from a member perspective, we had said that member addition will be measured, but we will focus on value. And that's where you see the AUR has gone up 73% YOY.
Correct.
So I think these are the three main elements. But as we go through this journey, I think there are some pressures because we're investing in growth. And that's why if you see Q1 to Q1, there is a drop in profitability. But if you see Q4 to Q1, I think there's hardly any drop. So some of that is already in the run rate. And that's something which we'll try and maintain as we go forward.
Got it. The 300 keys that you're talking about, is that the same with regards to what you've mentioned in your presentation, that 15 partner resort exited based on guest feedback? Is that the same 300 keys that you're talking about? And if yes, what has that feedback been like, and why have you decided to exit those keys? Just want to get more sense on that.
So I think one of the things we focus a lot on is listening to our guests and members. So one of the things which has come up consistently is about resort quality, about service quality. And wherever we have seen that, we do have a dialogue with our partner resorts. But in effect, at these partner resorts, we don't control the experience. It is the partner who controls the experience in terms of service, in terms of infrastructure. So as a measure to actually deliver better customer experience, we have exited those resorts based on the feedback which has come, which is that these are not up to the mark, up to the brand standards of what Club Mahindra is.
Got it. Manoj, for FY26, you almost touched that 3,000 crore mark, right? In terms of top line, it was around 2,992 odd crores. The 3-year CAGR, if you look at, has been around that 6 to 7 odd %. Considering that you're undergoing the transformation, plus there's geopolitical, crisis that's also impacting the industry as a whole. FY27, what is the kind of growth numbers that you're looking at, if you have internally decided in terms of top line, in terms of margins and bottom line?
I think overall, I don't think the revenue growth number will change dramatically. I think the focus for us is really some of the other metrics around, are we building something for the longer term? And as we speak about that, I think really it's about guest experience. It's about creating new offerings at the resorts. So to me, F27 is not something which we were targeting from a dramatic increase in revenue growth, but clearly putting some of these measures in place so that we have a clear visibility of what our journey towards F30 is.
Just one last question from my end with regards to Keystone. How has that development moved forward, one? And secondly, in terms of international growth and expansion, what are the plans going ahead?
So on Keystone, I think it has been well received. In fact, it was a new product, but it's already, and that's the only thing we are selling now. We have stopped selling the older membership plans. And if you look at clearly, we are adding customers at almost the same pace as before. So from our perspective, I think it's been a good start to that. But I think a new product needs awareness. So I think we are in that phase still because it's only been 2 quarters. My sense is another 2 quarters, a lot of more people will know about the product, and including our members, because our members also, it's a new product. So to me, that's the journey. It's begun well, but I think we should wait for 2 more quarters for really some of the acceleration to happen. On the international plans, I think we have select few destinations based on travel data of where Indians travel to, and we have tie-ups there, and we have no plans to actually create our own managed resorts at this point, but we will work with good partners in these locations so that we can create options. In addition to that, we have a tie-up with RCI, which also offers our members international options. So at this point, that's what it is. And of course, we have a business in Finland, which has not been doing well. I've spoken about it in the past because of the macroeconomic and geopolitical concerns. So we are focused on managing that operation with the least possible impact on profitability.
Mr. Bhatt, it's Puneet this side. Thank you for joining in. Just one question from my side. If you can provide an update on the signature resorts, will that largely be visible in numbers, around FY28 and onwards? So is that this year that a lot of thought would go into it of what that business do you expect it to be? Should that be an estimation? As well as for you joined almost 7 to 8 quarters ago. So you've been at the helm for the last 2 financial years. Whatever you had thought of in terms of changes, what's come from Dr. Shah as well, is that largely now in place, and now should we expect the growth to be much higher than what we've seen in the last couple of years?
So let me answer the second question first, right? So if you look at the journey, I think we articulated a new strategy in October, November last year, because we did a lot of study on what the market is, what do our members say, where should we head, and we talked about really expanding significantly in a certain manner, and I spoke about some of those elements in the beginning of this interview. So to me, I think right now the focus is on execution on that strategy, and a key part of that is Mahindra Signature Resorts. And at this point, I think we are constructing our first one in Theo, and that is something which will come somewhere in F28. Probably the second half is what we are looking at, because it is a difficult terrain to build on, and of course there are winters, we have to stop work, so there are multiple considerations there. But that's what we are looking at. Somewhere in the second half of F28 is when we plan to launch our first one. After that, we are looking at about 4 or 5 locations actively to put the second and third and fourth one, and at least 1 or 2 of them are in design phase. We have recently acquired some land in Chikmagalur. That could be one possible destination. So I think the plans are being executed right now for MSR. But to your point, I think there potentially could be a minimal revenue impact, if at all, in F28, because initially it will take time. But I think the effort here is to launch in F28 is what we are looking at from the first Mahindra Signature Resort.
Manoj, thank you so much for taking out the time and being so candid with your answers, and of course taking out the time and speaking with us at NDTV Profit. With that, it's time to step into a very, very short break. But viewers, we all know that you're waiting for getting all your questions answered. So do stay tuned in, because on the next side of the break, we'll be taking a lot more questions.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and the jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business owners? Find out at the NDTV Profit.
Welcome back. You're watching Ask Profit here at NDTV Profit. A quick look as to how the markets are doing before we start digging into your queries. The Nifty 50 is now trading around the 23,980 odd levels. We'll have to see whether it touches the 24,000 levels back. The VIX is down by about 2.4%, which is comforting. The Bank Nifty, however, is now below the 56,900 levels. With regards to where the broader markets go, the mid cap 150 is down by about 0.1%. The small cap 250 is down by about 0.1%, but both of them have recovered quite a bit from the day's low point, and so did the benchmark. So that's the overall view on how markets are doing. But let's start taking your queries, and to answer them, of course, today we have Kush Bora, founder of kushbora.com, with us in the studio, and Tapan Doshi, research analyst at catapan.in, joining us now. I'll take up the first question, which is coming in from Bhaskara Madhusudan, who's writing us from Hyderabad, asking about Vedanta Aluminium, whether this is the right time to purchase this one from a one-year standpoint. Tapan, a very good morning to you. Would you recommend that?
Good morning. Of course, so if you see Vedanta Aluminium is come down from its high, but I think the aluminium price will remain soft for near term, maybe 1 or 2 quarter more. But long term, I think this is good stock to be holding in, because in future data center, EV and all that are coming. So around, you can say 443 is the price. I think around 420, if he is able to get it, I think he can go for a long term for this one.
Got that view, Tapan, and welcome to the show. The next one coming through, it's on IKS, and Satyan wants to know about this particular counter. He's holding these shares at 1890 odd Kush. Wants to know that if he should still continue to hold this one, would you recommend averaging at this point of time? What's your view?
So first up, a very good morning, guys. I know it's a Thursday, correct? Yeah, result season bhi chalu hai, but you'll have to keep this calendar a little free, right? so fewer queries, we get to answer on Thursdays, especially when I'm around. Not fair, but that's on a lighter note. Satyan, why at 1890, right? I mean, we've recommended this stock, at significantly lower levels multiple times for, first target, second target, all of those being hit. Maybe if you bought it on those accounts, then I can understand. Right now, also, I don't see a reason for worry. If you look at the volumes on the way down, they've been very thin, not even close to any of the, not even close to the 20-day moving average, right, of the volumes. So for now, I would suggest continue to hold. Your buying prices at a slightly elevated level, but the primary structure for this one is still very much intact. Positional stop on this one, 1725. So like I said, continue to hold. Maybe I would suggest averaging, not now.
All right, okay. The next one that we have is on Himadri Specialty Chemicals, and this is from Mahadev, who's writing us from Hyderabad. He's bought around 100 odd shares at the price of around 800 odd rupees, and he says that he's looking at this from a really long-term perspective of 5 years and wants to know whether he can continue to hold this. Tapan, what would you recommend on Himadri Spec Chem?
Yeah, currently you hold the stock. If you see, the last few quarters was a little bit challenging, but I think management is quite optimistic about the future. And if you see, the demand will be in a double digit, maybe in future, hopefully after 2-3 quarters. So if he is a long-term pay, as he is already having, I think he can hold for a little bit longer, no problem.
Got that view. The next one, Kush, and this didn't take too long to come through on MTAR Tech. It's been a stock, a query that we were getting a lot on, so it's good to just get it out of the way at the start of the show. Prashant is holding these shares, and he actually got out at 5,457. So he actually exited at a loss, Kush. But what's your view on the stock now? Is it still worth buying into again? Seeing that momentum is a little bit back, but would you recommend that?
He got out at around 5,400.
5457, yes.
he actually got it at the lowest point possible
yes.
for the stock. Okay, so we did discuss this 2 sessions ago when the stock was hitting lower circuits, and I said, don't panic, that's not the time to sell. If you did listen to that conversation and still sold, not a good idea, because the stock from there on has been recovering. Should you buy now? I would suggest wait, because after a host of sessions of lower circuits, the stock hit upper circuit, there's far too much volatility in it. I would want it to cool off, just consolidate here for some time, and then on an uptick you can buy. So right now, just stay put, don't add right now. For the others who are still holding, you can continue to hold with a positional stop around 5,500, 5,600.
Got it. Waaree Renewables is the other one that remains in focus, and this is on the back of its Q1 numbers. It was a strong quarter overall, with revenue and profitability both rising, and this is on the back of execution. Of course, my colleague Varsha spoke to Manmohan Sharma, CFO at Waaree Renewables, overall, let's listen to what he had to say exactly.
Hello and welcome to NDTV Profit. My name is Varsha. Well, Waaree Renewable Technology is in focus on the back of Q1 FY27 numbers. We'll speak to the management about how was quarter gone by, about order book, and are these margins, the margins that company has shown, are these margins sustainable? We'll speak more about that, and for that we are here joined by Mr. Manmohan Sharma, who is CFO at Waaree Renewable Technology. Mr. Sharma, welcome at NDTV Profit. Pleasure to have you. Let me start with the consolidated order book. The unexecuted order book stand at around 5,300 odd crore. How should one think about the execution? 5,300 crore order, when can you execute, or what are the timelines when it comes to the execution of these orders?
Thank you, Varsha, for giving us an opportunity to interact with our stakeholders. I want to highlight few things for this quarter. We have already achieved 924 crore of revenue with EBITDA margin of 18.77%. In the standalone terms, we have maintained our margin to 19.66%, and on consolidated basis, it is 18.77%. And during this quarter, we have successfully acquired 55% stake in Associate Power Structure Company. The company is into the transmission distribution business from last over 3 decades. They have this is a profitable company, and they were revenue stream of around 2,000 crore in FY26. And the order book which we have mentioned, 5,300, is a combination of our EPC order book plus orders from the BESS and T&D BESS. So these orders we are likely to execute in the coming financial year from 12 to 18 months.
Understood. So, sir, overall 5,300 crore order book, what's the execution timelines? I want the consolidated order book execution timelines.
So these orders like 5,300 crore which I mentioned to you, along with we are also changing the order pipeline, that is around 27 gigawatt domestically, around 11 gigawatt internationally, plus 20,000 plus crores from the T&D business. So a combination of this, my existing order book and the order which are likely to get during this financial year, combination of these two will be executed during this quarter.
Okay, understood. And sir, this year, if you see, the growth was around 53% when it comes to revenue growth year on year. What's the outlook when it comes to the revenue growth that you are expecting for FY27? Will it be overall, if I were to talk about, FY25 to 26, in 26, you had a growth of around 109%. What about FY27, considering almost 53% of growth that you had in Q1?
So this is the first quarter of our operations. The operations definitely will scale up during the coming quarters. So like if I give you the broad number, like last year we have achieved 3,300 crores, and the associate which I mentioned, subsidiary, is also achieved 2,000 crores. So combination of these two gives the some this revenue numbers, and out of that 924 crore for this quarter we have already done. It's a limited period of 13 days which has been combined with our entity. So otherwise, for the next quarters, you will see that there will be a combination of these consolidated for these two revenues.
Well, that was the management of Waaree Renewables. Of course, the earnings season, stocks down almost 5.5% to 6% now, and that some clarification coming in on the order book. But the next question is from Pramit, who's from Pune. Kush, he wants to ask about GNS Power. You gave a call at 335 is what he's mentioning. Wants to know with what we've seen in the company, does the trend still stay positive? Can you expect a 15% return from this one?
I am in a way flattered that he does remember the stock and the date as well when it was given. So thank you so much for that, by the way. My concern is that I'm very sure I would have given a stop loss along with that. This is not a market where you trade without stop losses. If I'm not mistaken, the stop loss was 335 or 330 thereabouts, right? Ideally, you should have exited there. If not, I don't see a reason why you should exit now, because the bulk of the selling that came right after that call, that's been absorbed. The stock is now consolidating. It's gone sideways. The volumes have gone thin. So that's a good sign. So if you haven't sold it up until now, my suggestion, hold it with a stop loss around the 295, 300 zone as your stop loss. Immediate upside seem a little difficult because it's just gone very sideways. But like I said, you can continue to hold and do follow stop losses very strictly.
Yes, that point needs to be noted for sure. Do follow your stop losses. All right, the next one that we have is on Godrej Consumer, and this is from Pratiksha, who's writing us from Muscat. She says that she's bought this counter at the levels of 12.20, and she wants to know the target price for the next 1 year for this one. And she says that she's a long-term investor. Tapan, I'll come to you on Godrej Consumer. We saw how Nestle earnings came out, and they were on a very strong footing. In fact, the business update of Godrej Consumer has also been on a very strong footing with international business improving, volumes going up. Do you think it's a good counter to continue to hold for the next 1 year, and any sense on the target price?
Well, see, I think volume growth will be improving. Even the business updates were okay. If you see, the premiumization is going to continue for this company. Now, they are going to launch new products which will have a higher margin. So we have to see for that. And again, distribution expansion is already there. Of course, if you see the export business is little bit weak, that is what we have to keep in mind. Cash generation is healthy. So at this level, I think the stock is at a good level, and no valuation, it looks okay. So at least I expect a 15 to 20% uptick in a year for this stock.
Got it. Also, Tapan, on SBI funds as well. I think this week a lot more in focus, of course, got listed, but then has seen some correction. Now, Sanjay, who's from Bengaluru, actually got these shares in the IPO. What would you recommend here? Should he just continue to hold, wait for the quarterly earnings, then take a call on the long-term bet of the counter?
Yeah, sure. Because I think the stock is good. Yeah, valuation is on a higher side, but we have to see the quarterly earning. If there is a good volume, again, no, if you see the profitability of the company, margins of the company is good over the time. So I'm quite hopeful with the stock, but you have to wait for a longer time. So if he has a period of 2 years, 3 years, he can hold on to the stock. Short term, I don't think there will be a big uptick.
Next one that we have is coming in from Prakash, who's writing us from Hyderabad, asking about NTPC Green. Okay, before I do that, I think there's Gandhara Oil con call going on, and the management commentary is important to listen into what they have to say exactly.
Inventory level. The gains has mostly come in on account of being able to sell at higher prices than at much higher prices. What was the second question?
And so how do we see these margins panning out for the rest of the year?
We are hopeful of the margins remaining at this level or around this level. The current quarter looks good, and we are hopeful of it carrying forward at these levels for the whole year.
Just to add on what Mr. Indy is saying, obviously this has been a significantly historic quarter for us, But as informed earlier during his speech, obviously this is because of this exceptional market condition we have witnessed during this quarter. Obviously because of efficient sourcing management and effectively higher realization of our revenue. That is why we could contribute to an overall stellar performance for this quarter.
So we do see these realizations being maintained the entire year.
Sorry, what? We wouldn't see as many words that we are hopeful of these margins continuing in the most of this year. Yeah.
The company continues focusing on the personal care, healthcare, performance oil products. Obviously the matrix still remains the same, and obviously that is how we would like to continue and focus on our customers and improve the relationship with our customers and grow with these customers accordingly.
Okay. And so how do we look at the overall revenue growth for this year? How much of this will be driven by volume? What sort of volume growth are we targeting for this year, and remaining how much will be coming from price?
Historically, we've always been doing volume growth in the range of 8 to 10 to even 11%. So we see ourselves getting that much of volume growth during this year also.
And so in terms of our exports, so export performance has been really good. We've seen 51% increase in revenue. How do you see the contribution for exports for the entire year? Which geographies will we be targeting for this year? And so in terms of our exports, so export performance has been really good. We've seen 51% increase in revenue. How do you see the contribution for exports for the entire year? Which geographies will we be targeting for this year?
The company continues to maintain a very strong relationship with its overseas customers. Having said that, the company, have focused more on export and the overseas sale as we tell. We anticipate, the export revenue and the export sales will be in the same levels, for the quarters to come.
Okay, so and in terms of our growth, so growth driven by segments, which segments do you see is growth one contributing the highest for this year? Any segmental mix that we expect to change significantly, or will we be maintaining this mix that we had this quarter?
The star performing segment was still being performed, the PHPO, which is the personal care, healthcare performance oil division, second by the process and the insulating oil division. So these are the two segments where we anticipate the growth will be similar, the trend will continue to be similar for the next quarters as well.
Okay, that is very good to hear, sir. Congratulations and all the best.
Thank you.
Thank you. The next questions come from the line of Dhaval Shah from Girik Capital.
Well, of course, the profit have almost from 7x, stocks up 20%, so more focus on that one. We'll continue to get you more as and when the important update that's come through on that counter. But, as Mahima was highlighting, NTPC Green is the other one. Prakash from Hyderabad wants to know a good entry price for this one. Kush, I know recent listing, not too much historical evidence, but what would you recommend here?
No, I would not recommend entering now or even at lower levels. The reason for that is very simple. Look at the recent history of the stock. This year alone, there have been 2 instances where there has been a massive spurt in price, of course, backed by the massive spurt in volume. But then after that is what is interesting. The stock's gone sideways. In fact, in the last couple of months, it's actually corrected quite a bit. So these typical spurts are being taken as an opportunity to exit the stock. Wouldn't remain very constructive. Maybe once it crosses some critical thresholds on the upside, do we consider? Right now, I wouldn't really suggest an entry in NTPC Green.
Right, okay. The next one that we have is from Sabita, who's writing us from Hyderabad. She's asking about Route Mobile. She's bought around 481 odd shares at the levels of 250 rupees. And Kush, she wants your view on this one from a short-term to medium-term perspective, whether she can continue to hold or book profits on this one, because attractive levels is where she's entered into.
Very interesting levels. And the stock has come in the discussion after a very long time. Used to be one of the trader favorites, a while ago. But I must congratulate. Excellent entry point at about 480. Splendid entry point. Volume backed up move on this one today. It's, by the way, crossing the 200-day moving average. My suggestion, if you need to take some money off the table, book about 25 to 30%. Continue holding the rest. If that is really not a necessity or a need, I think you should continue holding on. Despite the kind of move that the stock is seeing, there is no overheating. Volume backed up moves on this one. So you could well continue to hold. I would, however, like I do, suggest a stop loss, a trailing stop loss in your case at 605.
605, got it. And as Kush mentioned, come back after a really long time back in focus. But the next one's Bank of Baroda. Viewer Khurshid, who's from Delhi, holding shares at around 270 odd. Now, Tapan, he's been following the stock. There was that big, $600 million settlement, and that impacted the profitability of the counter. But what would you recommend here? Should he still continue to hold? Maybe wait for some commentary to come through on the issue? What's your view?
Yeah, she can continue to hold, because I think that the credit growth will be around 12 to 14%. Again, the retail loan mix is improving, so that will help the margins. Asset quality is much more stable, and ROE is also improving. Of course, PSU valuation discount will always be there, but if you see, the net NP is much more in a control, and capital adequacy ratio is also good. So yes, I'm quite hopeful with this bank. So please hold on to this stock currently.
All right, okay. The next one that we have is coming in from Sushita, who's writing us from Bellary, asking about MRPL. She's got it at the levels of 179. She's holding around 5,227 odd shares. She wants to know the short-term targets on this one. It's been a really long time that she's been asking about this counter. She's been holding. Would you still recommend her to continue to hold, considering that now she's sitting on minor profits, or do you think it's time to book those profits?
So the entry price is very clearly elevated. Last time around also the stock actually went a little higher than this price and then slipped from here, right? So there could be some resistance that could very well come about at, around these levels, 180, 185. But now with the kind of momentum that it's got, and because she's seeing some profit after, a while, my suggestion, continue to hold with a stop loss at 172, 173. If that is broken, then you're better off exiting, because then this rally would have fizzled out. Because the momentum is building up right now. You don't want to be holding for a very long time and then exit, just at cost practically. So for now, continue to hold. As the stock keeps moving higher, keep trailing your stop losses higher. For now, 170 to 173, that's your stop loss.
Got that view, Kosh. But let's go across and take our next caller from Vizag. Chaitra is dialing in for a stock-related query. Chaitra, very good morning. What's your query?
Yeah, very good morning, sir, and all of you. Actually, this query is for Kushpura, sir. So I'm having Oracle Financial Service at 100 shares at 8,400 price. So I would like to know what is the short-term and long-term view on this. Is there any opportunity comes? What price I need to add more? So, and what is the maximum short-term and long-term target for this stock?
Got it. Well, and thanks for dialing in as well. Because we've seen, of course, the earnings come through. There's also been a management change, but all of those factors. But on the charts, what are you picking up?
So first up, Chaitra, thank you so much. You're awesome. One more thing, we've had this discussion before, if I'm not mistaken. We've had this discussion on OFSS in particular, right? Correct me if I'm wrong. By the way, the stock's doing fantastically well. Any kind of dip today is just profit booking. I wouldn't really be too concerned. If you're looking at adding some more, then I think a good entry point for this one is about 10,000 to 10,200, those support zones. On the upside, I'll not be surprised to see the stock go to about 12,000, 12,800 kind of level. So for now also, despite the run-up that it's already had, this is still very much a hold. You should continue holding on to this. As the stock crosses 13,000 mark, that's when you perhaps want to start taking some money off the table. For now, continue to hold.
All right, okay, so that's the view coming in on Oracle Financial Services. By the way, there's flashes on your screen down there on SpiceJet, on which we're seeing a spike coming in to this one, because there's 3 new Airbus aircrafts that have now, been bought to India, and that's the reason, that's the news on the back of which we're seeing that uptick coming in the counter as well. It's, of course, it's still in the talks to induct these additional aircrafts in the coming months, but it's certainly a positive one for this one, because we've seen the kind of pressure that this stock has seen. Just to highlight that point. But it's time for a rapid fire round, and Kush and Tapan, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Rallis India. This is from Chintanivas, who's writing us and asking fundamental view on this one. Her buying price is around 230 rupees. Tapan, what would you recommend?
Sell.
Next one's on Zentech. Tapan, if it's a good time to buy into it for the medium to long term, is it a good bet, or would you buy something else in the defense space?
Yeah, he can, but maybe 15-20% down.
Union Bank, our viewers bought it at the levels of 180 rupees. A short-term target on this one. Nitin from Bengaluru wants to know, Kush.
Actually, the target is about 180 and then perhaps 186. So spotted at slightly elevated levels. Hold with a stop loss at 165.
The next one that's coming in, and this one's on Uno Minda. Dilip wants to enter this counter now. Would you recommend that, Tapan?
Yeah, he can enter.
Okay, the next one's on Aegis Logistics. Avdesh from Delhi is holding 13 shares at the levels of 752. What's the technical view on this one? Should he continue to hold? He says he doesn't want to sell. Kush, what would you recommend?
Then don't. A good perspective, good buying price. Continue to hold. Positional stop at about 1250. Big breakout above 1400.
Okay.
The next one is from Ravi Mittal from Bengaluru. He's holding almost 550 shares of Force Motors at 20,000 rupees. So it's a very big chunk of investments in there. I hope it's not the only one, Ravi, that you hold. But, Tapan, it's been a volatile counter. Would you recommend him to also reduce his position? And what's your view on the stock?
So I'm positive on the stock. It will come up, but it will take some time. But yes, he can reduce the position, because it's, I think, if it is a big chunk of money.
Okay, Deepak Fertilizer is the other one. Murli from Hyderabad has around 25 odd shares bought at the levels of 618. He wants to know, from a 1 year perspective, can he continue to hold? Kush, this question is for you.
Yes, you can very well continue to hold. Stop loss near the 1500 mark.
The next one's on Aditya Infotech. Kush, Nandgopal is holding shares at 3,500. He's a brave man because he wants to add more at the current price. Would you recommend that? What's your view?
Perhaps slightly lower, close to 3,300, 3,400 zone. You can add more. The stock is in a consolidation phase after a massive run. So yes, you can consider adding at slightly lower levels though, and a positional stop then at about 3,100, 3,150.
Okay, Aster DM is the other one. Siddhi has bought 5,253 shares at the levels of 643. A long-term target on this one, Tapan, and continue to hold?
Yeah, please hold. Good stock to hold.
Next one's on NBCC. Sagar is holding shares at 110. Kush wants to know about his 1,000 shares and what's a 6-month time frame.
Yeah, the outlook's not all that positive. You can for now continue to hold with a tight stop loss at 91, but any bump up from here, you should take it as an opportunity to exit.
All right, the next one is from Pakshal Jain, who's writing us from Jodhpur. He says a fresh entry into Vishal Megamart or Trent for the next 3 years. What would you recommend, Tapan?
Both no.
The next one's on Reflex Industries, Tapan. Our viewers holding shares are almost 400 rupees and you know, mentioning that he's currently sitting on losses. Should he book out or continue to hold?
Currently hold.
Tata Steel, 1,000 shares bought at the levels of 144. Hold, sell, Kush?
144. Very much continue to hold. The stock is forming a base. Could see a spurt from here. Stop loss on this one, 175.
The next one's on M&M, Kush, and we're getting a lot of queries because the last 1 year stock's been in this range, but our viewer James is holding at 3,400. Should he buy more at the current price?
Yes, you can certainly add more. Remember, this is a consolidation after a massive run of a few years, right? So take that as a positive sign. Yes, you can add at current levels. Positional stop on this one, close to 2,900, 2,850. But yeah, you can add here.
Okay, Oberoi Realty, Kush, is this the right time to buy, considering, of course, the results are still awaited?
No, it's seeing profit booking. If at all you want to enter, look at 1775, 1800 zone as, you know, an entry point.
All right, okay, that brings us to the end of this rapid fire round, as well as, of course, Ask Profit. Kush and Tapan, thank you so much for taking out the time and you know, helping us answer all the questions that we were able to answer today. But for sure, 2 p.m. we'll take more questions, so you can tune in then. But you know what? After a pause of 13 years, one of the most prestigious honors in Indian business is back. On July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. The next category is Business Leader of the Year for Private Sector, and the nominees are Transforming a Legacy Conglomerate with Sharper Focus, Stronger Returns and Disciplined Growth, Dr. Anish Shah of Mahindra Group. Driving Innovation, Global Expansion and EV Leadership, K.N. Radhakrishnan has accelerated TVS Motors' growth journey. The architect, of course, behind India's retail success stories, scaling brands and delivering exceptional growth at Trent, P. Venkatesh Salu. And from cables to electricals, leadership, Inder Jaisinghani has powered Polycab's rise into an industry powerhouse. Advancing global healthcare through innovations and execution, Vinita Gupta continues to strengthen Lupin's international footprint. A visionary, of course, who transformed a homegrown manufacturer into a global mobility powerhouse, are Rajiv Bajaj of Bajaj Auto, and of course steering India's largest car maker through a new era of growth, innovation and mobility transformation. We have the management of Maruti Suzuki, now leading India's engineering giant with scale, ambition and execution excellence. S.N. Subramaniam, who's the management of Larsen & Toubro. All right, with that, we're completely out of time on this edition of Ask Profit, but do stay tuned in. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर विमल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. Another day, another company, and a very interesting story as well. Of course, we are focusing a lot on the earnings season, so a lot of companies are coming on their earnings as well. But today also a very special company here. Try to guess it, and most probably, if you're smart enough, you'll guess it very fast. It's India's largest managed office platform by overall footprint. Second hint, let me give you that. It's recently listed, you could say just been a year, or you could say on July 17, 2025. The third hint is, of course, the stock is up 31% from March lows and it's positive. And the last hint, I'm sure you'll try to guess it by now, it's they have delivered a strong Q1 numbers recently. So I was mentioning you and I had given you a hint that smartness is very much required, and yes, the company's name is also SmartWorks co-working spaces. Interesting, right? But let's focus on why we are calling this company. What is so special about it? Is there any moat here? First question is going to be on the Q1 numbers. Will they actually go out and break free from their margins or the revenue guidance which they have given for outlook? Is there a chance for an upgrade here? That's the question. Second question, let's understand what's happening here, and the reason is, of course, the outlook in the operational parameters, what happens here. If you could just show the other questions, the market share gains, there's a little bit of bullishness coming in, and interestingly, they have booked 87% of their contracted revenue this year itself. Also, the leasing trends and the client confidence, what's happening here? Is that shift moving to the enterprise customers? If yes, let's talk numbers. Global expansion, especially in the Southeast Asia, there is already a presence in Singapore. Is there more at play? The GCC explosion, the flex space, what are the industry triggers for it? And this has re-rated the entire sector. Seat expansion, the occupancy rates, these are the operational numbers which you should be tracking. And the smart vantage, this is the service. The GCC explosion, the flex space, what are the industry triggers for it? And this has re-rated the entire sector. Seat expansion, the occupancy rates, these are the operational numbers with solutions around their physical business, and that's also a pretty high margin business. Nitish Sarda, the founder and MD of SmartWorks co-working space, will be answering our queries. But let's understand the industry, let's understand the company, and of course let's understand the earnings as well. What's the entire details about the company? Let's get that in as well. It was established in 2015, listed in 2025. It's been a year for this company. It's India's largest managed office platform by overall footprint. Interesting, right? Let's get into more details about it. Almost 17 million square feet of areas they have. They have 70 centers, and this of course has India as well as Singapore. Also looking at the numbers, they basically transform bare shell real estate into enterprise campuses, as they call it. And 760 plus clients. This includes of course the Fortune 500 and the large MNCs as well. I'll give you that breakup also, but in a while. They offer of course MNCs, conglomerates, unicorns, everybody comes into their list. But also they have an interesting solution, Smart Vantage. This is a GCC focused solutions. A lot of services, ancillary services are there. This is what they sell. Operationally detailed, they have given the world's largest managed office campus. They're getting it. There's a tie-up with Panchil Realty. We'll try to understand that. And also remember, they have contracted the rental revenue of roughly 5,400 crore rupees. That's an important number to track. Multi-city client revenue, that has also risen, almost 35% of the rental revenue, and 1,000 plus seats cohort they have, which grew in from 34% to 41%. So it's a very interesting story looking like. But let's look at the rental revenue breakup. What's happening here? Majority, 92% of this rental revenue breakup comes from just enterprise clients. That means the stickiness is very much high in this product. Apart from this, let's look at the India's GCC story. So very big story at play, and it's one of the best ones which we are discussing. The revenue has jumped up. The contribution, if we talk about, this is the company's specific news. Also, let's look at the other key points for India's GCC story. They're targeting 2,400. That means each year 115 GCCs are getting added. Bangalore, Hyderabad, Gurgaon, you name it, everywhere this name is there. The GCC market size is roughly $110 billion by 2030. Also, the grade A demand in GCCs is roughly 40 to 50%, and that's why you're having so much of enterprise clients. Also, looking at the key industry data, India's office leasing has hit its record 24.6 million square feet in just the first quarter itself of 2026. Also, interesting data is the grade A demand that has outrun the new office space since 2022, and this will continue till 2030. That means there is a significant upside potential in this industry. Flex working office space, that's roughly 27% of Q2 leasing. So there is definitely a very big mega trend being played. Industry supply numbers, almost 7 times growth coming in from SmartWorks if we compare that the commercial real estate, and of course the flex market is in the middle, around 23%. But what may work for the company? This is very much important. 100% of 7 analysts have a buy rating on this. Second reason, do note it down, take a screenshot, share with your friends. Strong operational numbers have been delivered by the company, and there's also a diversified profile as well. They are beneficiary of GCC explosion as well as flex spaces. 2 more points are there. Note it down, the return ratios have been maintained despite the investment capex coming in. This is the most simplified version to talk about it. And 92% rental revenue comes from just enterprise clients. But in KYC, we show you the other side of the coin also. What may not work? There's a lack of FI participation in the counter. That's what we checked. I'm going to share that shareholding pattern with you. There is a volatility in the cash flow, and this is a business model perspective. Remember, the valuations are fairly expensive right now. We need to give it more time so that the market understands what should be the industry valuations for this space. There is a risk of asset liability mismatch, which of course the company claims that they have handled it properly. So it'll be very interesting to understand what is the company going through, or which business cycle and the way market is perceiving this sector. But there's another way to perceive things, and that is by the KYC ratings. And that's why I get you the income statement, balance sheet, cash flow, all the major numbers. We should be tracking the company. We'll be getting you the return ratios. And remember, there is a very small 1 year, listing period they had. So we could say that most of our data will be compressed to 1 year. Also, we'll have the valuations. We'll get you a lot of these companies in this new industry over the last 2 to 3 years, and the outlook, the key numbers, and hopefully there might be an upgrade of guidance, but you need to wait for that. Let's start income statement, and the numbers are pretty strong. The long-term numbers, look at the growth, and this is the path to profitability. In FY26, the company did turn profitable as well. So that is a good sign. There's a strong top-line growth, and that's what we are expecting in this industry because of the growth coming in. GCC, Flex, a good momentum. Even the margin outlook, the way they have maintained it, is showing strength. The Q1 numbers are very strong. That is why the street is bullish in this counter as well. A very stable kind of a business. So that's what we'll be focusing on. But it's a strong thumbs up when it comes to the income statement. Balance sheet, let's have a look at that, and it has been managed properly. The borrowings has come down. Of course, there is an impact of the IPO. Cash levels are decent, and the cash which they generate, there is a system where they start their capex also, and they expand. So it's internally funded acquisitions, and that's the model which they have done well. So I'm going to give this as well a strong thumbs up. So income statement was good, balance sheet was good, largely stable outlook, and the payment period is largely known because you have the best clients, almost 92% of them coming in the enterprise spaces. And look at that momentum happening, and it's a good stable growth coming in. Ideally, when you're judging these companies, do have a look on the cash flow from operations, because of course on the expansion front there might be some delays. But net, I'm going to give this a strong thumbs up as well. Let's talk about return ratios, and this is where the things start improving and the benefits start coming in. The business cycle which we talk about in a space like a workspace or a flex space, they have a business cycle. It takes time. There are matured centers, there are non-matured centers. That means the new centers and how they do the payback, that is important. And now you see both ROCs and ROIC, both of them have done well, and we are almost at one of the top cycles. So maybe this can stretch to 25-30. We'll try to understand with the management, but they are expanding also. So it's a strong thumbs up as well on return ratios. But moving on, remember the time period is quite less. No major movement has happened, and my concern is on the FIs. If the business is so rock solid, why the FIs are not entering? That's something to look out for. But definitely it's just 1 year, so let's cut some slack and give this a neutral rating in the shareholding front. But let's talk about street cred. What has happened from the IPO? Has it made money or not? Or is it a mixed signals? And as for my analysis, there is a mixed signals. From March lows, the stock is up 31%, but from the 2025 highs, it's in the negative. Largely from the IPO price, it's up 20% 1 year. It's a decent return. And from the listing, there was a pop. So there is a 12% gains coming in. So no major trend coming in. It's just 1 year data. Let's play fair and square. I'm going to give this a neutral rating as well. But valuations, the main question is, has the street actually understood what value to be put in a segment like this? Well, I don't think so. It's just been 2 to 3 years. We need to figure it out because the company just turned profitable. So remember, the valuations will be on the higher sides, around 46 times 12-month forward P. On the other hand, you see the variations which are happening. EFC is at 9 times. Is there an overhang in that stock? That's a big question. So remember, the valuations will be on the higher sides, around 46 times 12-month forward P. On the other hand, you see the variations which are happening. E-Cube comes in at 104 times. So the entire sector has not matured yet. So it becomes a bit difficult to judge a company in the valuations front. So keeping that benefit of doubt, I'm going to give this a neutral rating. But the last one, very much important, is the outlook segment. Look at that. The guidance has been reaffirmed. 28 to 30% revenue growth, which they have mentioned, and the 19 to 20% normalized EBITDA margin. These are the headline numbers which you should remember, and time to time compare them whenever the company comes out with the results. This is the operational target, which has been set around 12.5 to 13 million square foot. Also, apart from these three main outlook numbers, the Q1 update, 87% of the full year revenue has already been booked. Interesting, right? So the outlook is very strong. Let me get you the KYC ratings of the stock. Overall, how much does it stand? And largely the numbers all have been hitting out of the park. But give it some time, be it shareholding, street cred, and even valuation. You need some time. The industry needs to become a bit more mature so that even Dalal Street gives it a proper perception. Outlook, largely it is strong because of their numbers and also the way the business model is. So total rating comes roughly 6.5 out of it. It's largely on the higher side of the numbers which we generally give in KYC. But the story remains is what's next for the company, what's next for the industry. And we'll have Nitish Sarda, the founder and MD of SmartWorks Co-working Spaces, talking exclusively to NDTV Profit to understand what's the next story. But you need to wait because there's just a break here.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right.
Welcome back to Know Your Company. We are joined in by Nitish Sarda. He's the founder and MD at SmartWorks Co-working Space. Good afternoon, Nitish. It's always a pleasure to have you, and congratulations on a good set of quarterly numbers. And of course, we'll start with that, the Q1 numbers. What are the key growth triggers coming in? And was this a lumpy quarter of benefits, or will that play out across all the quarters? Hi, Nitish.
Hi, good morning, and thank you so much for having us here today this morning. I think the Q1 of FY26 has shown a significant growth and the compounding effect which we've seen the company going through from the last quarter of last year itself. We've grown revenues by 44% in the first quarter year on year and 74% increase in our EBITDA margins, which is the cash EBITDA that the business has generated. This is on back of high demand and high need for the product that has increased in the last couple of quarters, specifically with requirements coming from 1,000+ seater large enterprises who now compute almost 41% of our entire revenue. So with the take up, more demand coming in from larger enterprises, we're able to fill up our centers. Our current occupancy on mature centers, committed occupancy stands at more than 92%. And that is what is really driving the margins and the growth. And we are seeing and are very confident about the growth with the new inventory coming in as well.
A lot of numbers, Nitish, has been shared across, your presentations. But the one number or a group of three numbers, the guidance which is there, everybody's talking about it. And of course, the guidances for FY27. Is there a chance for an upgrade, because so many things are hitting at the right time, be it the industry, be it your growth, things are following very nicely here. So do you think there'll be an upgrade in guidance coming in? And if yes, we want to hear the numbers.
So if you look at our business model is dependent on the inventory that we have. Currently, our inventories already stand at a committed level of 92%. So there's a lot, really less leeway way for us to increase that number beyond that 92% because we're already at a significant capacity. The new inventory, which is already under construction, we have more than 3 million square foot under construction, which is going to hit. That inventory is under construction and will be under construction for the next 4 to 6 months and will actually hit the market in the last quarter of this year. Because we are in this high growth stage where we have so much capex spend happening in the first half, we are fairly confident of achieving that 28 to 30% despite the base growing at almost 35% with the new inventory which is getting added. So looking at that, we are fairly confident of doing the 28 to 30%, but you will see that significant uptake coming in the last quarter where most of these inventories will then become live. And next year, you will see the compounding effect of this inventory coming up.
Right. So there is a mature inventory, there is a new inventory, and we'll try to understand that business model as well. But market share gains, how does it pan out? In certain categories, you are India's largest. But just wanted to understand as a layman, what kind of a market share gain is there and what barometer is actually there to judge a company like yours?
So if you look at the entire industry, offices are 1 billion square foot. 100 million out of that, 10% of that is what flexible workspaces are. And SmartWorks in that 100 million is at 16 million square foot, 16 plus million square foot. So we're the largest in terms of operational as well as the signed up supply, which effectively gives us more than a 17% market share in the entire heavily growing market. Within this also, the flex space is growing at 23% year on year. SmartWorks is growing at anywhere between 35 to 40% year on year with the base of new properties that we are taking. Keeping this in mind, we are the fastest growing platform of flexible workspace in India today. If you compare this to our revenues have also grown to the same proportion, 44% growth in the last year. You will see that growth happening over the last few years. When you analyzed our balance sheet earlier, you would have seen that revenue uptake has been constantly growing at that 35 to 40% mark year on year. And we think that with the new inventory which is coming in, despite that 3 million square foot additional growth, we will continue demonstrating that growth at least for the next 2 to 3 years because we've already blocked that kind of supply. SmartWorks doesn't have any supply constraint anymore. We already have locked in supply for FY27 as well as 28, and now are looking at supply for FY29.
We need to understand a little bit because a little bit of concern comes. Still, your industry is quite new for Dalal Street, and we are trying to figure out isko valuation kya de. But to put things in perspective, Nitish, I want to understand the capex which you do, the ROCs you are able to maintain. How is this cycle there? And there was a very interesting slide in your presentation on the asset liability mismatch, and then you mitigate it. If you could just explain us what this process is and how do you do that?
Let me walk you through the journey of a center of SmartWorks, right? We take up a center ranging between 400 to 800,000 square foot. It means that each center will have more than 8 to 9,000 people coming to it on a day-to-day basis. For a center of that size, it takes us about 4 to 5 months to construct and get it to a stage where we can start selling it to customers. And it takes us about 12 months to get it to a stabilized occupancy of about 75 to 80%. And then between 14 to 15 months to get to about a 90% occupancy. This is a trend that we've been demonstrating despite taking larger and larger centers. So we used to take on average centers 200 to 250,000 square foot 2 years back. Last year, that average grew to about 300 to 350,000 square foot. Now this year, that number has already grown to 400,000 plus. Despite taking larger and larger centers, the time to fill the centers has been the same. Now, in terms of the ROCE and the CapEx infusion, SmartWorks is the industry leader in making sure that the capex that is invested to build the spaces, because of our leverage of economies of scale, we have the lowest capex required to build out those spaces. We spend anywhere between 1400 to 1450 rupees a square foot to build out a basic office, and depending on the quality of the client, that might go up a little or go down a little. That's the average that we spend today. The payback period for this, with our ROCE standing at north of 21%, is between 3 to 3.5 years. You get an entire payback of the initial capital that you have invested to build out the space for the customer. And this commensurates with the lock-in period that a large enterprise client, other 1,000+ seater enterprise client gives to us. So we spend 1,400 rupees a square foot to build their office. They give us a 3-year lock-in. In that 3-year lock-in, we recover that entire 1,400 rupees a square foot. After that, a client on an average commits to a tenure of more than 3 years. Today, that average tenure is almost 50 months and it is inching upwards towards almost 5 years now. With that in mind, anything that you earn after the 3 years is now compounding and increasing your ROCE significantly.
Fair enough. Nitesh, now we have understood the entire cycle. Thank you very much for putting it out, and a lot of our viewers are students and first-time analysts also who will understand a lot from the way you have put things out. But let's talk a little bit about industry. You spoke about GCC, you spoke about flex space. How is India going towards this? What are the key growth levers? Because any positive news I'm hearing from any city is just GCC, GCC and GCC. Your views on that, Nitish?
I think GCCs have come in as a significant taker of space, specifically in the last 4 to 5 quarters. If you look at GCC's contribution, it used to be lower single digits probably 2 years back. Today, they contribute to more than 35 to 40% of the record growth of commercial real estate in India. The first quarter of this year, 24 million square foot of absorption was done. Never in the history have we done that kind of absorption earlier, and that is driven by the GCC growth that is coming into the market. SmartWorks' share in GCCs have grown from 10% to a 21%, but that is also with respect to the new revenues that we are generating. Almost 40 to 45% of our new revenues is coming in from the GCC sector. That's why if you look at our client mix, which we have displayed in our presentation also, you will see that we have diversified our client mix significantly. Today, ITES, which effectively is 60% of India's commercial RE. For SmartWorks, it is less than 30% of our commercial RE. We have diversified our segments by getting in engineering, BFSI, business consulting and professional services company also to take up a significant portion in our portfolio. So demands are driven by GCC, which is driving about 35 to 40% of the entire office demand, but demand is also coming from homegrown companies.
Right. So there is a diversification at play. Yes, that's correct. Nitish, I want a short answer from you. 2 important things, though they are small, but you never know, they can become big. Smart Vantage, the GCC solutions, and the Singapore expansion. I'm sure you're getting something really big in Pune also. So just give us a quick update on that.
Smart Vantage is a fantastic program that helps us onboard and get GCCs, give them more than just seats and spaces. The true advantage of Smart Vantage you will see probably after 3 to 4 quarters, because right now we're building the spaces for them. But once they start using the services, we'll start getting revenues on those services as well. As far as Singapore is concerned, we had a fantastic run in Singapore. We piloted with our first 2 centers last year. In the first 2 years itself, we were able to generate significant cash flows for us to go ahead and open another center as well as acquire another player and double our footprint within a year from the cash flows that the company generated in Singapore. So we never transferred any money from India to Singapore. We made sure that the earnings of Singapore grew Singapore, and that is the way forward as well. Whatever Singapore earns will help us in our expansion in the Southeast Asian market. India growth is going to focus on the India growth story.
Right. So there's a lot to play for, and there's a huge market of Southeast Asia as well, and that's something which we'll be watching out for. But Nitish, we are out of time. We had an interesting conversation about your company. Your numbers are strong, and so is the industry. So congratulations on that, and best of luck for the future, Nitish. It's always a pleasure to have you. So that's the management of SmartWorks co-working space. There's a GCC up move. There's a companies doing really well. But is Dalal Street actually giving the valuations to this business model, or will it take some more time? That's the big question, right? So for these interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा।
की प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है।
EVs, hybrids, biofuels, or hydrogen. What fuel wins where? Join top auto CEOs, policy experts, and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise, and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman.
Benchmarks continue to be under pressure today, with Nifty trading below 24,000 level and Sensex losing 200 points. PSB's financial services on the back foot today, while the auto consumption sectors remain resilient. It's a weak Q1 for Dr. Reddy's as profit plummets and margins decline. Loan growth turnaround and improved asset quality boosts for IndusInd Bank. BPCL delivers a much stronger than expected performance, while HPCL sees weaker Q1 despite both companies being hit by suppressed fuel marketing margins. Strong quarterly earnings sparked a sharp rally across select energy stocks. NTPC Green Energy gained after posting robust profit growth, while Gandhar Oil Refinery hit the upper circuit as revenue margin and profitability surged well ahead of the last year's levels. HEG shares gained after the graphite electrode maker reported healthy June quarter earnings, backed by stronger revenue and a sharp movement in operating margins. Investors will now watch management commentary on the proposed restructuring and future growth strategy. Brent touches $96 per barrel as tensions between Iran and US continue to escalate. Attacks on ships en route Hormuz and Trump's warning of Iranian infra destruction add to the supply concerns on oil. Hello and welcome. You've tuned into Markets at 12 and big numbers flashing on our screen. Cipla has just announced the number. I think they have not met the estimates when it comes to the net profit figure. Take a look at that particular counter as well. A sudden, plummet in Cipla's stock while it digests the number and its impact. Let's take it straight across to my colleague Varsha, who's been pouring on the numbers to get a sense on what it means. Varsha.
Well, overall, miss on the numbers, I would say, and hence you're seeing the stock is down almost. The stock has dipped down to 1.2%. If you see, margins were a miss, even profitability was a miss, and these numbers, the weaker numbers was actually expected. Let's just dig it down, because we do not have press release still, but US business, I'm assuming, was supposed to be a weak one because of the absence of Revlimid, which is a cancer product, which was expected to draw down that US business sales, which is equally right for every other company. We even saw in Dr. Reddy's. No meaningful lanreotide contribution in this quarter would also have an impact on the overall financials, and the margin impact that you're seeing, the sharp decrease in the margin that you're seeing is because of the no Revlimid, which was a higher margin product for the company. Now, also the India business was expected at around 11 to 15%, and we want to see how the respiratory portfolio for the company has been performing. Absence of high margin Revlimid is one of the reasons why margins are under pressure, and unfavorable product mix is also the reason why you're seeing that a miss when it comes to the EBITDA margin. So overall, a weak set of numbers when it comes to Cipla, and hence the stock is down almost 2% in trade.
Thanks for the first cut, Varsha. And of course, we'll get more details on the internals of what really transpired for it to be weaker than expected quarter performance for Cipla coming in. And the stock is reacting quite sharply to that particular development as well. And of course, a miss on EBITDA margin, that is the profitability. Anyways, it was considered to be much weaker on a YOY basis, but has really missed the estimates by over 100 basis points. And that probably is something that the market will take cognizance of. We'll get back with more details on Cipla's numbers, and that stock is on our radar. But let's get chatting with Manishi Ray Chaudhary, the CEO of Emmer Capital Partners, joining in. Manishi, always a pleasure to welcome you on NDTV Profit. Looking at the unusual scenario that we are in the midst of with the US-Iran war and with the crude oil crisis now resurfacing for the Indian economy, how much do you think of a downside could be expected in the market? How much is baked in, and what could be your view on this?
Well, it's difficult to, first of all, thank you very much for having me here. I think it's good to pinpoint, the exact downside from here. The market is still trading at somewhere around 19 to 20 times 1 year forward. I think what the market is doing, and we had seen this during the first phase of the US-Iran war as well. The Asian markets are possibly looking through this and trying to kind of take a bet that this is again going to be temporary. And at some point of time, the spike in oil prices are going to prove intolerable for lack of a better word, not just for Asians, but also for the Western countries. And therefore, some kind of a solution would be worked out. Having said this, I must also point out that this time around, the logistics challenges are far higher than during the first round, because in the first instance, it was only the Strait of Hormuz which was being closed. This time around, we know that the Yemeni Houthis are targeting the Red Sea as well. So both straits, the Hormuz Strait and the Bab el-Mandeb Strait, there's a possibility of logistical constriction appearing over there. I would be cautious for the time being. I would possibly, focus more on the defensives. Like the utilities, like some of the, the industrial or capital goods companies which, kind of cater to the power requirement. I would also look at the domestic consumption and the consumer distribution companies, the e-commerce companies. But it's a kind of a tricky situation right now all across Asia.
Right, Manishi, and you well pointed out that the crisis on supply chain of crude oil looks a little more aggravated than it was the first time around. And also the market has to understand that it's here to stay. Now, looking at this particular situation and the delayed monsoon, it will probably have some impact, and the margin pressure as we are seeing in the earnings, which are yet to really be revealed, which may also spill over to the next quarter. How are you really assessing all these factors in terms of the market outlook?
Well, in the short term, I would think the volatility would continue. And as I said, investors would have to brace for, more volatility, maybe a little more downside to the Indian market. You talked about the possibility of a food price inflation because of the monsoons. I would also point out that even the fertilizer shortage, which could arise as a consequence of the renewed Middle Eastern tensions, could add fuel to that fire. So I mean, there are a sort of two or three, I mean, maybe a double whammy or a triple whammy that is in place for large energy and commodity importers like India. A spike in commodity prices would also mean margins and the margin expectations going down, which could mean that this nascent earnings estimate recovery, which we were beginning to see in India across a few sectors, that could come to an end for now. So the situation as a consequence, at least in the near term, if you look at the next 1 quarter or so, that's really not looking very rosy. The longer term drivers for India, I think they are still intact. As we know that there is a large consumer base, and once we are able to put this, geopolitical tensions and the commodity price spike behind us, if we are able to find a solution later this year, I think investors' focus would again come back to the long-term drivers.
Right, Manishi, the long-term drivers is what is keeping the momentum high, but we also had tested 23,000 odd levels while we were at the peak of the war situation, when the crude oil prices had really elevated to 100 and above. And now we are inching back towards it, looking at the crude oil prices trajectory right now. Looking at this scenario and the pressure on the earnings and the recovery not expected in the next quarter also, as this quarter is also taking the brunt, how much more downside do we really assess in the Indian markets?
Again, as I said, I mean, it's very difficult to quantify the downside. But, I think the previous bottom, which is around 23,000 for the Nifty, is something that investors should brace for in the near term. Whether it would go down even below that, that's a difficult question. I mean, if we do have oil prices spiking beyond the 120 levels, then pretty much all bets are off for the time being. But at least it's basically a case of the volatility and the downside continuing for some more time, and investors therefore kind of being focused on the defensives and other sectors which have kind of independent tailwinds of their own.
So Manishi well pointed out that 23,000, and that's why the market is finding it difficult, Nifty is finding it difficult to hold on to the 24,000 levels which we had achieved comfortably above. But in tandem with the crude oil prices, and also rupee is not being supportive despite all the measures being taken by the Reserve Bank of India as well, because it is impacted by the crude oil prices. Now looking at this scenario where rupee is depreciating, crude oil prices is putting pressure on all our macros for a larger part of this financial year. Now it looks like the FII inflow is a very critical aspect for our Indian markets. They add a lot of heft and momentum. How do you see that scenario? What are you gathering from overseas investors in terms of their view on Indian market?
It's an interesting question because, if you go back to kind of mid-June, which is about 5 to 6 weeks ago, there was a bit of an improvement about the sentiment for India among the core FII client base. There were discussions about India again coming back to the table, and I think it was partly to do with the AI capex anxiety which had taken hold at that point of time, and which to some extent even now continues. We have seen some of the North Asian markets, particularly Korea, being affected by the massive margin trading which the retail investors did over there, and which actually sort of manifested itself into these, 2 times or 3 times leveraged single stock ETFs, which are extremely risky securities to handle, and they were invested into massively through margin lending facilities by the retailers. So that is now unwinding. And, as this AI anxiety catches on, I think investors are beginning to understand that beyond AI, there's only one other large liquid market, and that's India. Now, unfortunately, from early July, the Middle Eastern tensions recommenced. And This spike in energy prices obviously disproportionately impacts some markets in Asia, India being one of them. So to that extent, that positive sentiment of the FIIs have been slightly affected, slightly muted. But if you look at the July numbers, FIIs have actually been buyers in India, which is a departure from the trend over the last 4 to 6 months. And indeed, over the last 2 years, right from September 2024, barring a few months, FIIs have been consistent sellers. Now, would this positive sentiment sustain? We don't know. A lot of things need to fall in place for the positive sentiment to sustain. And the most important out of that are earnings estimates. The earnings estimates recovery, which started briefly from mid-June, that certainly needs to continue until and unless we have a stronger earnings story to tell. FII's sentiment would not sustainably revive.
Manishi very well pointed out, because on the earnings side, most of the corporates in the last quarterly results had stated that now the improvement will be seen on the margin. But now the pressure is building once again, and it eats into almost all the sectors, given the transportation or else the crude and gas deliverables that are really used in various other segments as well. But Manishi, looking at this particular scenario, while you say that India growth story is intact in the long run, which are the pockets which you are much more confident about in the medium to long term for investment right now, while the valuations are becoming cheap?
I'll point out 3 or 4 sectors. First, the financial sectors, particularly the private banks. We are seeing a significant recovery in loan growth. It is now back to about 17 to 18% on a year-on-year basis. Banks' balance sheets are healthy, and so are the corporates who are being lent to by the banks. The private sector banks are likely to gain market share over the PSU banks, and that, I think, is a strong tailwind. One has to be a bit selective in the private banking universe, because there are some banks which are able to maintain their net interest margins, some others who are not. But broadly, that is one sector that we are clearly focusing on. Second, I would talk about industrials. The whole world is talking about AI capex. But the point is that the peripheral support, the peripheral infrastructure that is needed to keep that fire burning, or power supply, massive amount of energy supply, which also necessitates power equipment companies, transformers, power generation companies, to kind of up their game significantly. We have seen that partly in India. I would say that India's general investment in infrastructure would also add another tailwind to this space. I would also talk about consumer discretionaries, because the combination of various different monetary and fiscal incentives that have been thrown out over the last couple of years, coupled with the public sector salary hike, the pay commission award that's coming up going forward, that should sustain urban capex. And one has to be, again, a bit selective here, because the valuations are not really quite uniform across this sector.
Right.
I would also include, the healthcare companies, particularly the diagnostic and hospital chains here. I would include the e-commerce companies into this side. So, there's a significant degree of room that investors have to play while, when it comes to India.
That's right, Manishi, and several points and takeaways from what we discussed. But one more aspect I want to leave you with is that with the job losses because of the AI and ageism thrust, how long will the consumption sustain if people lose job is one thing to be seen, of course, with a huge lag effect. But in the future, are we looking at that? I'll cede that and leave this conversation. Thank you so much for joining us on NDTV Profit.
Thank you very much.
All right, shifting focus, let's focus on one particular company, Gulshan Polyols, and Aditi Pasari, the joint managing director, joins in now for a discussion on their ethanol-based focus. Aditi, when we look at the ethanol blending and ethanol focus that the company is really looking at, what is the guidance going forward in terms of the capacity expansion and therefore the profit and profitability, and in which timeline? Let's begin with that.
Yeah, hi. Thanks a lot for having me on the show. If I talk about FY27, we are looking at supplying about 22 crore litre to the government, to the OMCs. Our total capacity is about 26 crore litre, and looking at the government's focus towards increasing ethanol blending, we are definitely looking at debottlenecking and taking our own supplies to 110%. So definitely looking at least 20% upside from here in the next 1 to 2 years.
So, huge amount of demand also is coming in, Aditi. Can you give us a sense of also the industry picture? While it's a controversial subject on ethanol blending, but at least for now, we are looking at it as an alternate source of fuel as well. And that's where a huge amount of demand is getting created. How much of that supply capacity do we already have, and what is the industry really looking at, if you can give us a sense?
So E20 is just the first milestone, which has already been achieved by the government, and hats off to the government to have achieved it much before time. I feel very proud to say that the world is watching and is applauding India the way it has reached this milestone. Already, we are looking at E30 in the next 4 to 5 years. Industry is very much ready. We already have enough capacities in the country to achieve this target well before time. We have enough surplus feedstock available in the country. The BIS standards are ready, and the automobile industry is ready. So we have everything going for us, and this target will be achieved much, much before time. I'm very confident about that. Blending is here to stay, and it will only and only increase.
Right, so you really putting that confidence behind it, that blending is here to stay. Not that we have a choice in the present moment also, Aditi, and that's what the companies like yourself can capitalize on. Give us a sense on how this particular quarter is really transpiring for you. Give us a guidance on what are the key drivers as we assess your this quarterly performance in a few months.
So quarter one has gone very well for us. The company will deliver good results, better than promised. But however, going forward, we may see slight margin pressures in quarter two because of the raw material prices, which has spiked up a bit. But I'm very confident by the year end, we have been giving a guidance of about 10 to 11% EBITDA margins. By the year end, we will be very much achieving those, or hopefully more.
Right, and just one more quick question, Aditi. What are the challenges that could really come in the ethanol blending aspect, and what you foresee, and where is the government support required now?
See, challenges, we have already faced many challenges in the last 3 years, and now we're looking in a better space as far as the ethanol industry is concerned. Of course, the raw material availability, the FCI, rice availability. So all these were the initial issues because it was a very nascent industry. Everybody was, the whole economics of this industry was coming together, which took about 2 to 3 years. For us also as a company, took about 2 to 3 years to start getting the margins, the bottom line in place. But now going forward, the demographic, the agro scope, everything is very much in place for the industry. And the FCI support we have a lot of government support. They have always supported us from time to time, whether revising the ethanol price, releasing FCI rice for the ethanol industry. So they have done a lot of hand-holding for the industry, and for which we are very, very grateful. And main issue in this is the raw material availability. And until the FCI rice is available to the ethanol industry, which it is for the next couple of years for sure, because FCI itself is having warehousing issues. And there is no better buyer than the ethanol industry for FCI rice. We give advance, we lift rice and make fuel out of it, So there is no better buyer than the ethanol industry. So for next couple of years, I see ourselves very, very secure. And parallelly, even the production for maize in the country is going up very, very drastically. So I think in next 2 years, even if the FCI will not be available, we will have enough maize available in the country to be able to continue this kind of blending.
All right, so futuristic trends also for ethanol industry is looking strong. And there you go, Aditi. Many congratulations so far and all the best for future. Thank you so much for joining in.
Thank you.
All right, doubling down on ethanol, the company, and moving on to another one. And remember that the IPO momentum is really picking up. IPO-led Manipal Hospital is controlled and promoted by Temasek. The Singapore-based investor says that it will stay invested for a long term in Manipal Hospital and clarifies that it's a board-run company and listing is just an event. Here's an excerpt of the conversation I earlier had with Ravi Lamba, the head of India operations of Temasek. Listen in.
As an investor, we are being cautious. At the same time, the shocks that are being felt by the Indian economy have not been created by the Indian economy. So these are shocks from outside. And our view is that these are here for now, and they will go away at some point in time. So given we are a very long-term focused investor, we are able to ride out these shorter, volatile sort of parts of the cycle. So we are happy to stay invested. We're looking for opportunity. We are being cautious because uncertainty requires you to be a little bit more cautious. From our perspective, there are there's a cost element to the economy, right? There's a FX element where there's some volatility in the Indian rupee as well, and then there's of course the fact that you got to be careful about deploying capital in industries that could be affected for a longer period of time.
Yes.
And therefore, you just have to decide how you want to deploy capital. From our perspective, if I look back in the last 3 years and some years back, I think when you and I had spoken, we had said that we would like to try to deploy $9 to $10 billion in India over the next 3 to 5 years. And as of last year, we have deployed about $9 billion in the last 3 years. So we are on track.
How much are you looking to invest in this financial year, this year from now, Ravi, in India? And is that also going to be in the sectors of choice that you've already ascertained as is reflective in your portfolio?
Yeah, I think the second question I would say is the way we'll drive it. So healthcare, what's got to do with industrials, financial services.
Yes.
If it's got to do with renewables, industrials, we will invest in all of them. Now, we don't track it year by year, but what I would say is that we are still hoping to deploy the same rolling number of 9 to 10 billion over the next 3 years.
Right. So Ravi, you mentioned. All right. So that was the Temasek chat and a big IPO from the house of Temasek really about to hit the street soon. With that, it's a wrap on Markets at 12. Thank you so much for tuning in and keep it with NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P-Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters.
Hello and welcome to NDTV Profit. You're watching Trending Stocks at the NDTV Profit Sustan studio with me, Hiral Datia, and we have Sharad Dubey who's standing at the market pit as well. Good afternoon, viewers. In fact, it's a very, bleak day of trade, I would want to say, because if you pull up the Nifty 50 on the screens as well, there is that consolidation which has continued. The concern is, what is that sustainability going to look like? Because right now you are nearly at the day's lowest levels. You're below that 23,900 mark, I beg your pardon, and that was the fear point as well, Sharad, because the conviction was only if you're able to sustain above 23,900, that's when you could probably look at taking positions as well, use the buy on dips kind of strategy. But now that you've broken beyond that 23,900 level on the downside, what are you picking up in terms of cues?
Good afternoon, Healer. And you're right, the fall which has happened right now in the last 10 to 15 minutes, the fall has intensified. A key level of 23,900 has actually come down. Can expect further fall going ahead as well. Let's have a look at Nifty Bank also, and of course the technical setup is much weaker in last two trading sessions, and yes, we are at the day's low. We are down almost 650 points right now in the day's trade. So of course a lot of levels you could say that will be coming down, especially on the support levels. But remember, today is Sensex expiry also, and let's look at the key factors on the market, how things are panning out for Nifty. Of course, remember that support range is broken. We are at the lower number is 23,800. If this breaks, then there is a concern. Also, Nifty Bank, let's have a look at that. Also, the weaker technical setup coming in, especially HDFC Bank, that has been the main culprit, dragging it over the last 3 trading sessions. And going ahead, of course, sector specific some moves are happening, but the most important thing is the global cues, the uncertainty which is there, Iran and US, that's where the concern is coming in, and of course that's weighing in on Brent crude also. Look at that, it's above that 96 levels, almost touching the 97, and even WTI, there's no sign of cooling down, and that's a big concern coming in for the markets. But apart from the crude check, also let's look at the other key factors, what's happening. Strong momentum coming in auto stocks, a little bit of, you could say, two-wheeler stocks. That's where the buying is there. For last 3 sessions we saw that good numbers from Bajaj Auto, TVS. The paper stocks are rallying, and the ancillary refinery theme, remember these are one-off quarters where abnormal profits are coming, and that's where we are seeing the momentum happening. So do keep an eye on that as well. But it's all earnings right now, and 3 important earnings: Infosys, Interglobe Aviation and Meesho. We'll be tracking them and giving you those updates as well. And globally also, the factors today is US initial job claims data, and the European shares, they are expected to open lower as well. So largely it's a negative view in the global Q setup right now, and for the domestic markets also, at least on the indices and the largely mid caps also, sell off is there. Stock specific moves and earnings is something which we are looking at right now.
Absolutely, it is stock specific. It all related to earnings. Tips music, very interesting, because the revenues have seen a jump of around 21%, and they're mulling a buyback in August. The street is really happy, and that's what the watch list is telling you if you see the stock price. ONGC, Oil India, your Brent crude has risen for the 5th consecutive session. So both of these counters are in focus as we speak. Azad Engineering has delivered India's first indigenous turbojet engine. UCO Bank slightly under pressure to the tune of 2%, and that's on the back of earnings. Your profit growth has lagged your NI growth as well. And overall, with regards to UCO Bank, we'll be joined by the management after this. Dr. Reddy's has missed estimates, and it's one of the semaglutide product sales that has fallen. IndusInd Bank, a double downgrade. Kotak and CLSA has downgraded the counter post numbers. You're seeing HPCL, BPCL that are in focus. For one, HPCL, it's a weak quarter, BPCL strong quarter, but crude prices are also coming to the forefront. HEG, double-digit revenue and profit growth is what they've reported. Your Gandhar oil is in focus because your profits have actually quadrupled, and that's the reason why that stock is locked in upper circuit. CIE Automotive, good set of numbers, but the CEO has resigned, and that's what has put pressure on the counter in today's day of trade. NTPC Green also reacting to numbers in today's session, along with Tanla Platforms, Eternal, Nestle. All of these are the other counters which we are watching out for. But very quickly, let's just pull up a UCO Bank on the screens and see what that counter is doing in trade, because they've reported a steady first quarter in terms of performance, double-digit growth in terms of net interest income, and an improvement in terms of asset quality. Rajendra Kumar Sabu, MD and CEO at UCO Bank, joins in. Mr. Sabu, welcome to the show. Always a pleasure. Improvement in terms of asset quality. Rajendra Kumar Sabu, MD and CEO at UCO Bank, joins in. Mr. Sabu, welcome to the show. Always a pleasure to speak to you as well. My first question coming to you is, if I have to look at the numbers at the face of it, looks pretty okay. However, I think the profit growth which has lagged the NI growth is something that the street is concerned about. Your initial comments?
Yeah, thank you. Good afternoon to you. And yes, our profit growth has been good in operating profit. If you see, backed by NII growth, so our operating profit has grown by around 80% to 2,810, backed by our NII growth of around 16.85%. But because of the taxation provision we have provided, the net profit growth is slightly below than that, and that is 8%. So what has happened is that our tax provision has increased to 1,919 crore. Out of this, there is a one-time DTA charge of rupees 1,237 crore, because we have changed the taxation methodology. Earlier, we were being calculated through the older regime that was attracting 35% approximate tax, and the DTA was calculated at that rate. Now, from the current financial year, we have changed to the next new taxation regime, wherein the taxation rate comes around 25%. So with this change in the rate of tax, the calculation of DTA has been done and it has been remeasured. With this remeasurement, 1,237 crore one-time DTA has been reversed and charged to the profit and loss account. That has caused our net profit means rising only means in limited way and having 656 crore of net profit. So that is the main reason. Otherwise, all other profitability parameter like net interest income, NIM, non-interest income, and other TW recoveries, treasury gains, and fee-based income all have shown good growth.
Interesting operational parameters. I'll just add one more thing. That's the NIM. The global and the domestic NIMs seem to have done well. Going ahead, what will be the NIM guidance, sir?
Yes, we have already given our guidance in the beginning of the year.
Going ahead, what will be the NIM guidance, sir?
Yes, we have already given our guidance in the beginning of the year, and the NIM guidance is 2.8 to 2.90%. That is the range we have given. Our NIM for the last quarter has been 3.05 globally. We will continue with the guidance only, and we'll try to do better than that.
You coming in, but Mr. Sabu, the ECL provisioning, that's also a little bit of concern in the overhang in the banking industry as well. Any kind of amount which is getting provisioned, or we can expect that in the second quarter?
Yeah. So thank you. Actually, yes, you have rightly pointed out that ECL provisioning and ECL transition is a very, very important factor as of now for the banks. And in UCO Bank also, we are aware about that. And I can tell you that already we have been making our buffers. We are preparing for the ECL transition. So we have analyzed and we have estimated some amount of ECL provisioning requirement on the D-Day, like 1st April 2027, when we transition to the new ECL norms. Then out of that amount required, around 60% already we have created a buffer. So we have already 60% provision in place over and above the actual mandatory requirement as of now. So remaining 40% buffer we are planning to create within this year before we transition to the ECL. So in all in entirety, we will be having maximum amount of ECL transition hit in place before the ECL transition date comes.
Mr. Sabu, your advances growth is running well ahead of your FY27 guidance range as well. Does that mean that the bank is going to potentially revise its credit growth guidance upwards, or do you expect moderation in the coming quarters?
Yes, so this quarter our advances growth has been very good, 21%, supported by retail growth of 27%, agri growth of 30%, and MSME growth of around 18.79%. So we have maintained our guidance of 12 to 14% as of now. We will review the guidance midterm, like after September quarter, when we know the numbers of September quarter, and then we will take a view. As of now, the guidance continues to be 12 to 14%.
And overall, in terms of your loan growth as well, that has been materially ahead of your deposit growth. So are you comfortable with the current CD ratio? And what is the plan with regards to accelerating deposit mobilization goals?
Yes. So our advances growth has been higher than the deposit growth, you have rightly pointed out. So we are aware of this fact. We have in fact reached to the CD ratio of 82% this quarter only. And we have little room still available, though our range of guidance in CD ratio was 80 to 82% only, and we have reached that level. But now we are mobilizing deposits in good way. Like we have more focus on CASA. We have launched many new products in the CASA category for younger generations and for other sectors. So we are mobilizing CASA in current deposit as well as in savings deposit. Our retail term deposit franchise is also doing good. We have presence of 3,421 branches across the country, and we are engaging with the customers for mobilizing deposits. Other than the deposit, there are some more sources to fund the credit growth. Like one is the borrowing also. We are exploring the borrowing through our overseas branches and other avenues. And also the refinance facility is also available to support the credit growth. So we are also exploring refinance from the financial institutions. So in total, we will be mobilizing deposits or other funds to support our credit growth.
Okay, and what about your FCNRB fundraise? Because $500 million, I think, if I'm not mistaken, is what you're looking at. Where are you on it, and what's the kind of balance sheet benefit that you expect from this?
So yes, so now the window of FCNRB deposits as well as OFCB is available for the banks, and it is a very good opportunity for all of us to raise the resources. And we are also aware of this, and we have planned to raise around 500 million US dollar through both of these measures, like through FCNRB and OFCB. So we are working on that. We have two branches overseas, Singapore and Hong Kong. We are working through that, and also we are planning to open our Gift City branch very soon in the next month probably. So that will also help us, and means mobilizing deposit through FCNR and through OFCB, that will help us to support our credit growth, that will increase our liquidity and also our deposits and balance sheet. I think that is a win-win situation for all.
I think lots to watch out for. I think the key, Mr. Sabu, is going to be all the revisions that are going to happen in terms of your guidance for FY27.
Liquidity and also our deposits and balance sheet. I think that is a win-win situation for all.
I think lots to watch out for. I think the key, Mr. Sabu, is going to be all the, because that's what the street is going to be watching out for, at least on the upward side. Thank you so much for joining in. Always a pleasure to speak to you. Though the stock is slightly under pressure. Yes. Let's pull up a PVR on the screens as well. They've just reported numbers, and then we'll talk about a Vishal Megamart as well. I mean, in terms of where PVR goes, it's seen a spike of nearly 3%, and that's because they've reported a profit versus a loss number in the previous quarter. So that's what you are looking at in terms of where PVR Inox goes. If we can just get the numbers on the screens as well to address that. I mean, clearly, at least in the on the bottom line front, it's a strong set of numbers that have come in so far. Other income of 26 crores versus a 32 crores, so that is also pretty okay. That has gone down. Your net profit number is the key, 56 odd crores versus a loss of 54 odd crores, and that's the reason why you're seeing that kind of spike coming in there. A 12% rise in terms of revenues as well is what you're tracking so far. Apart from a PVR Inox, let's just pull up a Vishal Megamart also in terms of the intraday chart, and then we will see what the numbers are looking like so far. In terms of Vishal Megamart, 18 to 19% uptick in terms of revenues. The margins have been flat at 14.6%, and the net profit has grown 25%. EBITDA has grown around 18 to 19%, and they've said that they will be capping the aggregate foreign ownership at around 49.99%. The street is not really happy with the kind of numbers that have come in so far. That stock is down nearly 4.5% as we speak, taking a sharp spike downwards. Rajesh Bhosle, Senior Technical Analyst, joining in as well. Rajesh, on the charts, let's talk about a PVR as well as a Vishal Megamart. Both of them seeing reverse reactions on the back of earnings, but what is the chart story telling you?
Hi, afternoon, and thank you for having me on your show. First of all, talking about PVR. So, if we see chart structure since last couple of weeks, it has been in a consolidation phase. Definitely some positive momentum is there today, but somewhere around 1025, that's a key resistance. If we see since last few weeks, there has been multiple tops around 1025, and it also coincides with 200 DMA. So in the next few sessions, it would be crucial for prices to cross 1025. Once that is crossed, we can see a cup and handle price pattern breakout that can push prices towards 1075. As of now, positive momentum is there, but key levels needs to be crossed. On the lower side, if we see somewhere around 975, the stock is forming strong base.
Right. And Rajesh, good afternoon, Sharad here. But let's start the usual, the rapid fire round. And ONGC Oil India, we have seen the oil boiling for the last 4 odd sessions. Good momentum also coming in. Let's just get in the both of these stocks, ONGC and Oil India. Any further trade is possible on this, or do you think we are near that resistance levels for Brent crude so that there might be reversals also here for ONGC and Oil India? What do you think?
Hi, Sharad. So overall, both the counters positive. They have already seen strong in the last couple of weeks, but you have correctly highlighted they are now placed around key resistance. Especially if we see for ONGC, it's hovering around 200 DMA. So somewhere around 258 to 260 would be the key resistance to cross. Until then, we expect some consolidation. But as compared to that, Oil India has shown relative strength today as well. It's showing strong movement, and it's trading well above short-term moving averages. So possibly Oil India can extend its move, possibly towards 475 to 480 levels.
All right, another stock, Azad Engineering, positive corporate development coming in. But do you think, is there any breakout happening on the charts if you look at weekly or monthly, or do you think there's still more consolidation at play for this counter?
So overall chart structure has been positive. In the morning it was showing positive strength, but from the higher levels it has dipped a bit. So we'll wait for some confirmation. If we see a chart structure of last 3-4 weeks, 2400 has been acting as a resistance. Once that is crossed, we can see a pattern breakup. But until then, we'll have a wait and watch. On the downside, if we see there is a base around 20 to 50 levels, which is also its 20 EMA. So positive approach, but we'll wait for a confirmation breakup.
Fair enough. And Vari Renewable Tech, interesting order win also coming in. Your views on this, or what's there on the charts? It seems like a sell-off is there. Do you think there's a good buy the dip opportunity here, or you'll stay away from this counter right now?
Sharajji, we'll wait for as of now because there is no concrete reversal signs. Yeah, the stock is approaching strong support zone, which is a long-term support. So if it dips toward 2600, that would be ideal level. But as of now, we don't see any major traction.
All right. Another interesting stock is Tanla Platforms. After a long time, we are seeing a good momentum, at least in the PAT numbers. And the stock is up almost 10% right now. Will you see some more further up move coming in for Tanla Platforms? Already it has corrected a lot. Most of the CPaaS players have been.
So definitely strong momentum. The kind of formation we are seeing today, it has engulfed entire losing ground seen since last 1 week. So definitely a positive structure. Even if we see chart structure on daily and weekly, we can see a cup and handle pattern breakout. But having said that, if you see it's already up by 10% today, so buy on dip would be suggested. Somewhere around, if we see 600, there is a breakout level. That would be a key support level. And on the high side, 650 to 670, that would be resistance. So overall, bias is positive, but buying on dip would be suggested.
Right, biasness is positive, but no buy recommendation for Tanla. Okay, that's the end of the rapid fire round, but one stock has been buzzing, and that is SRF. Of course, the reactions on the earnings are very different, and when the con call happens, the reactions most of the times reverse also. This time also the story is same, but what is the entire story? We have Varsha with us. Varsha, SRF con calls are always very exciting.
Yes, absolutely. And yesterday when we saw the earnings were fantastic, but today, because of con call or post con call, we are seeing stock is down almost 7% because management is expecting weaker Q2 and Q3 than Q1. Now, what they're saying is that the chemical business is likely to remain under pressure. Chemical business, which grew 26%, is expected to grow at around 15 to 20%, and there the weakness will come. Now, Q1, if you see, benefited from price hike, which was, of course, led by the Middle East situation. Some buyers, bought the products in panic, and hence which led to the price hike and which benefited SRF, but that benefit is not going to come in Q2 and Q3 considering the price correction that the management is expecting. Onto the agrochemical outlook, well, agrochemical business is expected to grow at 15 to 20%. They are optimistic when it comes to demand, and the pharma share is targeted at around 20 to 30%. So 20 to 30% of revenue contribution is expected from pharma in FY30. But overall, weak Q2 and Q3 is what management is expecting, and hence we are seeing the stock is down almost 7% in trade.
Thanks a lot, Varsha, for that detailed analysis on SRF. Thank you very much. But we'll try to understand the fundamental perspective also. And we have joined in by Shashank here. Good afternoon, Shashank. Always a pleasure to have you with us at NDTV Profit. Varsha was discussing about SRF, how volatile the counter has become. Your fundamental views on this?
Look, SRF is, I call it a consistent compounder, right? It's one of the best companies over a very long period of time. If you look at the last 2 years, there has been a lot of volatility with the entire chemical industry, mainly coming from China as well. But looking at the ROE and ROC of the company, and also right now, the board has approved around 250 crores of capex. I think from a long-term standing, I'm still very bullish on SRF.
SRF is concerned. Long-term bullish, but it's the commentary at the conference call which is really not enthused the investors as well. But Infosys is also set to report its first quarter numbers. Jasmeet joins us with what the key expectations are. Jasmeet, after a whole host of companies that have already reported numbers, what are the cues that you're picking up with regards to Infosys? That stock did see a marginal spike, has come off, but the numbers are coming post market hours. So what are you picking up?
Right. Well, thank you for that. Now, if you look at Infosys as a company, the key focus that we are watching out for the result is the overall CC growth. Well, we are expecting the CC growth anywhere between 1 to 2% on this particular counter, better than the rest, but a slight growth compared to the rest of the peers. Apart from that, the key focus remains on the guidance. While the street remains divided on terms of the guidance, what to expect. Now, some brokers like Nuvama is expecting an upgrade in terms of the guidance. We're expecting the guidance would go up to 4.5 from earlier 1.5 to 3.5. But on the other hand, we also have a brokerage which are seeing a guidance cut. We're expecting the top end of the guidance might see a downtick. This will be in focus to see where the guidance goes. So we'll give a commentary also of how the demand is moving for this particular counter. While apart from that, the recent acquisitions the company has done in terms of the overall Wilson Group and the JV of how that is ramping up from here on will be a key focus. And if you look at the AI revenue aspect of the company reported its AI revenue only during the AI analyst day, but apart from that, they haven't reported any AI revenue. If that thing changes by the management and if there is a reporting for the AI revenue becomes a key focus, we'll also be watching out on the commentary of the BFSI, how that space is moving for this particular counter.
Thanks a lot, Jasmeet, for that. And of course, the IT sector itself has been beaten down left and right. And any positive news also might trigger some kind of a buying as well. But Shashank, wanted to understand, do you think the valuations are attractive right now, especially for large cap IT company like Infosys, or you prefer something in product, or you'll avoid this space as a whole?
No, man, I think IT is super attractive right now. I know it's contrary to popular belief, but if we look at the IT industry right now, they have all corrected 40-50%. And these are large cap companies still making significant cash flow. Yes, the growth has slowed down. That is why they're not attractive. But if you ask me, I would take this opportunity any day of the week, right? Because this is beautiful valuations at this point.
Bet that you have, Shashank, when it comes to IT, when there is uncertainty around it. But yes, valuations are obviously very attractive, for someone to actually take a dip as well. But thank you so much for joining in. But completely out of time with that, it's a wrap on this edition of Trending Stocks. And as we wrap the show, here's an exciting announcement. Just days before the NDTV Profit Business Leadership Awards 2026, we're ready for our first big reveal. A trophy that is a striking expression of ambition in motion, conceived by internationally acclaimed designer Mukul Goyal. The trophy actually embodies growth, transformation and aspiration, capturing the relentless pursuit of excellence that defies great leadership. Here's a look at the inspiration and craftsmanship behind the making of the NDTV Profit Business Leadership Awards trophy.
As a country, the way we are growing, the way we're going forward, I think we have made great strides in the last couple of decades. Thanks to a lot of these business leaders who have achieved a lot of in their own domains, we as a country and their contributions have to be recognized. The challenge in any such process always remains is how do you distill down these varieties of thoughts into a simple idea. So the way we evolved it was we took the basic concept of infinity as a concept of excellence, continuity, a future. The feeling of the trophy of being extremely dynamic, yet it has a poetic form. It's moving in space, and the texture on the surface creates more depth to the, more feeling to the sculpture. The thing is, we created an infinity, the symbol of infinity, yet not fully complete infinity. So, the idea of excellence is that it's continuous. Infinity is a mathematical concept which is going towards the extreme level of achievement. And I think what is very important and what I hope always happens is that the trophy outlives its time and becomes an icon into itself.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P-Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. They built, they led, they redefined the business conversation. Now, India Inc.'s finest takes center stage. Who will win the NDTV Profit Business Leadership Awards? 26 July on the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
Benchmarks continue to be under pressure with Nifty trading below 24,000 and Sensex also losing more than 300 points. PSU Bank Realty on the back foot while auto media remain resilient. And it's a weak first quarter set of numbers for DRL as profit plummets and margins decline, loan growth turnaround and improved asset quality boosts for IndusInd Bank. BPCL delivers a much stronger than expected performance, while HPCL sees weaker first quarter despite both companies being hit by suppressed fuel marketing margins. And strong set of numbers in the first quarter sparked a sharp rally across select energy stocks. NTPC Green Energy gains after posting robust profit growth. while Gandhar Oil Refinery also hit the upper circuit as revenue margins and profitability surged well ahead of last year's levels. HEG shares gain after the graphite electrode maker reports healthy June quarter earnings backed by stronger revenue and a sharp improvement in operating margins. Investors will now watch management commentary on the proposed restructuring and future growth strategy. And crude oil Brent, in fact, passed $96 per barrel as tensions between Iran and US continue to escalate. Attack on ships en route Hormuz and Trump's warning of an Iranian infrastructure destruction also add to some of those supply concerns. Very, very close to $97 a barrel. That's Brent for you right now. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now. And when you talk about the Nifty 50, it's actually very, very close to the day's low, just about at the day's low as well. And when you talk about Sensex as well, you're looking at Sensex as well, also losing about 460 odd points. Now, when you talk about the entire list of sectors that are buzzing away, it's actually auto as well as media that are remaining resilient. On the flip side, Realty and Nifty Bank, PSU Bank, financial services, energy, oil and gas, as well as pharma on the back foot as we speak. Let's also quickly talk about some pockets of resilience, and it's actually in terms of gainers, NTPC Green Energy, Graphite India, HEG, some of those stocks doing quite well for themselves. And when you talk about the entire list of losers as well, something like a Mahindra CIE, IndusInd Bank on the back of its numbers, SRF and ITD cementation, some of those counters in focus broadly speaking. But when you talk about the Nifty 50 pack as well, it's quite interesting to see the way that it's all playing out in terms of Bajaj Auto, M&M, or something like an SBI Life, Eternal, Bajaj Finserv, Eicher Motors being in great shape. So some of your auto counters as well that really make it to that list in terms of that cut for top gainers for Nifty 50. When you talk about top losers as well, something like Nestle India, Shriram Finance, Cipla, Grasim Industries and JSW Steel. Those are some of the counters that are a little bit on the back foot as we speak. But the main story right now is actually crude prices. Let's talk about that as well and talk about what's really happening in terms of crude oil, in terms of the factors and what else you should be watching out for. And of course, the levels right now, it's very close to $97 a barrel. As you can see on your screens as well, 3% uptick coming in for Brent. For WTI, you're looking at 2.4% uptick also. And when you talk about some of the key factors, number one factor on that entire list is the Houthis claiming attacks on Saudi tankers. And that's a first that's happened thus far. So that's something that's quite important. Red Sea then is emerging as a fresh supply risk, and that's the key factor that you're looking at. The third factor is a couple of things that are happening. So Strait of Hormuz tensions remain elevated and tanker disruptions really threaten some of those global oil flows, and that's something that you're looking at in terms of a very, very important factor. And in terms of the fourth factor as well, US-Iran conflict is entering the 12th straight night. And some of those attacks really continued for the 12th straight night. And that's why it's quite important to see what's happening there. And the fifth one actually ties in with the fourth factor as well, which is that peace talks largely remain off the table. And even in terms of the kind of commentary that is coming in, it's quite interesting to see that the de-escalation bit is not at all reflecting. So new fronts really emerging when it comes to the crisis. And the $100 question is something to talk about. In fact, Ajay Kedia, Director, Kedia Advisory, joining us on the show right now. Thank you so much, Mr. Kedia, for taking time out and joining us. First things first, just wanted to try and get a sense of what you think about the sharp surge in prices. And this has been a trend for much of this week. In the last session as well, you did have this particular hour between 12 to 1 p.m. Indian time is when you see some of those prices also cementing. How are you looking at some of those tensions as well and some of the factors and of course the price levels? $100 seems within, sight right now.
Very good afternoon. Yes, maybe we can see 100, 105 should be the next level, but things have totally changed. In the month of June, we have seen a sharp correction that was almost 36% from the high
what we have seen around 119. But in very last 20-21 days, we have seen again prices has gained by almost 39% as geopolitical tension continue to be there. The spread between Brent and WTI is right now trading at $8, which is on a higher side. That means escalation will continue. And you have rightly mentioned the talk between US and Iran is nothing is going on right now. That is why this de-escalation part, unless and until it doesn't come, maybe we can see prices moving to the level of 100 to 105. But double whammy would be for Indian market, because here rupee weakness will continue to support MCX crude oil prices. Secondly, monsoon stress will again support. So maybe on domestic side, we can see the level like 9,000 also for crude on domestic market.
Absolutely. And, the other thing that I want to ask you is about the new fronts that are right now emerging. Of course, we've been talking about the escalation. Some of those things have actually been priced in terms of the Hormuz disruption. That's something that we've been talking about. Of course, the market still remains quite sensitive to it. But that's something that traders were expecting, right? Now, when you talk about some of those new fronts as well, the Red Sea tankers are hit right now. What are you looking at in terms of some of the new fronts that are emerging?
So I think a new front has been emerging. We have seen disturbance in Strait of Hormuz, Red Sea area, Black Sea area, because conflict between Russia and Ukraine also erupted over there. So overall, I think because of this supply concern only, we have seen prices moving closer to 100 level mark. In fact, I think next week onwards, we will be having a Fed meet also and OPEC outcome also. So I think if there is a rise in output also, but important is the transportation or logistic part. Unless until this doesn't clear out, we may see $100. But let's hope if there is any talk going on between US and Iran, then definitely we can see some kind of correction. Otherwise, 100 should be on table.
And we'll get to that in a bit. Just one quick clarification that I wanted, right? In terms of some of the new fronts that you've said, markets are already currently pricing them in right now. There's a bit of important news as well that you're looking at in terms of the Houthis striking Saudi tankers for the first time ever. And before this, you did have some of those threats really coming out in the market. You did have the maritime embargo announcement. You did have the clarification, the addition to it coming in. But up until now, what's really happened is that strike hasn't happened. That first move hasn't happened in the way that it's transpired right now. So do you think that this could also be further escalating and the market could really be expanding its focus onto it?
Yeah, surely, because last time also when before the ceasefire, Houthis were just giving warnings and all. But this time it has strike and they are striking on Saudi soil tankers. So I think it could be more important. Even there is a new thing has been seen that US is now targeting Iran's bridges, public locations or water sanitation plant. And similarly, on a response side, Iran has started targeting the soft target of Jordan, Bahrain and Kuwait also. This, I think, getting a more escalation and prices might cross 100 level mark.
Absolutely. And in terms of the kind of higher for longer prices that you could be penciling in, is that something that makes it to your radar? And you always have quite the interesting take coming in when I ask you this question.
Yeah, I think it will take time to cool off. But first of all, let this war stop or ceasefire start. Then only we will be under any ground. What will be the other scenario? But timing, nothing. Any positive news has been coming from the Middle East or from US side.
To play the devil's advocate for just a bit before we come to some of the forecasts and some of the other factors as well when it comes to oil prices, just wanted to try and understand what you think about the de-escalation part of it, right? If there's a tweet or if there's any announcement coming in from US President Donald Trump, prices do tend to react quite strongly, quite sharply as well. So if there is a de-escalation from either sides, there's a confirmation coming in, what kind of price levels on the downside are you then watching out for?
So first of all, talk should be there, de-escalation should be there. One thing is that import for China has been dropped significantly, and OPEC is trying to push the inventories on higher side. But SPR holdings are still at 1983 low. So I don't think a major sharp down could be there. But let's say if de-escalation starts, on chart there is a pattern called higher low pattern. We have seen 119, then we have seen a high of almost 102, 103. So maybe if this is a possibility that higher low pattern is there, we may see prices moving back to the level of maybe around 74, 75 as of now.
But as of now, it does look like prices are, markets are just about looking away from patterns and only following one pattern, which is a little bit of, zooming in very closely in terms of the kind of flows that are coming out of the Hormuz as well. Thank you so much for taking time out and joining us and telling us what the outlook then looks like in terms of oil prices. But let's also get you another perspective as well. Take a deeper look at the crisis that we've got at hand as well. In fact, Narendra Taneja, energy expert, joins us on the show right now. Thank you so much, Mr. Taneja, for taking time out and joining us this afternoon. First things first, just wanted to try and understand what you think about the kind of numbers that we're seeing on our screens right now in terms of oil prices. You're just about looking at $97, which is very much within sight. The triple-digit mark as well for oil prices is also very much in sight as well. So against this entire backdrop, how are you looking at the situation that is currently playing out?
Well, first thing first, you see the prices, crude oil prices are moving in the direction of $100 per barrel. In fact, the market has response has been very mature, if I may use this term. Otherwise, in such kind of geopolitical situation, had we been, let's say, 2 years ago, the prices would have already touched $150 per barrel. But they have not, because the market is still hopeful that there would be some kind of breakthrough in terms of negotiations between Iran and the United States. But if you look at the latest message, which came just 30 minutes ago, that Iran has said that they have now mined the southern route, that is the route from the state of southern part of the state of Hormuz. And in fact, one tanker has just gone up in flames. So in such a situation, the market's response is still not panicky, but they are very, very alarmed. And my own sense is that in the absence of any serious negotiations, making any progress between the United States and Iran, what they are exchanging are basically threats. And in some cases, very, very alarmed. And my own sense is that in the absence of any serious negotiations, making any progress between the United States and Iran, what they are exchanging are basically threats. And in some cases, very serious threats. So markets are anxious, and the market situation, the prices only move in one direction, that's north. And that's what's precisely happening.
Absolutely, and precisely what we also see happening is that the rally has actually topped 30% so far just this month as well, and we're not even very close to the end of the month, not even like 1 or 2 days away from that as well. This is very, unforeseen, unpredictable, and it's as unpredictable as it can be in the current situation, given the kind of escalation that you've seen. Do you also expect that the market at some point, at some price level, could just really tire out of, the kind of rally, the kind of surge that we've seen? Or do you think that given the kind of escalation that we have, the prices are going to continue to rise?
Well, it depends on the supply. As we all know by now that 20%, crude oil supplies comes from that region that we are talking about. And right now what we are seeing in things have, got better and rather eased. And we saw that oil prices started moving in the direction of $70 per barrel, and there was discussions or talks that probably they might even touch $60 per barrel. From there to where they are now, the thing is that markets are anxious because the supplies are disrupted, and even from the Red Sea, which is the alternative route, as we all know, Houthis are now got active, and they said, look, we're going to target every single ship that tries to cross that area. And in fact, one tanker of Saudi Aramco, which was, coming to India, had turned back and trying to now cross the Suez Canal. That means we'll have to go all across Africa, which was, coming to India, had turned back and trying to now cross the Suez Canal. That means we'll have to go all across Africa, which means adding 30 days extra in the voyage. So it's a very, very difficult, unpredictable situation. As I said, we have to focus on what happens in terms of talks between Iran and the United States. Right now, my sense is that Iran regime is not united on this. There seems to be division. How should they be negotiating with the United States? And one section which seems to be powerful is against any kind of negotiation with the U.S. And the US at the same time is frustrated because they want the end of it as soon as possible because the elections are coming. Holiday season has started when, people want to have cheap oil because they travel. And so in such a situation, President Trump is threatening. He says, all right, if I can't get what I want, I'm going to bomb you, to ashes. So in such a situation, markets have no option but to respond the way they're responding. However, the market response so far is very, very mature. They're still hopeful there might be some kind of breakthrough, but there are no mediators. Who are the mediators? Country like Pakistan with no political weight. Qatar is actually bombed by Iran. So in such a situation, I think we might see this continue for some time, not forever. But my sense is that probably there will be some sense will prevail because they all know what they're going to lose. The entire world will lose in terms of, setback to the economy and global oil prices and so on and so forth. But President Trump is in a hurry. He wants the end as soon as possible because the elections are looming and coming for parliament and he needs cheap oil. He needs the economy to be doing well in order to win the elections, which are due in November. Iran seems to be not in a hurry. They know, kind of desperation of Trump. And Iran is also, first, internal differences. Second, they're also very good at negotiations and testing the patience of President Trump. So oil is suffering the process. When we say oil is suffering, that means the entire world, and more particularly countries like India.
Absolutely. And when you talk about US pump prices as well, that bit of panic and the reason for that panic is showing itself in numbers with that $4 a gallon also reflecting there. In terms of higher for longer oil prices, is that something that you're penciling in? Because what's really happened is that the lower limit of oil prices has also been shifted upwards ever since the war kicked in.
Yes, I mean, you see, the thing is that big economies like India, we started importing from other sources. So countries like India, to some extent even China, worries not so much about the supply, worries more about the economics, the price. Because India is extremely price sensitive. China has not been buying much oil, but they have started buying more oil now. And the Japan story is more or less the same. So my sense is that, probably there would be some kind of breakthrough. Probably Iran and the United States will realize that they have no option but to sit across the negotiating table. Iran is under pressure from China, from Russia. And America is also putting a lot of pressure, on other countries. You have seen that America and Saudi Arabia are not talking in terms of signing a nuclear deal, which is basically against as a kind of response to what Iran is trying to do in terms of acquiring nuclear weapon capability. So there's a lot happening. So I think I'm hopeful there would be some kind of breakthrough because there are people who are basically trying to put together some kind of channels. So I think I'm still hopeful. And if my sense in market is still hopeful, otherwise the price today would have been $115, $120 per barrel, which has not happened. That means the markets are still optimistic. Let's wait and watch. Because energy, don't forget, oil is 90% politics. So this is for people like me who track this practically on a daily basis. I mean, there is no surprise. This in oil, in the world of oil, this happens. Nothing new.
Absolutely, and that's one great comment to really end on that note. Thank you so much, Mr. Taneja, for joining us on the show. So oil is 90% politics. That's the commentary coming in there. And that's something that you've been seeing in the kind of reaction. What he does say, though, is that the reaction is a bit mature right now. It could have been $115. It could have been $120 as well. And those are some of the forecasts coming in from Goldman as well for the end of fourth quarter in terms of $120 a barrel that they're also eyeing. Right now, very close to $97 a barrel. That's all for you. Let's also move on and talk about Infosys as well, that is set to report its first quarter numbers. Jasmeet is joining in with some of the key expectations that you should be watching out for.
Well, thank you for that. In terms of the key things to watch out, the first we have is the CC growth and the guidance. Before we get to both of those, let's quickly understand the key numbers. In terms of revenue, we're expecting an uptick of 3.9%, while the EBIT could see an uptick of 3.9% as well. In terms of margin, we're expecting a flattish margin in this quarter, same as the last quarter at 21%. If you look at the net profit, that could see a downtick about 9%. Now, in terms of the key commentary, which will be in focus, is the CC growth. Well, we are penciling in a CC growth between 1 to 2.5%, with 1% of it coming from the inorganic part of the business. So that's the range what we are looking for, the CC growth. When you look at the guidance, well, that becomes a key focus given the street is currently divided in terms of the guidance. We have some brokerages estimating the guidance could see an uptick, while the others are estimating the guidance could see a downtick in this particular quarter, given the Accenture had cut its guidance on the back of that slowing down of demand. So the guidance becomes a key focus. Apart from that, the focus remains on the overall AI part of the business, of how the AI revenue is flowing for the company. Given company had reported the AI revenue once and then they stopped reporting it for the quarterly wise, it will be a focus if this quarter they do give out the AI revenue or not. Then we look at the key commentary in terms of the Middle East issue and how the overall deal ramp-up is going on for the particular counter. When you look at the deal wins, we are estimating a deal win anywhere around $3 billion. That's what the City Note says. And lastly, the overall commentary in terms of the deflation that we are seeing from the AI becomes a key watch-out. As of now, the crucial things to watch out will be the CC growth and guidance.
Absolutely, and thank you so much, Jasmeet, for joining us with that update coming in terms of what the street is penciling in. But let's also move on and talk about Dr. Reddy's. And that stock is going to be in focus and is in focus after reporting a disappointing set of numbers. You're looking at a 1.7% downtick coming in on this particular counter. The profit has been hit by weak US sales. And in fact, we caught up with the management of the company who talks about the business and the roadmap going forward, continues to say double-digit growth, and that's across key markets, and remains confident about the recovery as well. Let's go across and listen in.
We are confident in terms of how we are looking at growth. What you would have seen in terms of the numbers that were released. On the base business, there's a double-digit growth, and there's a double-digit growth across markets. How we are looking at growth. What you would have seen in terms of the numbers that were released. On the base business, there's a double-digit markets as well as India, and we have been focusing on growing the branded part of the business. And today, if you see India, emerging markets, and NRT is more than 50% of the revenues, and all of them have had good growth in Q1. And we believe that based on the current momentum and the new products that we're expected to launch over the next couple of quarters, followed by both the moves on the consumer health as well as innovative assets, will continue to grow. It is true that we have had an impact this quarter of the semaglutide write-offs, and also some impact because of the increase in the solvent prices because of the Middle East crisis. But overall, in terms of the base business growth, we're confident on how we expect to move forward in the rest of the year.
Understood. And sir, so, considering you have taken a 240 crore hit, this is of course due to semaglutide API issue. Now, is the problem now fully behind, or is there still risk of further write-offs and supply disruptions?
So when it comes to the write-offs, we have taken all of the write-offs in the Q1. And when it comes to this particular product, we have understood the root cause on why we have had this issue, and the scientists are working together on the countermeasures. The way we would get to know is when we will take up the scale-up batches, and then we test the product again. Should all of this go in the right direction, then we should start having the product back in Q3.
All right, then there you go. So that's the word coming in from Dr. Reddy's. Disappointing set of numbers, but the management is looking at some bit of recovery as well. But let's also talk about news that hits home and that affects you as well. Heavy monsoon showers have prompted the IMD to also issue an orange alert for Mumbai, Thane and Palghar, with Palghar under a red alert for the next 24 hours as well. The IMD has warned of heavy to very heavy rainfall, along with the risk of waterlogging, traffic disruptions and localized flooding. Anuj Raite of NDTV brings us this report.
I'm in Kurla right now, and it has been raining continuously since last night. The view that you're getting on your screen is that of Santa Cruz Chembur Link Road, an important road which also connects Mumbai-Bangalore Highway and Mumbai-Pune Highway as well. It has been raining, as I said earlier, incessantly since last night. The western suburbs of the city have received rainfall in excess of 70 millimeters, and other parts of the city are also still receiving rainfall in higher amounts. At the moment, an orange alert has been announced in Mumbai, and it has been suggested by the IMD that there will be grey clouds pretty much across the city. But as you can see, the rainfall has resulted in the traffic slowing down to a great extent. And although it hasn't rained anywhere close to what was the scenario earlier this month, we are already getting reports of waterlogging, and some of which you can already see on your screen right now. Situation is similar in other parts of MMR region, be it Raigad, Thane, Palghar. Especially in Tiger, things are becoming slightly tricky given the fact that a red alert has been issued, and the Raigad authorities and the Palghar authorities have already asked for the schools to be closed today. Now, it will be important to see whether the authorities take a close look at the developments, especially in the light of the rain-related tragedies which were experienced earlier this month in Mumbai.
Absolutely, and thank you so much, Anuj, for getting us all of those details. With that, we're completely timed out on this edition of the show. But as we do that, after a pause of 13 years, one of the most prestigious honors in Indian business is back on July 26th. NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies, and entrepreneurs who've helped shape India's economic journey. And the nominees for Financial Powerhouse of Year in the PSU space are Punjab National Bank, a banking institution woven into India's economic fabric for more than a century. Indian Bank, combining a strong legacy with disciplined execution. And Union Bank of India, with a nationwide footprint and a growing digital presence.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है. पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ.
The mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen. What fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today, either on the back of price or volumes. So let's see what's on the show today first. Firstly, we'll be speaking with the management of Sanathan Textiles. Now, recently the company has announced commissioning of its new plant. So what is the kind of incremental revenue that we could see from this new plant coming in going forward is the key question to ask the management on the show. Apart from that, we'll be talking about stocks like Orient Electric. Now, the company's PAT has jumped nearly 72% in the first quarter on a YOY basis on the back of improved portfolio mix, which also led to margin expansion, and that is the reason why the stock is gaining in trade. And then there is Route Mobile. Now, the stock has gained more than 9% on an intraday basis on the back of strong volumes. If you look at the volumes are nearly 9 times their 20-day average. Then there is Updater Services. The stock is up nearly 64% since March 2026, despite the weakness that we have seen in markets overall. And today the stock is up more than 8% on an intraday basis. What could be the potential reason behind this upsurge that we have been seeing in Updater Service is something that we'll try to decode on the show today with a fundamental guest. And lastly, we'll be also highlighting Asian Granito. The stock has snapped its 6-day losing streak. Any potential reason is something that we'll get to you on the show today. That is the small cap buzzers. Now, if you look at the market, the Nifty, it's been down for the 5th consecutive trading session, and now we are very close to our crucial support zone of 23,800. In fact, we are hovering around the 50 and the 100 DMA. That's the benchmark index I'm talking about. If you look at the sectoral indices, other than auto and pharma, most of the major sectoral indices are, in fact, auto and media, most of the sectoral indices, major ones are trading in red. Nifty Real Estate and Nifty Bank win the top sectoral loser, while on the gaining side, as I mentioned, just two, Nifty Media and the Nifty Auto Index. But when it comes to the small cap side, Varsha, which are the key stocks buzzing there?
Well, stock of the day I would call when it comes to small cap is of course Gandhar Oil. It's up almost 20% on the back of strong Q1 numbers, a very good spike when it comes to PAT. The volumes are trading at 10 times of its 30-day average. You also have, Tips Films, which is up almost 20%. Volumes are trading at 28 times of its 30-day average. You have Orient Electric, as Somit was saying, on the back of strong Q1 numbers. Even Route Mobile and, Kothari Petrochemical is also one of the stock which is actually buzzing on the back of good volumes. There you go, stock is up almost 6%. Indo-Gulf Crop Science, if we can pull that chart up, also is up almost 7.7%, 2.3 times of its 30-day average. You have, Updater Services also in focus. On the loser side, let's see which are the stock which are on the losing trend. You have ICRA, which is down almost 5%. You have Asian Hotels is also down almost 5%. SAB Events is also down almost 5%. Not much stocks when it comes to the loser side, not much variance, but yes, Gandhar Oil will be actually the stock of the day, I would understand. But one stock, which is in focus is Sanathan Textile, as company is expanding when it comes to their, technical textile. But to speak more about this and what's the opportunity lying ahead for the company, we are here joined by Mr. Samir Dattani, who is Executive Director of Sanathan Textile. Welcome at NDTV Profit, pleasure to have you, Samir. Just on the capex that you are expecting, you're almost doubling the capacity. Just wanted to understand when is the commissioning expected, and what utilization levels are you targeting when it comes to full year after commissioning?
Hi, good afternoon, and thank you for having me. So we're a diversified yarn manufacturer, and yarns are the starting point of the entire textile chain. We make polyester filament yarns, we make 100% cotton yarns, and we also make yarns for technical textile. I think today the focus is a bit more on the expansion of our technical textile business. Our existing capacity, we make 9,000 tons of yarns for technical textile, and in August we are ready to double that capacity. The civil work is complete, the machinery erection and commissioning is going on at the moment, and sometime in the middle of August we'll be starting commercial production of our new capacity for technical textiles. So from 9,000 tons, it'll double to 18,000 tons. Now, as we all know, technical textiles has been looked upon as the future of textiles. In India, the contribution of technical textiles is less than 10% of the entire textile ecosystem. In developed countries, this contribution is as high as 50%. So this is where the future of textiles lies, and this segment of technical textiles in India is in the past last 3 years growing at a CAGR of 11-12%, and indications are strong that it will continue to grow in that direction. Keeping that in mind, we are one of the few manufacturers of the yarns that are used for technical textiles for all these multiple applications like geotextiles, geogrid fabrics, defense fabrics, protective wear, safety gear, lashing slings, etc., etc., coated fabrics for luggage, for high-end luggage, for high-end cars, automotive fabrics, etc. So keeping that in mind, we have expanded our yarns for technical textiles. And as we have shared earlier, our polyester filament yarn, which is the largest contributor of our revenue, we started our new facility in Punjab, where we have more than doubled our capacity. And the Punjab facility, phase 1, is fully up and running. And now we are optimizing efficiencies there.
Right. Samir, just wanted to understand, do you already have customer commitments when it comes to the new capacity, or you're building up the capacity ahead of demand?
No, we already have customer commitments. We have customer requirements. Our customers are growing, I think, a bit more faster than us. So we see a lot of demand for the yarns in the coming months and quarters for technical textiles. Also, the applications in India are new. So a lot of new applications are sort of being discovered by the entire ecosystem, by us also and our customers also. And customers are expanding capacity in their existing application of technical textiles and adding new applications that can be used for technical textiles. So we're seeing that happening. The new capacity, we are pretty confident that within a month of commercial production, we will be able to utilize it fully. So in the second half of this year, we will start seeing that revenue addition to our total revenue.
Then what is the kind of targets that you have internally for FY27 when it comes to the revenue and on the margin front, given the fact that this plant will be fully operational for the second half of this financial year?
So our Punjab facility, which is fully up and running, will get further optimized in terms of production and efficiencies. Along with the technical textile, we are targeting and hopeful for a revenue of around 5,600-5,700 crores for FY27. And with an improved EBITDA margin and absolute EBITDA number of anything between 530 to 570 is our internal target that we are gunning for.
Given the fact that there has been a lot of volatility in the raw material prices, specifically in the first quarter, anything that investors should worry about from the company's perspective?
The first quarter, no doubt, has been quite challenging, not just for textiles, but for many industries because of the West Asia war. We had gas curtailment also in different parts of the country, which further troubled operations. But I think the worst is behind us. And in spite of this tough 3 months, we have improved our revenues in the first quarter and also improved our absolute EBITDA number because, like I mentioned earlier, our Punjab facility came fully online in March last year. So we continue to keep running that, improving our production efficiencies there, improving our contributions there. And we will continue to do that in Q2, Q3 and Q4, further improving our capacity utilization at the new facility.
And Samir, for FY26, you saw around 27% of growth over FY25. What about FY27? Considering the Q1 impact that you might have. So I just don't want any number for Q1, but overall for FY27, what's the growth expectation when it comes to revenue? And of course, the 8% margin, EBITDA margin that you did for FY26, you confident on maintaining that kind of margin?
So FY26, we did a total company revenue of around 3,800 crores. And factoring in the Q1 results and what we saw in terms of market and demand, we are very confident of achieving our revenue of 5,700 crores for FY27. And we are also confident of improving our margins for FY27, given the fact that we have the advantage of economy of scale for the polyester filament yarn business and also now for the technical textile, where we're doubling capacity and the commercial productions will start in August. And within a month, we should be fully utilizing this new capacity because it's relatively smaller in capacity versus the filament yarn business, of course. So we should be able to fully utilize it very quickly. And also, it's not a greenfield expansion like our Punjab facility was. This is a brownfield expansion. So it'll be far more easy to stabilize and fully utilize. So we will have that further addition of revenue. And as we know, technical textile is a higher growth and higher margin business. Typically, we see at least a 4,000 rupees a ton higher EBITDA in our technical textile yarn contribution versus our polyester filament yarn contribution. So keeping all this in mind, the growth that we're actually executing this year at Sanathan, I'm very confident that we should be in range to our expectations for FY27.
Lastly, Samir, on UK FTA, just wanted to understand what incremental revenue you are expecting when it comes to UK FTA, and with that, what will be your international contribution to the overall business?
So very, very exciting question, because we're seeing a lot of inquiries and buzz after the FTA announcement for UK and Europe. A lot of customers have reached out. We have contacted a lot of customers. There's sampling that's happening. There is exchange. Very exciting question, because we're seeing a lot of inquiries and buzz after the FTA announcement for UK and Europe. A lot of customers have reached out. We have contacted a lot of product availability, product range, etc. that has already started with customers. Our yarns for technical textiles, we export a decent amount to the US. Not much to UK and Europe at the moment, but we are seeing a huge opportunity there. And like I mentioned, in the developed economies, the contribution of technical textile to the entire textile ecosystem is as high as 40-50%. So there's a huge opportunity that lies ahead in the coming quarters once these FTAs start working in the favor. Huge opportunities for us as a yarn manufacturer to directly export our yarns, and also for the entire ecosystem. Our customers will be exporting the products, whether it's apparels, garments, or technical textile products, to these countries. So I'm very, very optimistic and positive about the FTA and it supporting and increasing avenues for the entire textile chain.
Right. Well, thank you so much, Samir, for joining in and having a conversation with us. Pleasure to have you at NDTV Profit. Thank you so much. Well, this was Sanathan Textiles, outlining growth prospects when it comes to FY27, confident of, maintaining, or I would say increasing margins of around from 8%. With that, let's also invite fundamental guest for the day, Sunny Agrawal, Head of Fundamental Equity Research at SBI Cap Securities. Sunny, what about, Sanathan Textiles? You heard the management quite confident when it comes to the technical textile capacity and also on the back of UK FTA. What's your view on this counter?
I think I understand it that company is about this CapEx journey, and FY27 is a year where they will try to sweat their assets. So seeing FY27, they will see an handsome growth as far as top line is concerned. The key monitorable going forward will be obviously the margin profile of the new plant as capacity ramp up, and obviously the debt on the balance sheet seems to be on a higher side, closer to 1,400 crore number. I hope that number will pick out post this capex, and gradually we will see a financial deleveraging that is also playing out. That will play out on the P&L as well as balance sheet. Obviously, the external environment is slightly volatile, and that could have some impact. So somebody who is willing to bet on FY27 number, willing to ride a slightly higher risk, higher return kind of proposition, they can definitely look at Sanathan Textile, as management has clearly guided that EBITDA can double in FY27 as compared to FY26. So definitely, in case the management is able to deliver, I think the stock is definitely due for re-rating.
Well, moving on, let's take a quick short break. Stay tuned to NDTV Profit.
Superstar, stocks of a superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs.
Welcome back. You're watching Small Cap Buzzers, where let's pull up chart for Orient Electric. Let's see what that stock is doing, because stock is up almost 4%. It has come down, but strong Q1 numbers the company has seen. Let's see what drove the growth when it comes to Q1 for Orient Electric. You have cooling products, which continue to do well for the company. Fan business outperformed the industry. Even lighting, switchgear and wires saw strong traction, and emerging business contributed meaningfully, when it comes to the growth. Well, onto the premiumization, because higher share of premium products across categories have actually led to that margin expansion, or led to the increase in the EBITDA, I would say. New products contributed nearly 30% of fan revenue, and focus remain on the innovation-led growth. And a better product mix have aided profitability for the company, and hence you're seeing the profit surge almost 80% year on year. Onto the export story, well, e-commerce recorded high double-digit growth. Export also reported strong growth. Overall, a strong set of numbers for Orient Electric, and hence we're seeing stock is up almost 4%. Sunny, any view on Orient Electric?
Yeah, I think a very strong set of number delivered by Orient Electric in the backdrop of kind of during FY26 and FY25. So seeing that, since the fan, as you rightly pointed out, fans and luminaires that is growing at a faster clip, and that is aiding the margin also for the company. In case company is able to deliver on a double-digit kind of margin, I believe that the stock is due for re-rating. Trading at a reasonable valuation, price to sales multiple closer to 1 times. Price to earning multiple closer to 30 times. So in case maybe during the management call, in case company is able to give confidence that margin is something that will expand further due to price-led action, that will definitely call for re-rating in Orient Electric.
Next stock in focus is Route Mobile. The stock is up nearly 10% in trade today, but do remember that in the last 1 year, the share prices are down nearly 33%. What does the company do? What could be the reason behind this 10% up move today? And what has led to this 33% fall in the share prices? Let's get in Jasmeet to understand all of that.
Well, Somit, thank you for that. As rightly said, a quite volatile stock, must say, and over a year the stock has underperformed to be honest, and down about 30%. Now, in terms of what the company does, well, company is basically a cloud messaging platform where it provides messaging platforms to the B2B and B2C as well. Now, if you look at the stock performance of this particular counter over the trade in today's trade, it's up about 13%, which is seeing a good volume growth about 9 times. In terms of over last 6 months, the stock is again in green. What we are seeing, the stock has gained about 7%, and over last 1 month, the stock has dialed about 20%. If we look at the performance over last 1 year, it's down about 32%. Now, in terms of FY26 was a turnaround quarter for the company. Now, what did the company actually mention is that the overall reset that they were planning to do is over, and from the Q1 of FY27 will be a fresh start for the particular counter. If you look at the overall information about the Q1, the key takeaways, we do know that the overall revenue saw a decline, but the profitability was maintained on the back of better cost management by the management. Further, the company also reported its first time annual gross profit crossing the 1,000 Information with the Q1, the key takeaways, we do note that the overall revenue saw a decline, but the profitability was maintained on the back of better cost management by the management. Further, the company also reports the international messaging business for the company contributes 1/4 of the overall revenue, and when that is been reducing, and the overall hang of that is reducing by the management, and now that has stabilized as per the management. If you look at the last key takeaway, that's the firewall business for the company, where we see company moving into the new segments altogether is generating a good growth, and company sees the highest revenue for the quarter coming in from that particular business. Now, if you look at the key numbers, the revenue saw a downtick of 3.7%, while the adjusted EBITDA stabilized and was flattish on YY basis. If you look at the margins, those also saw a slight uptick of 40 BPS at 11.98%, but management does remain bullish on the overall outlook. If you look at the revenue outlook, they expect the growth to be anywhere between mid to high single digit going ahead, and in the FY26 it was a flattish growth, a slightly degrowth must say. Now, in terms of the EBITDA margin target, the management is targeting roughly 12%, and that touched at 11.9% mark in the FY26, so that will be something to watch out of how does that goes out, and if the 11.9% mark can be stated and stayed at the particular level. Now, with the last thing, the dividend is something that management has raised by nearly 50%. Earlier it was 11 odd rupees per share, now they have made it 16.5 rupees odd share. So as of now, FY26 looked more of a stabilizing year for the company, but FY27 is something to watch out of how does the overall Q1 pans out going ahead.
Ani, what are you expecting from Route Mobile? Should investors buy into this counter, given that the stock has fallen and is the worst behind now?
Again, what I believe is that looking at the numbers of Tanla platform, which has some overlap in terms of business as compared to Route Mobile, I think stock has reacted positively today. As rightly pointed out, FY26 was a kind of year of reset, and now as guided by management, FY27 seems to be a year of growth again for Route Mobile. Again, in terms of valuation, I think the company has potential to deliver an annual PAT of close to 400 crore number, and market cap is closer to 4,000 crore, trading at a reasonable valuation. In case post 1Q number, in case company is able to deliver on margin front, 12% kind of margin front, then probably investor can definitely consider this stock in that small cap portfolio.
Right. Well, thank you so much, Sunny, for all the details and for joining in and having a conversation with us. Thank you so much. Well, moving on, let's also pick up Updater Services, because the stock has gained over 60% since April 2026. Today it's up almost 7%. Let's see what are the key triggers, and we have Parth with us to give more details on that.
That's right. Updater Services has touched its highest level since November 2025. So huge momentum is what we are seeing in this counter. But if we talk about the company a little bit in first, Updater Services is an integrated business services platform. They operate across two segments. Number one is IFM, which is basically integrated facilities management, and the second one is business support services. They serve across various industries like manufacturing, healthcare, BFSI, and aviation as well. Now, one interesting thing in this company is that SIS has been acquiring stake in the company. They held by the end of Q1 FY27, they held a stake of 4.88%, but on July 6th as well, they bought another 1.96 lakh shares. So the total holding of SIS in the company now stands at 5.17%. So it's pretty interesting that another listed company has been buying shares in Updater Services. Now, if we talk about their IFM vertical, it saw a growth of 10% in FY26 and now contributes to more than 2/3 of their overall revenue. The company has added around 30 new clients in this segment, and their healthcare businesses is also scaling, contributing to almost 7% of their overall revenue. Going forward, management is expecting healthy single-digit growth in this segment. Now, moving on to their other segment, which was the business support services, management has said that FY26 was a pause and reset for this vertical. Now they're focusing on restructuring, and they're deploying AI as well to reduce cost in this segment. Also, their Athena business has been showing turnaround signs. So the key things to watch going forward will be if IFM sustains that high single-digit growth as the management has guided, and also if there's any recovery in the revenue and profits in the BSS segment as well.
Understood. Well, thank you so much, Parth, for all the details. Updater Services is up almost 7% in trade. But moving on, Asian Granito is one such stock which is in focus, is up almost on the back of volumes, is up almost 18%, but we have Shivam with us for more details.
Yes, so Asian Granato has snapped 6 session losing streak, and it has been the biggest intraday advance since May 2025. In terms of volumes also, we have seen a spike of around 16 times the average volumes. However, there is no specific trigger that has for the stock, but if you look at the recent developments, the company has approved the conversion of loans for its US subsidiary Harmony Surfaces Marbles, and this loan will be converted to equity shares, which is worth around 3 crores. Now the stake of the company will also dilute to around 51% and from 100%, and the UAE subsidiary will cease to become a wholly subsidiary. In terms of Q4 results, the revenue growth had 3 crores. Now the stake of the company will also dilute to around 51% and from 100%, and the UAE subsidiary will cease to become a wholly subsidiary. Also, due to the lower operating leverage, we have seen a company has made a net loss of around 33 crores. However, on FY26 basis, if we look at the overall performance, the revenue has gone up by around 4 to 5%, and net also in terms of profit, we have seen a strong growth, which was mainly driven by on FY26 basis. If we look at the overall performance, the revenue has gone up by around 4 to 5%, and net also in terms of profit, we have seen a strong growth, which was mainly driven by domestic demand. In terms of EBITDA growth, we have seen a growth of around 15%, and overall the FY26, in terms of management outlook, the management is expecting around 6,000 crore in next to 3 years for revenue.
All right. Thank you so much, Shivam, for all the details. Well, you know, this Sunday something is, something interesting is happening. This is after a pause of 13 years, which is one of the most prestigious honors in Indian businesses, is back on July 26th, which is coming Sunday. NDTV Profit brings back the Business Leadership Award, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey, and the nominees for the financial powerhouse for this year in non-PSU category are Shriram Finance, which has built on deep customer understanding and an unmatched presence beyond India's metros. You have BSE, the institution that helped create India's equity culture. ICICI Bank, a pioneer in modern banking, combining innovation, digital leadership and financial performance to stay ahead of the curve. Axis Bank, which has strengthened its position as one of India's most dynamic and customer-focused financial institutions. Cholamandalam Investment and Finance, which has built one of India's most respected NBFC franchises. Bajaj Finance, which has redefined consumer finance through innovation, execution and scale. HDFC Bank, a benchmark for excellence in Indian banking. Well, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P Mark, the mustard specialist since 1933.
सरसों से सरसों।
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff
is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Good afternoon, you're watching the second edition of Ask Profit. Now if you look at the market, the Nifty is below one of the crucial levels of 23,900. But we have managed to hold on to the 23,800 levels. Now do remember that the Nifty is trading very close to its 50 and 100 DMA. A big fall could open a downside to around 23,650 as per the technical analyst. Now if you look at the bench sectoral indices, is the Nifty Real Estate and the Nifty Bank Index, which is the top sectoral losers in trade, while there are only two sectoral indices which are gaining. That's the Nifty Media and the Nifty Auto Index. Both are up close to around 0.8% in trade. On the F&O side, the key stocks that have been gaining is Hero Moto, Nuvama Wealth, Bajaj Holding, Cochin Shipyard, Bajaj Auto up anywhere between 2 to 4% in trade. Eternal also, after reporting its numbers, is gaining close to 1.5% in trade. On the losing side, we have SRF down around 8%, IndusInd Bank down around 6% on the back of couple of downgrades that have come in from CLSA and Kotak. And then there is Nippon Life, Petronet LNG, G Vernova, Petronet LNG down anywhere between 3 to 4% in trade. But let's get on to our actual segment, that is the query segment. Firstly, let's welcome in our technical guest, Jatin Gedia, VP Technical Research, Teji Mandi, and Mr. Chokhalingam, founder and MD of Economics Research. The first query is coming in from Shankar from Bangalore. It's on Jyoti Labs. He's planning to buy around 500 shares from 2 months perspective. Jatin, any view on Jyoti Labs?
I would suggest to buy only above the level of 205. On the charts, the trend is negative. The trend reversal shall happen only about 205 levels. So about 205, the next target area that we are expecting is 219. So conditional buy about 205.
Query is coming in from Navendu from Bihar. He wants to know whether is it a right time to buy SRF shares. He's a long-term investor. Mr. Chokhalingam, any view on SRF?
Yeah, certainly for long term one can consider. It's one of the leaders and the most efficient chemical producers. Today's steep fall also is a good opportunity, but short term, I doubt whether one can make any meaningful return, but certainly beyond 18 months time frame, it is quite possible to make a meaningful return.
Next query is coming in from Ramayar from Mumbai. It's on BHL. He's holding 1200 shares, bought at an average price of 410 rupees. He wants to know the short term outlook and target, if any. Jatin, on BHEL?
The outlook for BHEL is positive. The overall trend is positive. Last week it did give a breakout. However, it is retesting the breakout. So 395 is a very crucial support. On the upside, from a short to medium term perspective, we are expecting 460 to 478 on the upside.
Okay, the next query is from Rajesh from Hyderabad. He wants to know, Mr. Chokhalingam, actually it's for you. He wants to know if you could suggest him any good pharma in the stock in the mid and the small cap space which has a good growth potential.
I would suggest FDC. More than 90% of the revenues are from the domestic market. Strong balance sheet, lot of cash on the books. March result was also very impressive. I expect decent results from June quarter also. So the market, strong balance sheet, lot of cash on the books. March result was also very impressive. I expect decent results from June quarter also. So this is the one stock I have a strong conviction. Personally also, we have invested in the stock.
Okay, Keynes Tech at current levels from medium term perspective. Jatin, any view on this?
Yeah, the overall trend for Kane stake is negative because it's forming a lower top, lower bottom structure. So I would suggest to wait for lower levels or the trend reversal to happen above 3,600. Only then we can enter. Otherwise, the trend is still negative.
The next query is from Joshi from Tiruvananthapuram. He wants to know whether can he buy Moil or Balkrishna Industries from long-term perspective. Mr. Chokhalingam, any view here?
Moil, just because it has been beaten down, one can buy short to medium term. But in the long term, I believe there will be some concern because post recent judgment, a lot of state governments would keep resorting to hike in the royalty on the minerals. But definitely in the short to medium term, there is a potential of gaining 15 to 20% because it has been beaten down a lot. And also the rupee depreciation will improve the realization because landed cost of manganese ore will be much higher.
Dipti from Chennai is holding 276 shares of Sterling Wilson Solar, bought at a price of 650. Should she sell, hold, or buy more? Mr. Chokhalingam, any view here?
One can hold it, wait, it's only problem is that.
Or buy more. Mr. Chokhalingam, any view here?
One can hold it, wait, it's only problem is that quarterly results are really highly volatile. One can hold any small decline also, one can consider accumulating it.
Next query is on Bajaj Housing Finance. Sujan is holding 300 shares, bought at a price of 114. Currently sitting on a loss. Mr. Chokhalingam, should he add more for long term or sell it and book loss?
This is a fairly priced and a decent price to hold. I won't say that one should sell this based on the valuation because it's around 3 times price to book value, which is a very fairly one for housing finance company coming from the reputed group. In case it corrects 5-10%, then one can consider buy. Otherwise, it's good to hold for medium to long term.
Next query is from Jayakrishnan from Kerala. He wants to know at what level can he enter Ultratech for the next 6 to 9 months. Jatin, any view on this?
Yeah, the Ultratech Cement, the 200-day moving average is placed at 11,400. So that would be a good end.
Any view on this?
Yeah, the Ultratech Cement, the 200-day moving average is placed at 11,400. So that would be a good enter, a good level to it. Area is 13,000, 13,200.
Okay. The next query is from Arjit from Tamil Nadu. He's holding 24,000 shares of Greaves Cotton, bought at a price of 223. Can he hold for the next 6 months? Jatin, any view here?
Yeah, the overall trend for Greaves Cotton is positive, considering that he has a large chunk. He should consider some profit booking at current levels, and on the upside from a 6-month perspective, we are expecting levels of 270 to 285.
The next query is from Saurabh. He wants to know the view on Glenmark Pharma. He has bought 30 shares at a price of 2,234. Can he continue to hold this counter for long term, Mr. Chokhalingam?
I believe trailing P is around 21, which is a quite decent valuation to hold for medium to long term.
Okay. The next query is from Bindu from Hyderabad. Is it a good time to enter transformers and rectifiers for long term, Mr. Chokhalingam?
Definitely yes, because the government proposal to increase capital expenditure on power transmission projects is enormous. So these kind of companies would definitely the beneficiary of that. So for long term, it's a good to buy and hold for at least 2 to 3 years.
Okay. Ashwin from Chennai has bought 271 shares of M&M Finance at a price of 375. Any short-term target on this, Jatin?
Is overall in an uptrend from a short-term perspective. 412, which is the previous swing high, is a good resistance area. So that should be kept as a target area. If he is holding long, it should continue to hold with a trailing stop loss at 364.
Okay. Sunita from Hyderabad has got allotments for SBI AMC in the IPO. Should she hold or sell? Mr. Chokhalingam, any view on this?
I think one should hold for long term. Perennially, the AMC business is going to be a growth story, and the SBI fund has done reasonably very well. I think it's a very good stock to hold for medium to long term. One can in fact consider buying it if stock corrects 5-10%.
The next query is from Sunil from Vadodara and is for you, Mr. Chokhalingam. He wants to know your top pick for medium to long term perspective.
Medium to long term perspective, yes. One is Nesco, and second is FDC Limited, and then Bharati Hexacom, and fourth one CDSL. Among these four stocks, Nesco and FDC, we have invested in line with the compliance process.
Okay. Tushar from Jaipur is holding 800 shares of DAM Capital, bought at a price of 172, currently sitting on a loss of 7%. Should he hold, average, or exit? Jatin, any view?
The trend is negative. My suggestion would be to exit.
Okay. The next is a caller query coming 7%. Should he hold, average, or exit? Jatin, any view?
The trend is negative. My suggestion would be to exit.
Okay. The next is a caller query coming in from Kochi. Vinod, you can go ahead and ask a query.
Good afternoon, sir. I hold 500 quantity of Cipla some months now. Is it good to hold or exit and reinvest elsewhere? Would you suggest, sir?
Hold for long term?
Mine was a medium term. I do this channel trading.
Okay. Jatin, any view on Cipla?
Yeah, so Cipla is trading very close to its 200-day moving average, which is placed at 1348. So I suggest to continue to hold as of now for a medium-term target of 1500 to 1550 on the upside.
Sriram from Pune is holding 400 shares of Wonderla Holidays, bought at a price of 700 rupees per share. Any outlook on this for the next 6 to 12 months, Jatin?
Yeah, see, overall the stock is trading in a downtrend. My suggestion would be to exit because we are expecting levels of 420, 400 on the downside.
Vijay from Chennai wants to know the short-term target on Hindalco here, Jatin. Jatin on Hindalco.
Yes, for Hindalco, we are expecting a pullback towards the 200-day moving average, which is placed at 996 on the upside. So 4-5% of up move is likely from a short-term perspective.
The next query is from Lakshmi. She is holding shares of HDFC, but given the bearish view that we are seeing currently, should she exit or continue to hold? Mr. Chokhalingam, any view on this?
It has done pathetically on the stock market, but any analyst giving sell call at this price would be very risky, to be frank, though it has failed miserably in the past because valuations are appealing. It started improving the credit growth also. So I would not dare to give sell call. I would rather take a courage to say that you buy at this price for medium to long term.
Okay, the next query is from Preeti from Raipur. Wants to know the short-term view on Sharda Chem. She's currently sitting on a loss for the next 12. She's sitting on a loss of 12.5% and can continue to hold this counter for the next 3 to 4 months. Jatin, any view?
No, sorry, I can't get the code actually.
Sharda Crop Chem.
Yeah, see, the stock is in a downtrend and we are expecting levels of 800 on the downside. So exit would be the suggestion.
Anil Nair from Abu Dhabi is holding 990 shares of Shipping Corporation of India, bought at a price of 348. He's holding it for the last 2 years. Should he continue to hold or sell? Mr. Chokhalingam, any view on Shipping Corp?
One can hold it. I don't think in the short term one can make a big money, but then, in the recent rally in the metal prices, the replacement cost of replacement value of all the shipping companies have gone up substantially. So NAV is quite high these days for many shipping companies. So one can hold it.
The next caller query is coming in from Hyderabad. Kiran, you can go ahead and ask a query.
Good afternoon to all the panelists. This is Kiran Kumar. I bought J&K Bank shares of 1337 numbers.
Okay.
Okay. With a price of 183.65.
Okay.
The thing is, almost I lost 13,000. Like, what will be in a short term? Maybe another week. It can be recovered, or What should I do? Let's suggest for this.
Jatin, any view on J&K Bank? Do you think the stock could recover in the next 1 week or so?
Yes, definitely, because it is trading currently exactly at its 20-day moving average, which is 171. So my suggestion would be to hold for 1 week. The trailing stop loss should be kept at 166. On the upside, we are expecting levels of 201 to 205.
Okay, the next query is from Dilip from Kolkata. He's holding 100 shares of LG Electronic, bought at a price of 1,542. Should he hold for long term or exit? Mr. Chokhalingam, any view?
I would dare to give sell call and buy ITC. That gives me more confidence than LG Electronics in terms of future growth and valuation comfort.
Okay, the next caller query is coming in from Karnataka. Prasad, you can go ahead and ask your query.
Yes. Good afternoon.
Good afternoon.
Yeah, I do have holding Vedanta oil and gas shares of 12,000 rupees shares with a 41 rupees of average. So what should I know?
Okay, and you can hold for long term?
Yeah, I'm not thinking for long term. I'm thinking for short term, very short time.
Okay, Jatin, any view on Vedanta oil and gas?
See, in case of Vedanta oil and gas, the trend is still not confirmed. It is in a downtrend, and the near-term outlook is fall towards 30 rupees on the downside. So you can continue to hold, but below 30, there would be a free fall.
Okay, the next query is from Lavanya from Iluru. She wants to enter Rubicon Research. Should she do that, Mr. Chokhalingam?
Sorry, I haven't studied this stock, not able to give.
Jatin, any view on charts?
And for Rubicon Research is positive. The support is placed at 1340 on the downside. Immediate resistance is around 1660, where we have the weekly upper Bollinger Band. So the view is positive on Rubicon.
Okay, Ashwini from Chennai wants to know the long-term target for CSE. She's holding 1,000 shares, bought at a price of 197 rupees. Should she hold or book loss, Mr. Chokhalingam?
Stock name?
CESC.
Okay. One can hold for long term.
Okay. The next query is coming in from Uma from Bangalore. It's on CDSL. She's holding 152 shares, bought at a price of 1,194. Can hold for long term, Mr. Chokhalingam?
Certainly, yes. In fact, we have a buy recommendation. I am extremely bullish on CDSL because the kind of IPOs coming in and the small mid-cap segment also started recovering. And this still has a 80% market share. And also large IPOs are coming, NSE and Geo. So the business prospects for CDSL look very robust, both in the short term as well as for the long term. So I would maintain a strong buy on the stock.
Well, with that, let's enter our rapid fire segment. Mr. Jatin, Mr. Chokhalingam would request your answers to be short for this segment, specifically starting off with Padma from Bangalore, currently holding Canara Bank, 280 shares at a price of 126. Should she continue to hold this, Jatin?
The trend is negative, exit.
Pravin from Chennai wants to know whether it's the right time to accumulate Hitachi Energy. Mr. Chokhalingam, any view?
No, valuation comfort is not there.
Jake from Kochi wants to know whether it's a good time to enter India Mart from long-term perspective. Mr. Chokhalingam?
Sorry, I have not studied it.
Okay. Dipti from Chennai wants the view on Vari Energy. Should she enter this, Mr. Chokhalingam?
At best, one can hold. I expect a lot of competition in the solar industry.
The next viewer has a few shares of SG Mart. Should he sell or hold? Jatin, any view here?
Stock name, please.
SG Mart.
Continue to hold. Overall trend is positive. 700 target. Stop loss 640.
Ram from Mumbai is holding shares of Vedanta Iron and Steel around 4,000 at an average price of 31.5 rupees. What's the short-term outlook on this, Jatin?
I can't get the code, sorry.
Okay, Mr. Chokhalingam, any view?
Yeah, one can hold. Iron and Steel outlook looks good in the short term.
Sunil from Bangalore wants to know whether should he continue to hold NetWeb Tech. He has already few shares at an average price of 4,450. Mr. Chokhalingam?
Only the risky investors can continue to hold at this price.
Okay. Jhansi from Chennai is holding Ola Electric shares 200, bought at a price of 88. Can it recover in future, Mr. Chokhalingam?
I doubt. Recovering to that level, maybe 10-15% very much possible tactically.
Bharat from Andhra Pradesh wants to know whether it's the right time to enter Gandhara oil. The stock is up 20%. Mr. Chokhalingam, any view?
I'm sorry, I've not studied it.
Jatin, any view on this?
Yeah, it's up 20%, but the risk reward is not favorable for entry at current levels.
Okay, Christopher from Chandigarh is holding 1,530 shares of Fujiyama Limited, bought at a price of 329. Can he hold this counter for the next 5 years, Mr. Chokhalingam?
Sorry, I have to study it. I haven't studied it.
Okay, any view on this, Jatin?
Sorry, the stock name?
Fujiyama Power. Okay, let's move on to the next query. It's coming in from... okay, the viewer hasn't mentioned its name. It's on L&T. He's holding 330 shares, bought at a price of 2,100. Should he hold this counter for the next 1 year, Mr. Chokhalingam?
Certainly, yes. One can buy also at current price.
Okay, the next query is... Okay. The next query is from Ms. Jaya from Tamil Nadu. She is holding few shares of HDFC Life. Can she hold this counter for the next 1 year, Mr. Chokhalingam?
Yes, opposed to correction, valuations are attractive.
Jaya from Tamil Nadu. She is holding few shares of HDFC Life. Can she hold this counter for the next 1 year, Mr. Chokhalingam?
Yes, opposed to correction, valuations are attractive. Definitely good to buy also for 1 to 2 years.
Well, that was the last query that we could take on this edition of Ask Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है. पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ.
The mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में.
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen. What fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the
nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. We're coming to you live from the NDTV Profit Suzlon studio. It's another dull day for the Indian equity markets, and really this is par for the course on account of geopolitical tensions that have risen over the course of the last 12 days. And there's one factor that's having a bearing on the sentiment for India in particular, and that is crude oil. You have Brent crude that is spiked. So before we take a look at the internals of the Nifty 50, take a look at this number, because you have Brent that is once again above 98 to the dollars to the barrel, and you know what that means. That's going to have a bearing on India's current account deficit. It's going to have a bearing on inflation down the line. It's also possibly going to have a bearing on several companies that have crude related products that they depend on. Say, for example, the consumption space, the FMCG space. You had quite a few of them that had to take price increases over the course of Q1, and that might just continue at this point with crude having gone up. So what's happening today? You have the benchmark that has fallen to a low and recovered just a tad bit. You are seeing buying at those lower levels, and so we're hovering very close to that 23,900 mark. You stayed above that for quite a bit, and then you saw a breakdown. Let's take a look at the internals for the Nifty 50 and see what's moving the needle today. You have more green on the screen than you did at the start of trade today. In fact, you had just about 10 gainers or so at the start of trade. You have more at this moment, but at the bottom of the screen you have Adani Enterprises, Nestle, where there seems to be a little bit of profit taking coming through. You had a few brokerage notes that came out and said that the numbers that they posted in the first quarter were incredible, with a 24% increase in top line and significant improvement in margins as well, or margins held pretty strong. But at the same time, they said that the valuation comfort is just not there, and so money being taken off the table for Nestle. Shriram Finance, you will notice, is a stock that has a pretty high beta, and so whenever there's a move in the benchmark either one way or the other, this is a stock that moves pretty sharply in that direction. So it's down about 2.5%. Adani Ports also losing 2%. JSW Steel, Grasim, Indigo, Dr. Reddy's Laboratories actually having come off quite substantially from the low point of the day. Quite a few earnings reactions as well, and a few reactions to oil having gone up as much as it has. Bajaj Auto continues to gain ground, and this is on the back of a pretty strong set of numbers. It was a belated move for Bajaj Auto yesterday. It gained 5%, but it's building on those gains. Eternal also reacting to numbers to a certain extent, and so therefore is one of the stocks to watch in trade today. SBI Life, M&M, TCS, Eicher Motors, and then you read down the list. Take a look at the contributors chart for the Nifty 50 just to see what's really contributing, and you will see similar names. HDFC Bank has made it to this list quite a bit over the course of the last week. It's lost even more ground today. Reliance Industries, ICICI Bank among the heavyweights that are posing a little bit of a challenge for the benchmark Nifty 50. M&M, Eternal, TCS, Bajaj Auto among the top contributors on the upside. Take a look at the broader markets as well. The mid-cap index also having gone through its share of fluctuations through the day, now trading not too far away from the low point of the day. Remember, it had a pretty weak start, but it actually gained quite a bit of ground, went nearly there to the close from yesterday. So too for the small cap index, both of those indices losing a tad bit of ground. In the past, we've seen a little bit of buying come through from those lower levels, and one wonders whether the last hour of trade will see that as well. The advanced decline ratio, as you can see from here, it's mirrored in the way those indices have moved at that point. They had that sharp tilt downwards. The advanced decline ratio is simply telling you the same story. Pull up the sectoral heat map and you will see that most sectors are indeed in the red. Just media, and this is a sector with very few stocks, and those two have a significant bearing on that. Auto is doing okay, with Bajaj Auto and Aisha also doing reasonably well. IT is just about flat. Among the losers, you have Realty, which as a pack has done incredibly well, and then you have Energy, you have the Nifty Bank that is losing about 1% or so on account of those private sector banks losing ground. But let me go across to Kunal Rambia as well as Pankaj Pandey joining us this afternoon. Gentlemen, thanks so much as always for taking the time, and good afternoon to you. Quite a few stocks to talk to you about on the earnings, Pankaj, but first, before we do that, let me go across to Kunal on what he thinks the benchmark move will be, because Kunal, that 23,800 mark is proving to be a crucial support, and for now at least we seem to be holding above that.
Absolutely, Alex. Good afternoon. Thanks for having me on the show. So as far as Nifty is concerned, as you mentioned correctly, 23,800, this mark is held on by Nifty 9 times since 8th April. And if you look at the 15th June till now, it's been 5 times Nifty has bounced from the same level itself. And I think it made the low near that level for the day also. So I think this bounce is likely to continue. Unless it breaks 23,800, this decline can be considered as a buying opportunity.
Got it. I do want to go straight to my colleague Shreyansi, who's joining in, to put into perspective, Pankaj, what is happening on crude, because the first question I have for you is related to that. So right now, and you saw that headline, the fact, I do want to go straight to my colleague Shreyansi, who's joining in, to put into perspective, Pankaj, what is happening on crude, because that crude oil, Brent crude, has crossed the $98 per barrel mark. But what's the move over the last month or so been, and why is it going up as much as it is? Shreyansi.
Absolutely, Alex, and it's a whopping 31% so far this month. And just when you talk about the last 10 days as well, you're looking at a 14.6% uptick coming in just the last 10 days itself. And when you talk about some of the street forecasts, the street in fact is quite surprised. It's been blinded by that escalation really coming in. When you talk about some of the forecasts as well, you do have most Q3 forecasts that have been breached thus far. When you talk about JP Morgan's $86, or if you talk about Morgan Stanley's $90 per barrel target as well, that's been very, very breached. And just in the last trading session as well, you did have a $5 surge coming in. So that should tell you everything that you need to know about how quick this sort of surge is. When you talk about Goldman lastly, their upside case is somewhere close to $120. So they're the ones that are still holding on. But do remember that this is their bull case. It's not their base case. It's not the case that they're going with. This is what they had suggested if the escalation persists. So right now, you do have the bears really that banked on that de-escalation, and that's really surprised them, at least on the forecasts.
It sounds odd when you say bull case for something like crude, because from India's perspective, it's always negative. You're not a commodity trader, of course, you're a consumer of crude, and a buyer of crude will always be worried when the prices are going up. Particularly, and Mahima joining in. Mahima, say hi.
Hi.
But particularly for packs like, for example, the FMCG pack, where a bunch of these companies had to undertake price increases. HUL, we were seeing practically every other week. Even the paints companies, Asian Paints and the others, had to undertake price increases to keep up with that increase in crude, and once again that is coming through.
Yeah, that is. And while we were talking about those price hikes, the overall impact is something that would have been recorded in second half, and now that will spill over probably in the first half of FY28, which could be concerning because of this rising prices. So paints, your consumption, because FMCG companies use around 25 to 30% in terms of their overall raw material pricing comes from crude. For paints, it's as high as 50 to 55% %. For tires also, it is pretty high, between that 40 to 50 odd %. So all of these sectors get impacted because of rising crude prices. Pankaj, a very good afternoon to you. First of all, I'll come to you on the back of this sudden spike in the last 3-4 days we've seen, and this will have an overhang on a lot of crude based companies, and that will impact their margins and overall profitability. What do you make of this?
Yeah, hi, good afternoon. Thanks for having me. I think crude obviously directly, indirectly will impact most of the sectors. And I think, just to sort of put one number, last year we imported somewhere about 11 lakh crore worth of crude oil, and first quarter our import bill was somewhere about 4.5 lakh crores. So in a way, it is going to exceed the overall capex what we are going to do. Now, coming to sector specific, for example,
cement companies came out with decent set of numbers. Now again, if the fuel prices were to sort of go up, the challenge is going to be there for them. Similarly, you look at auto companies, especially two-wheelers. Companies like Bajaj Auto have taken a price hike and also have absorbed the cost of 4.5% and managed to still give a stable quarter-on-quarter margins. But further hike from here on is going to pose challenges for a lot of sectors. You already mentioned some of the sectors, but I think what it is going to probably do is that it is going to sort of derail any kind of a upward bias till the time it does not come down.
Pankaj, then the question arises, if you are investing for the longer term and you're invested in some of these companies, what do you do? Because from
till the time it does not come down.
Pankaj, then the question arises, if you are investing for the longer term and you're invested in some of these companies, what do you do? Because from the March lows, they may have come off the top. But should you then take some money off the table at this stage? I know that it's not something that you would normally suggest for a long-term fundamental investor, but these are opportunities when you may want to create a little bit of cash in your portfolio for opportunities to deploy down the line.
So, Alex, very difficult question because at least we would want to believe that crude is not going to remain higher for a longer period of time. Hopefully, this war is not going to probably extend for much longer. So, I think it is very difficult to time a lot of things with respect to the crude oil price movement. But having said that, I think overall sense is that this is not the time sort of take money out of the table because see, when we look at numbers, except for crude, most of the macro variables are fine. Consumption is absolutely fine. Even the FPI inflow, at least in the first half of July, we are clearly seeing a change in bias, at least from the FPI perspective also. So the only missing link or only damper is the high crude oil prices, which we would want to believe that is not going to sustain. Yes, it is unnerving at this point in time, given the fact that crude has been sort of inching up. But we would want to believe that it's not even good for the economies like, say, US, where the 10-year yield has crossed somewhere about 4.68 and heading into elections. So somewhere down the line, we would want to believe that crude or this entire scenario would settle down faster. Timing is very difficult to tell.
Okay, got it. Kunal, quickly, your picks. Will these be on the buy side, the sell side? What is it that you're seeing on the charts, and which are the stocks that you would be picking for trade?
Mahima, again, as we saw the markets actually bouncing from those 23,800 levels. So I think I'll go ahead with the large caps. The first is Reliance Industries. At this level, I think after the massive correction, the counter is available at dirt cheap rate with the stop loss of around 1,255. One can go long on it. The targets can be 1,350 to 1,375. This is the view for the next 15 to 18 days. And the second is look at Bajaj Finance. I think this counter has also done remarkably well, correcting from the high. So now this side, I'm going on the short side with the stop of 1,065. This is a very short-term bet which I am suggesting with the stop of 1,065. One can short Bajaj Finance and the targets can be 975 to 980. So one is positional, one is a short-term.
All right. Okay. So those are the picks, of course, that Kunal has on his radar. But let's move on to our stock of the day, and the stock that we've chosen today is NTPC Green because that's the one stock that's standing out tall in such weak markets, right? On the back of its strong Q1 earnings, and we have Varsha joining by to give us as to what's worked this quarter. Varsha, over to you.
Well, a fantastic set of numbers, and operational capacity has led to this strong set of numbers, which rose to 10.7 gigawatt versus 6.8 gigawatt last year. Also, if you see, the generation actually followed, the generation growth followed commissioning of new projects, and hence this is also on a positive side. The acquisition of Ayana, if you see, provided a major boost to scale for NTPC Green, and large order book and strong pipeline, if you see, remains a key highlight and also provide future growth visibility for the company. Talking about the four numbers, fantastic set of numbers. Revenue were up almost 62%. There was a strong uptick in EBITDA also, which was up almost 64%. EBITDA margin, if you see, was at was at around 89% versus 88.7% last year, and net profit also rose at a higher pace of around 38%. Talking about the capacity expansion, let's pull that also. The operational capacity reached almost 10,671 megawatt, and they've also added 595 megawatt in Q1 FY27, which the capacity is almost 1.6 times higher. The capacity reached almost 10,671 megawatt, and they've also added 595 megawatt in Q1 FY27, which then last year. Onto the Ayana acquisition, which will add over 3.3 gigawatt of operational capacity, and which also adds 1.25 gigawatt of contracted capacity, and also strengthen company's presence across multiple states. Lastly, onto the order book, the contracted and awarded capacity stand at around 16.3 gigawatt, and if you see, pipeline projects are at 3.4 gigawatt, and total portfolio now exceeds almost 30 gigawatt. So overall, a strong set of numbers considering the operational capacity and of course the generation growth which has followed this capacity, and hence you're seeing a very good set of numbers when it comes to revenue and profitability for this company.
All right, Varsha, thank you so much for getting us those details on NTPC Green. Pankaj, I'll quickly come to you. You heard what Varsha said, and this is one of the stocks that's really, has relative strength versus the market, right? What do you make of the earnings, and do you think this will be a top pick in the space?
Actually, when you sort of look at from the IPO price, the stock has taken a good amount of beating, and at lower levels, a bit of a bounce is what we're seeing. So that is not going to change up. I see in entire power as a space, I think transmission is something which we like the most. I don't think generation is an issue whether you look at across segments. In fact, a lot of these thermal power plants are sort of operating at critical levels. So I think on the transmission side, power grid is our topic, and besides that, I think CG power is what we like. So transmission is something is a bigger bottleneck at this point in time, and that is where we feel the most of the opportunities will come from.
Got it. Kunal, on the charts for this broader list of stocks, they've been through chop and churn recently and pretty volatile moves, right? So how do you trade them?
Yeah, again, Alex, to be very, very honest, because the markets are choppy, the stock-specific moves are likely to continue. Just taking an example of NTPC Green. Now, this counter has just reversed from 91, 92, but if you look at the behavior of the counter since listing, this counter has taken multiple times support near 85, 87. So I will not be keen to buy at the elevated levels. Rather, I'll wait for the bargain buying opportunities in most of the counters. This counter, one of them being an example of it.
Okay. One of the stocks of the day, actually, Gandhar Oil. Pull up the chart while we're talking about it, and it's at upper circuit as things stand right now, and for good reason. The numbers look particularly good. We're going to be talking with the management in just a bit, but before we do, let's head across to Parth. Parth, I want you to give us the top 3 or top 5 takeaways as you see it.
That's right, Alex. Gandhar has reported a bumper set of numbers, and here are the top 5 key takeaways from them. The revenue has seen a growth of 92% year on year, while PAT has also jumped 7 times to reach a record level. The second takeaway is that EBITDA has also seen a growth of 6 times, while EBITDA margins have expanded to 16.2% versus just 5.1% year on year. The third takeaway, gross margin spread has increased 3.4 times year on year, which was led by better product mix and stronger realizations. PHPO remains the key growth engine for the company, growing at 18% year on year to reach 68,000 kiloliters of volume. And the last takeaway being that Gandhar still holds a 26.5% market share in India's white oil market and 9.6% market share globally, while they are continuing their expansion across Africa, Asia Pacific and South America as well. So these are the top takeaways which has led to the upper circuit in Gandhar Oil today.
All right, thanks for that quick takeaway link. Let me head across now to the management. We've got Ashlesh Parekh, Joint Managing Director of Gandhar Oil Refinery India, joining us. First of all, Mr. Parekh, thanks so much for taking the time, and congratulations for what looks like a great set of numbers. 7x jump in PAT is certainly something that got the street to stand up and take notice. So first, how did that come to pass? What are the factors that led to it? Seemingly this PHPO volume uptick has helped in a big way.
Yeah, thank you so much for inviting me on the call. Yes, we had reported a very strong set of numbers yesterday. The company had reported an overall increase in profitability, not only in the profitability but also on the revenue front. I mean, the main key driver is still our personal care, healthcare performance oil business, which has grown more than 50%, in this quarter. We anticipate this stream to continue even for the next 1 or 2 odd quarters. Plus, we have a good set of customers, in this matrix. We have various multinational FMCG customers and pharmaceutical customers where we are offering our products and services to.
Okay, Mr. Parekh, hi, Mahima also joining this side. You've seen a sharp uptick in terms of your gross margin spread. Now, I understand that a lot of this is also because of, the commodity tailwinds that the quarter has witnessed. But just want to get a sense that, and this is translated to the EBITDA margins as well. So, how much of this is on account of the tailwinds that have come in from commodity prices versus how much of that has been structural, considering the product mix? And going forward, what is the guided range of margins that you expect by the end of FY27? Even if you can give us some perspective by the end of FY28 as well.
Yeah, I mean, rightly said, obviously, because of the Middle East crisis and, the Hormuz closure, we had, if we planned efficient, planning of our key raw material, which is base oil. Because of our efficient planning of raw material, we could, ensure uninterrupted supplies of our finished product to our customers. Having said that, obviously these margins are uptake because of the increase in the crude oil and our finished product pricing across this quarter. But the realistic margin, obviously, we anticipate to be in the range of at least 12,000 to 13,000 rupees per kiloliter.
12,000 to 13,000. And just for perspective, in the quarter gone by, where did it stand at?
28.
In the quarter gone by, it was roughly around 18,000. 8,000. It was last quarter. It was 8,000 rupees per kil. Sorry.
So okay. So can you repeat those numbers for me? I just want to be absolutely clear, Mr. Parekh. Yeah. What you're saying is, what is the base case scenario for the margin that you're getting?
So the last quarter we did 8,500 rupees per kiloliter. Yeah. We anticipate, the margin, to improvise to at least 11,500 to 12,000 rupees per kiloliter for the quarters going forward. This was an exceptional quarter because of, the tailwinds we had in this specific businesses. Going forward, we anticipate the margins to be in the range of 12,000 rupees per kiloliter.
Okay, got it. The other aspect, Mr. Parekh, is with regards to capacity expansion, because your Taloja plant is already at a very high utilizations. Do you have any capex plans in FY27? If yes, what is the plan going forward? What is the amount that is going to be deployed, and what is the funding requirement for that? I mean, if you can give us some sense on that.
Yeah. So across the three facilities, our plants are around 97% utilized today, working on a 2-shift basis. We anticipate, for the increased requirement, we can work on 3rd shift. But having said that, we have, land at both our facilities for further expansion. We are still drawing, the amount of capex that will be required for the this upcoming year, which will be presented to the board for approval, and we'll have more clarity, in the quarter to come. But on a ballpark number, we will be planning a capacity expansion roughly in the range of 30 to 40 odd crores.
Okay, capacity, that's this financial year, is it?
Yeah.
Okay. Just want to understand, now you've talked about PHPO volumes going up, and obviously those tailwinds, as you've pointed out, with regard to the pricing and the fact that you had inventories, right? So that's going to ease out, one would assume, over the course of the remainder of the financial year. But having said that, what is the kind of margin contribution that the PHPO segment has vis-a-vis the other segments that you play in?
See, if you look at the margin metrics, we have the three categories, which is the PHPO, which is personal care, healthcare oil. We have the PIO, which is the process and the insulating oil segment, and then we have the lubricant segment. The PHPO, obviously, the margin contribution is 15 to 18% higher compared to the other categories.
Okay, Mr. Parekh, in terms of your global expansion, because you've highlighted expansion into countries like Africa, Asia Pacific, even South America for that matter. Just want to get a sense as to what's the plan here, because do you expect this to be distribution led? Do you expect this to be in terms of partnership, local manufacturing, and in terms of the contribution that's coming in from international markets? How much will that rise by the end of FY27, and what will the mix look like?
See, we have recently set up, we have just taken an approval from the board for setting up, an office in South Africa, which going to do it in this quarter. Having said that, there will be some local partnership in place where we anticipate, to manufacture certain finished products out there. The revenue numbers are still being worked out. Obviously, it's little too premature for me to give you the exact numbers on, what will be the revenue mix. But having said that, the board is quite optimistic and we are quite positive in terms of the outlook there. And we anticipate, the revenues will start keep kicking in, from within the next 2.5 years.
I'm just looking at a snapshot, Mr. Parekh, over the course of the last 3 financial years, right? In FY26, you saw growth of 9% at the top line. In FY25, it was actually a downtick of about 5.3% and just about flat in the financial year ending March 2024. So based on what you're seeing on the ground right now and your plans for FY27, where do you anticipate that you will end full year top line at? And what is the plan for the next couple of financial years?
See, we anticipate to, close this year at least to 4,500 odd crores. Having said that, if you look at the product mix we have, revenue is a component of the volume, is the component of the volume. But normally we derive our performance based on the volume growth. Even historically, we have achieved, almost a double-digit volume growth across the years. So we anticipate, maintaining that run rate and increasing our volume growth, which will in turn add in the revenue growth.
So therefore, and I see that your operating profit has jumped very significantly. So one would assume that FY26 as well, you undertook certain changes in the way that you sold your products. Is that going to accelerate further? And so if you're saying 4,500 crore of top line in FY27, what is the kind of EBITDA that you will generate?
It's too early for me to give you an EBITDA level, but obviously we anticipate, to continue this performance in the quarters to come. So this is the level we anticipate to have the EBITDA.
Blue sky scenario, Mr. Parekh, not FY27, but FY29, right? 3 years down. 3 years down. What is the blue sky aspirational scenario based on all of the things that you're putting in place right now? Where would you like to see EBITDA?
So FY29, we anticipate, the EBITDA to be at least at least around 500 crores or level from where we are today.
Mr. Parekh, always a pleasure, or rather, this is the first time I'm speaking. I'm hoping that we will speak soon enough. Thanks so much for taking the time.
Thank you so much.
All right. Well, that was the management of Gandhar Oil and arguably the stock of the day, right?
Yeah, I mean, I'm just taking a look at the numbers.
Yeah.
I mean, operating profit in FY26 was around 234 crores. If he's saying 500 crores by 29, that means he'll be doubling, at least in terms of EBITDA, by the end of FY29.
Yeah, well, there you go. It's a steep target, but I did ask him, blue sky scenario, right? So this is based on everything going absolutely per plan, and you know how often that happens. So take this with a pinch of salt and watch this company. I certainly will. Let's head across to Somit Sarkar now to find out what he's finding out from his checks of the dealing rooms, and I'm quite curious about that. Somit?
The first stock on the list is JSW Cement. Now there are sell flows on the HNI desk. Dealers expect a block deal very soon in this counter. For Vishal Mega Mart as well, there are sell flows on the PMS desk, and post the Q1 numbers, dealers are now expecting the block deal to come in very soon from the promoter side. So keep an eye out for Vishal Mega Mart as well. When it comes to Crompton Consumer, there are buy flows at lower levels on the institutional desk. Dealers indicate that fundamentally the stock is quite good, and hence this buy flows coming in at the lower levels for Crompton Consumer. And multiple stocks based on results, Bosch, Medanta and Piramal Pharma, there are buy flows on the large HNI and PMS desk. Dealers are expecting a strong Q1 numbers from all the three names. And on the flip side, there is Force Motor. There are some sell flows coming in, and dealers are expecting a weak Q1 numbers to come in from Force Motors as well.
Okay, so very interesting set of companies. Keep an eye on these stocks. They tend to react over the course of the next few days. I want to go back to you, Pankaj. If you heard that conversation that I had with Gandhar Oil, and it's possible that you don't have coverage on the stock, understandably so, right? It's relatively smaller. But what did you make of what the company was saying and the management was saying? His EBITDA for FY26 stands at 234 crore rupees. Over the next 3 years, he's planning to double it through efforts that he's undertaking to improve the mix of products that he sells.
So difficult for me to comment, Alex, because see, in commodity we don't know whether the margin expansion is because of cyclical reasons or structural reasons, and that is where the challenge lies. And that is how the multiple re-rating or down-rating sort of happens. I won't be able to comment here.
Fair enough. Let me ask you then, in the same space, based on companies that you're tracking, whether there is insight that you can provide to say that if I'm looking at a company like this and anticipating that it will grow, it will double its EBITDA over the next 3 years, based on companies that you track, Pankaj, what are the metrics that I should look at and study? And maybe you can give us examples for how you see some of these stocks and companies behaving.
So, Alex, I think for any commodity kind of a business, gross margin is absolutely important, because if company is able to maintain the gross margin, then that clearly tells you that they have a bit of a pricing power. Otherwise, if you see a expansion in gross margins when the cycle is good, and when the cycle is bad, the gross margin sort of contracts, then whatever company sort of uses adjective in terms of that they provide some specialist product and all of it, does not make sense. So I think that is the most important thing when you are sort of looking at these some of these companies.
All right, okay, fair enough. The other one which is surprise today is Ujjivan Small Finance Bank, because the stock was down 4%, post which the investor presentation came out, and where the management has gone ahead and raised the guidance for FY27, and we saw the spike coming in the counter as high as almost 7%. So recovered significantly from the day's low point on the back of rising guidance by the management. And we have Shivam joining by to give us more details on what's what's actually excited the street, and what has the guidance been like, and what has it been raised to?
Right, yes. Ujjivan Small Finance Bank has seen a strong recovery from the day's low and has been up around 11%. So, there are multiple reasons that has led to this recovery, and starting with the first key reason, the management has upgraded the guidance on FY27 return on asset and has revised it upwards to 1.8% to 2%, and also in terms of credit cost guidance, that has also been upgraded to 0.9% to 1% of the average total assets, while it was earlier 1.4% to 1.5% of gross loan book. In terms of operating expenses too, the bank is investing in the AI technologies and also the analytics capabilities, and has stated that they will spread these expenses in FY27 overall. So in FY27 to operating expenses can reduce to 6.4% of the average assets. In terms of the results highlights also, we have seen that the net interest income stood at quarterly highest levels, and the loan disbursement has also gone up by around 40%, and which was led by gold loans. In terms of operating profit too, we have seen those operating profit at quarterly highest levels, and in terms of profit growth, that was mainly supported by the stable credit cost and also lower OPEX. In terms of return on asset, we have seen a slight improvement of around 1 basis point, and in margins have also been stable sequentially. In terms of asset quality, we have seen a substantial improvement, and that was due to lower slippages, and also the credit costs have declined so much. So that was the key reasons the Ujjivan Small Finance Bank have recovered this much.
Got it. Okay, Kunal, you're used to this, so I'm gonna do this with you. You've done this on different shows. We're gonna do a rapid fire. 3 stocks for me, 3 stocks for Mahima. I'm picking the top gainers. So let me throw this at you. Are you ready?
Yes.
Okay. NTPC Green. We've already talked about this. Would you buy, sell, or hold at this moment?
I'll hold.
Okay.
Yes. CI Automotive is the other one, which is down almost 11% in trade today. Do you think it's found its bottom?
No, I think the bottom can be near 400, 395 to 400 to watch out as a support.
I'm going to cheat and add a pair. Graphite and HEG generally move in tandem. So both of them, out of them, would you pick both or one?
I'll pick Graphite. Looks positive to me with the stop loss of 640.
Okay. PSP Projects is the other one, which is down 6% Buy on dips should be the strategy, or no?
No, I'll avoid this counter for now.
Hero MotoCorp up 3.7% and looking good. Would you buy into it right now, Kunal?
Absolutely. Very strong counter with the stop loss of yesterday's low. One can definitely go long.
Okay, Triveni Engineering is the last one, which is down by about 5%, but Balrampur is the other one, which has shown relative strength. Which one of these would you like, Kunal?
Out of 2, I'll go with Balrampur.
All right. Okay. So that brings us to the end of this rapid fire. I'm not allowed to say that because I keep doing that on Ask Profit. But with that, viewers, time to slip into a very, very short break. But we'll get you top by today, sir, tomorrow, although vice versa, maybe.
No, and we should say thank you so much to Pankaj and Kunal for joining in and for helping us through that. It's been an absolute pleasure. I enjoyed our conversation. Thanks so much. All right, and now before we slip into the break, just want to remind you something that we've been telling you about all week. At the end of the week, on Sunday, we have something very special lined up. In fact, it's so special that it's the first time it's taking place in 13 years. This is the return of the NDTV Business Leadership Awards 2026. And this is, of course, a trophy that is going to go to the who's who of corporate India. It is, and that trophy, by the way, is a beautiful trophy. It is the very definition of ambition in motion. It was conceived by internationally acclaimed designer Mukul Goyal, and that trophy embodies growth, transformation, and aspiration, capturing the endless and relentless pursuit of excellence that defines great leadership. You can actually find out what that trophy looks like on our social media platforms, and of course you can tune in live on Sunday. I'll be there, and so will Mahima, and a lot of other people will be there as well, so stay tuned for that. In the meanwhile, we're slipping in a very quick break. On the other side, we'll come back with markets and a lot more. Stay tuned.
As a country, the way we are growing, the way we're going forward, I think we have made great strides in the last couple of decades. Thanks to a lot of these business leaders who have achieved a lot of in their own domains, we as a country and their contributions have to be recognized. The challenge in any such process always remains is how do you distill down these varieties of thoughts into a simple idea. So the way we evolved it was we took the basic concept of infinity as a concept of excellence, continuity, a future. The feeling of the trophy of being extremely dynamic, yet it has a poetic form. It's moving in space, and the texture on the surface creates more depth to the, more feeling to the sculpture. The thing is, we created an infinity, the symbol of infinity, yet not fully complete infinity. So, the idea of excellence is that it's continuous. Infinity is a mathematical concept which is going towards the extreme level of achievement. And I think what is very important and what I hope always happens is that the trophy outlives its time and becomes an icon into itself.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों। कुछ तो बात है इस दिल में।
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed internally We challenged ourselves, etc., and we made sure that the data sources were all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners were ratified by the jury. In some ways, that's a ratification of the choice that we made.
Welcome back. You're watching India Market Close here at NDTV Profit. Of course, a quick take as to how the markets are doing at the moment and try to pull the Nifty 50. We're trading below the crucial levels of course, 23,900 levels also now. So below the 23,900 levels. It will be important to see as to how the day ends today, because we're down by about 0.6 odd percent. The bank Nifty also down by about 1%, and the broader end of spectrum continues to underperform the benchmarks. Both the mid cap 150 and the small cap 250 is down by about 1%. And now on this side of the show, we're now joined by Nagaraj Shetty, who joins us from HDFC Security, and Maresh Joshi, Head of Research of MarketSmith India, joins us now. Welcome to both of you gentlemen, and a very good afternoon to you. Seeing the markets, I know it's not a good afternoon, but I'll quickly come to you, Nagaraj, first in terms of what you make of the indices now. Considering that we've breached the crucial levels, now it's important to understand as to where the next support and resistance lies.
Hi Mahima, good afternoon. Yes, market has been showing selling pressure from the higher levels due to geopolitical tension, depreciation of INR against rupee, and rising international crude oil prices. I'm expecting some more consolidation, some more dip in the Nifty, down to around 23,650 to 700 levels. Is going to be a strong support for the market, for the Nifty especially, and a sizable upside bounce I'm expecting from the lower levels.
Okay, Nagaraj, what about individual stocks? What do you like right now?
I have two stocks from a long side. One is from automobiles side, Bajaj Auto. Chartically, this stock has been in a sharp up move, outperforming the benchmark Nifty over the last few sessions, and currently moved above the previous swing highs. The overall chart pattern is looking positive. Currently trading around 11275. One can look to buy at this point of time. 11,800 is going to be the immediate target, and one can place a stop loss at 11,000. Second one is from a mid-cap specialty chemical front, the Apigral Limited. Apigral has been in a consolidation phase, recently witnessed a sharp upside bounce back from the lower levels. Seems to have formed an important bottom reversal somewhere around 960, 970 levels. Currently showing consolidation. I'm expecting a further upside continuation pattern in this. The volume and RSI patterns are looking positive indication. Currently trading around 1145. One can look to buy at this point of time. The immediate target would be around 1210. One can place a stop loss at 1110.
1110. Okay, that's Apigral and Bajaj Auto. In fact, quite a couple of these automotive companies are actually reacting to numbers from Bajaj Auto, certainly, and Hero MotoCorp is up and about as well. I do want to go across to Pankaj Srivastav, who's Senior Vice President Commodity Markets at Oil at Ristad Energy. Pankaj, thanks so much for taking the time. Just to give us perspective on what you see happening with the crude oil prices right now. First of all, at $98 to the barrel, how much is on account of the risk premium coming through, and how much is because there are genuine worries about supplies getting disrupted?
Okay, so the supply issue is big.
On account of the risk premium coming through, and how much is because
I think one of the major constraint as far as the flows are concerned, because we observed that the flow through Red Sea is getting reduced on the 7 days average. It is now coming close to the 1 VLCC, which is basically 2.5 million barrels, which earlier used to be close to 7 million barrels. So if you are talking about the risk premium, we are seeing close to $10 to $15 a barrel risk premium in this price. And if these situations persist and we don't see any flow from Strait of Hormuz, and the Houthis are also able to control the Red Sea, the prices are going to be close to 110, $115 by end of the month, and then the August, our August forecast is it might go up to 140, $145 per barrel, and it's still, if the issue persists, both the routes are blocked. The December prices will be in the range of 120 to 125. So that is the scenario when both the choke points are basically flow routes are choked, and we will see close to almost 15 million barrels of the stoppage of the crude oil flow. And as the
I do want to ask you to explain this a little bit more so that my viewers understand exactly what you're talking about, right? So if you were just talking about the Strait of Hormuz, it's roughly 20% of global supply, and just when we saw crude oil prices go all the way down to about $72, $73 to the barrel, I'm talking about Brent here, that was when there was a considerable flow through the Strait of Hormuz.
Yes.
Now put this alongside what goes through the Red Sea route. What percentage of global supply do these two account for?
Yeah, so if you're talking about, we have to talk in terms of what is currently happening. Yes, the 20% flow was happening through the Strait of Hormuz. Red Sea route was not being very particular. There we used to see maybe 3 to 4 million barrels of the flow. But because of the Strait of Hormuz choking, we have seen close to 7 million barrel, almost half. Almost 10% of the flow started happening from the Red Sea. And now, if both are stopped, so obviously the overall flow was close to 20%. It will be in the range of 20 to 25% flow will be stopped through both the choke points. So one choke point at this point of time, you can assume 50% is being contributed from Strait of Hormuz and 50% from the Red Sea. So total flow used to be 15 million barrels, and then we see 7 million barrels is coming from Red Sea, and if Strait of Hormuz opens, again 7 million barrels. So combined both will be 20% only.
With regard to buffers, right, if you have some information or knowledge of this, there was a little bit of a lull, and so large importers like India, like China, would have shored up buffers, right? So assuming that this settles down over the course of, say, 2 or 3 weeks, and one hopes that that does take place, countries will have the ability to tide over a short-term disruption, correct?
Yes, that is right, because what has happened before this ceasefire was broken, everybody was not anticipating that the things will come to such an extent. And the people have already prepared upfront. Like the countries like India, they have a pretty much crude oil supply buffered up till month of August. And the other South Asian countries also planned for that, all the importing countries. China, we should not worry about, because China has already close to 1.2 billion barrels of the storage, and they have reduced their imports. Typically, they used to import 12 million barrels of the oil, but they reduced it to 7 million barrels. And the reason, there are a couple of reasons for that. One thing is that they have a significant inventory. They are basically withdrawing from the inventory, and then the China has to import 12 million barrels, seen a significant demand destruction also. So they got it. And because of that, the requirement of the crude was not there. Yeah. So China saved us, continued to save us, at least countries like India now. And the Russian crude is also on the block.
Certainly. So it's a dynamic situation, but thanks so much for joining and for explaining how this is going to pan out in all probability over the next few weeks and months. Thanks so much for taking the time.
Thank you.
I want to go across to Mayuresh Joshi. Mayuresh, thanks so much for waiting by patiently, but I thought there was an important conversation to have in the context of crude oil prices going to $98 to the barrel. And it's also pertinent and timely because you had oil marketing companies report their numbers, and GRM certainly look good, but they do have certain other issues. Obviously, those net losses are quite significant. So how do you look at both oil upstream and downstream companies in the context of crude oil prices going to 98, and the fact that what Pankaj was just pointing out, the fact that there are buffers, at least for now, because countries like India have shored up when there was a lull?
Afternoon, Alex. No, absolutely. I think, and because of the volatility that you've probably seen in crude prices, I think it's very difficult to make a structural call, either on upstream or downstream companies. Obviously, oil has now spiked, which might benefit upstream companies, but this has to be a far more consistent trend. And therefore, I think if this persists for a longer periodicity of time as we end the quarter, the benefit can percolate for upstream companies if crude prices stay elevated. Conversely, on the downside, I think if crude price is correct, obviously, I think oil marketing companies will see the benefit with a lag effect. You've obviously seen that in the numbers that have probably come through in terms of inventory losses that have probably got reported for most OMCs as was expected. But largely, I think because of the volatility in the price fluctuations and the sensitivity to earnings for both upstream and downstream, I think it is very difficult to take a call structurally. So I think we've stayed away from oil companies for these very basic reasons.
Right, that makes complete sense, Mayuresh. But the other stock that remains in focus is SRF. Good set of numbers for sure, but I think guidance is where the real problem was in the con call today, and that's why we've seen that downtick coming in on the counter. Let's take a quick look as to how the bull versus bear case stacks up for something like an SRF in terms of Q1 earnings. Like I mentioned, EBITDA was up almost 61%, PAT up 76%. So stellar set of numbers. But what the management has told in the con call today is that Q2 and Q3 could be weaker than Q1, and that's something that spooked the street, and that's why we're seeing pressure on the counter. The second aspect is with regards to the chemical business that saw a growth of almost 26% this quarter, but chemical business is expected to grow anywhere between 15 to 20% only going forward. So it's not going to be in that range of over 25 or 26 odd percent, and that's something that probably the street is also not like. The third aspect is with regards to the performance films segment that saw highest ever quarterly numbers and results this quarter, but going forward growth, of course, this growth was aided by temporary disruptions and panic buying. So going forward we'll have to see whether this growth is sustainable or not. The third aspect is with regards to technical textiles EBIT, which surged around 186% year-on-year basis, and this was on account of better demand, but largely this stack up and this overall margin uptick will normalize as markets stabilize, because there was a stack up happening in this entire segment because of geopolitical crisis. The last one is for fluorochemicals, where it delivered a strong set of volume growth across markets, but input costs still stay vulnerable according to the commentary coming in from the management, and this is due to the Middle East tension that's been the case so far for the entire segment. So this is the overall bull versus bear case for SRF. Mayuresh, I'll quickly come to you on the chemical segment also as a whole, right? Because the pack as a whole has been doing very well. Would you be a buyer of any of these stocks, and any quick take on SRF as well?
No, so afternoon, Mahima. So I think the chemical business is still the bulk for SRF as the market sees it. And therefore, I think the kind of commentary that has probably come through in terms of Q2 and Q3 being muted largely would mean that the chemical business and the chemical EBIT margins would be under some sort of a bump. Obviously, I think as far as the fluorochem business is concerned, both the refrigeration and the propellant business has done exceedingly well. The performance oil business has performed well as well. And also the need in terms of understanding the capex that they've probably done in terms of the robot plant expected to be put up to 25,000 MTPA capacity at 250 odd crores, assuming what China does and the demand supply dynamics. This is one brave announcement that probably SRF has done. So again, I think reaction in terms of how commentary probably was. For the space as a whole, my own sense is that niche chemical players will still continue doing well over the next few quarters structurally. Maybe a quarter or two, because of what is seen in the West Asian region, might affect a few of the supply chains for a few companies as we speak. But structurally, I think they're in a good trend as we see it. I think Navin Fluorine remains one of our top picks and one of our top holdings as far as chemical space is concerned, based on the thesis that the refrigerant business, the MPP business, and the super specialty business, and the capex thereof, and the asset turns that are expected will lead and shall lead to significant revenue growth with better growth and EBITDA.
All right, so keep Navin Fluorine on your list. Nagaraj, let me ask you about this pair of stocks then. SRF, it's probably at the low point of the day. I did see that chart, right? It's over 8% lower, so it's taking a bit of a knock. And Navin Fluorine, that
growth with better gross and EBITDA.
All right. So Mayuresh said is his preferred pick in the space.
I think SRF chartically is down, breakdown. It is a faster retracement on the downside of the last 4 or 5 weeks. The chart pattern is certainly not good. And at the lower side, I'm expecting 2550, 2500 is going to be the support for the stock price in the year to come.
Let's cut across to the ongoing Cipla conference call. They're speaking about the numbers. They weren't too good, in fact. Let's listen to what the management has to say.
These are relatively smaller in terms of size, but appreciable launches in any case. We are expecting, other than Ventolin, we are expecting 3 launches on respiratory this year. And there is one big peptide that we're also expecting. So those are large opportunities that we are quite hopeful about. But in terms of supplementing this, we continue to beef up our R&D so that we can file almost 45 to 50 products in the next 3 years. So that's something that we've not taken our eyes off, because in the US, for that matter, in any of our markets, pipeline is the core to grow. So we continue to keep our foot on the pedal in terms of investing there.
Thank you. Thank you, Rishika. We now have Vishwanath Pilla from Money Control. Vishwanath, you can go ahead.
Yeah. Hi, Achin. Can you hear me? Yeah.
Hi, Vishwanath.
Hi, sir.
All right. So that's the management of Cipla. By the way, just in case you were wondering, pull up the numbers for Cipla. You had margins that came in at 16.7% and significantly below the comparative period, 25.6%. It was expected to be a weak quarter, but this is weaker than anticipated. The EBITDA coming in 33% lower at 1,192 crore rupees, and that's had a bearing on the PAT as well. The PAT number coming in 39% lower at 789 crore rupees. You're probably wondering why the margins have fallen as much. There are a couple of factors at play. Of course, raw material costs have gone up quite significantly. There's also been an increase in employee costs, and there's R&D investments that have continued to rise, and the US revenue decline has hurt profitability mix as well. Very quickly, I want to go across to Mayuresh Joshi just to make out what has happened with Cipla on the one hand and Dr. Reddy's Laboratories as well. Both of those stocks actually reporting numbers over the course of the last 24 hours or so, and both disappointing quite significantly. In fact, they were expected, Mayuresh, to disappoint, and they've done worse than that.
That's precisely the point, Alex. I think the expectation was worse, and they're worse than that. So Dr. Reddy specifically, I think what's happened in terms of the expectations as far as the development phase also are concerned has obviously started playing out. The semaglutide related costs and the expectations in terms of new key launches is something that the street will probably look out for. Weak numbers expected. Dr. Reddy's probably had a weaker set that came through. For Cipla, I think what you raised is absolutely correct. I think if you probably look at the P&L, I think the input costs have now become almost 37-38% of the top line. On a comparable basis, this was close to 30 to 31%. So you've almost seen a 6 to 7% jump as far as input costs are concerned for Cipla in the quarter gone by. And therefore, I think the stark difference that you're probably seeing in terms of reported numbers, 16% versus 23%, along with the rise in employee costs, which are marginal on a year-on-year basis, but yet still a significant one, and R&D still being elevated at 6.8%. With the fall in US revenues, the management is very hopeful in terms of new launches expected to come through. They've done quite a number of pictorial presentations in terms of their PPT as well, in terms of what they've probably launched, and 48 launches expected. Now, how does this all play out in the coming few quarters in terms of recoupment of margins is something to be watched out for. I think all these factors probably contributed in terms of the underperformance that Cipla probably for.
All right, okay. Of course, so that's the view coming in on Cipla. But, let's get in Parth now to take a look at some of the stocks that are buzzing in trade today, either on the back of news flow or on the back of volumes. Parth, what's there on your list today?
Yeah, so there are three companies that are buzzing right now. The first one is Tanla Platforms, which has reported a good set of Q1 numbers with revenue growing 18% and PAT seeing a growth of 20% year on year as well. The stock has snapped a 4-day losing streak, gaining over 10% today. It has touched the highest level since October 2025 and volumes today are 14 times the 20-day average as well. The next one is Root Mobile, which has gained over 5% today, touching the highest level since February 2026. Volumes today are 17 times the 20-day average, and this is the biggest intraday gain for the stock since June 2024. So almost 2 years since we have seen this kind of a move in Root Mobiles. And lastly, CIE Automotive, which has reported inline Q1 numbers. Revenue saw a growth of 10%, PAT saw a growth of 16%, but the negative news was the CEO resignation. The CEO of the iron casting division has resigned, and this is why the stock has lost over 10% today. It is on a 3-day losing streak, and this is the lowest level the stock has seen since February 2026, and volumes today are 12 times the 20-day average as well. So these are the three stocks that are buzzing right now on the back of news flow and volumes.
All right. Thanks so much, Parth, for that. Let me go across to Nagaraj for a check on these stocks. These are all volume buzzers. Tanla Platforms, Root Mobile and CIE Automotive. Nagaraj, can you hear me?
Yes, I can hear you. Yes, Alex. Tanla is the one which has broken out of the range recently, looking positive at this point of time. It has moved up indeed from the lower levels, and the overall chart structure is looking positive. High tops and bottoms on the charts, and I'm expecting Tanla is likely to move further in the near term.
Okay, Nagaraj, the auto pack as a whole has been very resilient despite of the way markets have moved today, right? So it's showing that relative strength in the counter, and even if you look at the charts, it's forming that higher highs progression, right? In this space, if you're liking anything and you think that this could be the right counter to make an entry into right now, what would that be?
I think whole host of the stocks in the auto sector is moving up, and I think the Bajaj Auto is the one which is looking very attractive at this point of time. Broken out decisively, outperforming in the space in the pack. I'm betting on this as I discussed about the levels recently, and one can look to buy at this point of time. Currently around 11288, and I'm sticking with the immediate upside target of around 11,800 levels with the stop loss of 11,000. 11 in a stop loss of 11,000.
Okay, I do want to draw your attention to PVR Inox. The numbers came through not too long back, and a pretty good set of numbers. The net profit coming in at over 56 crore rupees compared with a loss in the comparable quarter. Revenue uptick of about 12% or so, and the EBITDA has actually risen quite substantially. The margins have expanded on a year-on-year basis as well. Remember, this was likely on account of Dhurandhar 2, as Mahima is reminding me. But it's not just that. It's also this quarter that's going to look pretty good, because if you look at the first 6 days collection of Odyssey, which is the latest Nolan movie, it's coming at over 80 crore rupees, and if you assume a share of about 60% for PVR Inox, then those numbers, at least in this quarter, look particularly good. And of course, Spider-Man also looked forward to. Mayuresh, a quick view on PVR Inox based on what you're seeing?
So I can say a line of Dhurandhar for PVR Inox. Hostler Indian Varo Badla Do. So I think that's clearly what PVR Inox is doing at this juncture. Yes, I think the rub-off of Dhurandhar 2. Odyssey is a fantastic movie. I think if you've not seen it, you go and see it. It is probably creating the numbers that and the margin performance at the box office.
Mayuresh, so I'll leave it at that, but let me get a check with Nagaraj on PVR Inox. It's up about 1.3%. Would you buy into it right now?
Right now, I'm not that excited with this, not as like as Dhurandhar. PVR is showing consolidation sideways range, though it has moved up today, bounced back, but erased its gains. The 200-day EMA is acting a strong resistance. Previously also, we have seen whenever the stock has moved just above the 200-day EMA, failed to sustain after that and declined. I'm not in the favor of buying at this point of time.
Right, more excited to watch the movies, I'm sure. Nagaraj and Mayuresh, thanks so much for taking the time. Pleasure speaking with you as always. Have a good evening. All right, let's take a look at the markets and see how we're closing. We're likely going to be closing very close to that 23,900 mark. In fact, we've made a bit of a comeback towards the end of trade. Pull up the intraday chart and you will see likely a bit of a pop towards the end of trade. And you will take that. I mean, at least we're not closer to that 23,800 mark where the significant support has come through.
Yeah, I think there is expiry also at its place, so that also needs to be kept in mind. But if you take a look at the Nifty 50 heat map, it will be interesting to watch out for as to what are those counters that have probably contributed to that slight uptick coming
more
in.
Green.
SBI Life more green, yes, almost slightly more than 50-50, but SBI Life topping that chart, followed by second day in a row. Bajaj Auto has done very well. M&M also doing fairly well, and TCS, Tata Consumer, ahead of earnings, doing very well. But I think on the flip side, you have Nestle, where this profit booking coming in. The Nestle South Africa has really fallen today. On the back of that, we're seeing pressure coming in on this one. Shriram Finance, Bajaj Finance, Adani Ports are some of the other names that continue to be under pressure. So that's the Nifty 50 heat map.
The auto pack as a whole has done incredibly well today,
yes.
right? So it's Hero MotoCorp also doing reasonably well. You have Eicher Motors that's up and about, Bajaj Auto. In fact, pull up the sectoral heat map and you will see exactly that. On the top of the screen, you will see the auto pack that is up about 0.7%, followed not closely, but followed by IT, which is up about 0.2% or so. So not too much in the way of sectoral winners today. In fact, the big loser is the Nifty Realty, which has outperformed in the recent past, up about 1.6% or thereabouts. I do want to take a check of the broader markets, the mid cap and the small cap indices, if you can, because they probably they have ended very close to the low point of the day for the small cap and the mid cap index. In fact, the small cap index is in fact at very close to the low point of the day, down 1.2%, and as a result of which the advanced decline ratio will likely be at the widest point. There you go.
Perfect estimation.
There you go.
Not here or there. Perfect estimation. I think the BSE 500 will be an interesting one to watch out for, because yet another day where it is going to be very news specific that we've seen, because Tanla platform on the back of strong earnings coming in, closing almost 10% higher, followed by something like a Chemplast, Ruth Mobile, Graphite India and HEG both doing fairly well from that basket. But on the flip side, you have SRF now down almost 8.6%, where management of course did not give a very good guidance. IndusInd down 6% as well. You also have Westlife, HFCL. I don't know how that stock moves, but CI Automotive is the other one which has taken quite a knock in trade today.
All right, and the story ultimately, even at the close of trade today, is in fact Brent crude. Keep one eye on that number, because we're heading towards the $100 per barrel mark, and if the supply constraints continue in the Red Sea, you will likely see that number go even higher, which means pressure for the Indian equity markets, certainly. But that brings us to the end of this edition of India Market Close. From Mahima and myself and the team that put the show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned into the Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin dips below the $66,000 mark amidst macro headwinds. S&P and Pantera launch crypto index. Bitcoin ownership overtakes gold for American investors. And lastly, crypto industry hopes Clarity Act to pass soon. Now there's an interesting crypto basics for you. Now, have you ever received a message? Your trading account will be blocked today. Click here immediately. Right. So if you have, take a moment to verify it first. It could be a phishing attack. Now, what's a phishing attack? A phishing attack is one of the most common online scams across crypto, equities, banking, and other financial platforms. The fraudsters pretend to be trusted companies which may trick people into revealing their passwords, login details, or their secret recovery phrase. Now, if that information falls into the wrong hands, your account or assets could be compromised. In many cases, especially in crypto, recovering the transferred assets can be very difficult. Now, here are a few common examples. First, the fake SMS alert. You receive a message claiming your account will be blocked unless your complete KYC is done immediately. Now, what happens? The link takes you to a website that almost looks identical to the real one. Now, if you enter the details there, they could be captured by scammers. Second, the free airdrop scam. You come across a post on Telegram or X claiming you have won free giveaways. Now, to claim this award, you're asked to connect your wallet or approve a transaction. Now, instead of receiving award, you may end up granting the permissions that can be misused. And lastly, the third one, the look-alike website. Now, the scammers are creating web addresses that closely resemble the genuine platforms, and this will actually change by just one letter or a character. And if you don't notice the difference and the login, your credentials could be exposed. So how can you stay safe? First, never share your secret recovery phrase or passwords with anyone. Now, avoid clicking links sent through SMS, emails or social media messages, especially related to your financial accounts, and whenever possible, type the website address yourself or use a saved bookmark instead of clicking links from a search results or promotional messages. Now, a few extra seconds to verify a message or website can go a long way in helping keep your investments secure. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये युग तुम्हारा, ये रण तुम्हारा, हर चुनौती तुम्हारी, हर शिखर तुम्हारा, तुम ही हो भारत का स्वाभिमान।
हर सेक्टर, हर स्टेट, हर रीजन, हर उम्र के इनोवेटर्स ने दिया जबरदस्त प्रतिसाद, तभी तो वंदे भारतम में एप्लीकेशंस पहुँचे 25,000 के पार और रजिस्ट्रेशन डेडलाइन बढ़कर हुई है 30 जुलाई। आप भी भारत के सबसे बड़े ग्रास रूट इनोवेशन मूवमेंट से जुड़े vandeBharatam.org पर रजिस्टर करें।
India is at a 2030 turning point. EVs, hybrids, biofuels or hydrogen, what fuel wins where? Join top auto CEOs, policy experts and industry titans at the NDTV Automate Fuel and Future Summit 2026.
Where you need charging infrastructure, you need it on highways.
Catch the exclusive coverage only on NDTV.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. First, the US Dalal Street has hit the brakes after a volatile session with benchmark indices ending firmly in the red, and the Nifty has slipped below the crucial 24,000 mark, while the Sensex has lost more than 350 points as investors have turned cautious amid global uncertainty and even profit taking. Talking about the sectoral trends, so they've remained largely weak with realty and oil and gas stocks leading the losses. On the other hand, auto and media stocks have bucked the trend and managed to end in the green. Viewers, two-wheeler stocks were in top gear with Bajaj Auto and TVS Motor hitting fresh 52-week highs, while Eicher Motors and Hero MotoCorp have gained up to 4%. The rally follows a series of strong quarterly earnings, healthy sales momentum and optimism over sustained demand in both the domestic and export markets. Next counter to look at is Rubicon Research. So the stock has seen an upside of 128% so far in 2026. So this rally has been driven by strong earnings, healthy execution and optimism around its specialty pharmaceutical business. Now, investors have also cheered the company's expanding presence in regulated markets and even expectations of sustained growth in its product pipeline. Next counter to look at is SpiceJet. So the shares have zoomed 10% to hit the upper circuit after several media reports have suggested that the company has inducted 3 Airbus A320 aircraft into its fleet under a damp lease agreement. So following this report, SpiceJet's share has they've really spiked 10% to hit the upper price band of 12.32 rupees on the BSE, and the aircraft has already arrived in India and they are expected to begin commercial operations later this week, strengthening the airline's fleet and capacity. Next counter to look at is IndusInd Bank. The shares have slipped as much as 6% despite reporting a sharp improvement in its first quarter earnings. The private lender has posted a 72% jump in consolidated net profit to 1,037 crore rupees, and this has been held by a 21% decline in the provisions and contingencies. So even as the bank has guided for stronger profitability ahead, investors remain cautious, sending the stock lower in trade. So the reaction suggests the street is looking beyond the headline earnings and even focusing on the bank's near-term operating outlook. Viewers, HPCL shares have declined after the company has reported a loss in the first quarter as soaring crude oil prices have hit the earnings. The sharp rise in crude has been triggered by the West Asia conflict and increased input costs, and even weighed on the refining margins during the April to June quarter. So investors have reacted negatively to the weak performance, sending the stock lower in trade. Next counter that was buzzing away in trade was Dr. Reddy's Laboratories. So the shares have tumbled as much as 9%, hitting a 52-week low after the drug maker has reported a weaker than expected first quarter performance. So the disappointing results have triggered a sharp sell-off, with several brokerages cutting their earnings estimates and even the target prices. And PVR Inox is back in the black this quarter, helped by a strong movie slate and even robust theatre footfalls. And the company says that the blockbuster titles like The Odyssey have reinforced the big screen experience, with premium formats seeing the strongest demand. Management remains upbeat, pointing to a packed content pipeline and even healthy advance interest in the upcoming releases. So setting the stage for a stronger second quarter. Here's Chennai Petroleum Corporation shares have slumped nearly 10% after the company has reported a weaker June quarter performance on a sequential basis. So while revenue has surged 43% to 27,370 crore rupees, net profit has fallen 27%, reflecting pressure on the operating performance. Now, the decline in earnings have disappointed the investors, triggering the stock's sharpest fall in almost a year. Next counter to look at is Vishal Mega Mart, which has reported a strong first quarter performance with consolidated net profit rising 26% year on year. So revenue grew nearly 19% to 3,727 crore rupees, and this has been driven by healthy consumer demand and even store expansion. EBITDA also increased while the EBITDA margin remained steady, reflecting stable operating performance. Cipla has reported a weak first quarter performance, with earnings missing the street estimates on profit, operating profit and even the margins. The consolidated net profit has fallen 39% annually to 789 crore rupees, while the revenue rose just over 2%, broadly in line with the expectations. So the weaker profitability has disappointed the investors, sending stock lower in trade. Now on to an NDTV Profit exclusive. Viewers, your channel has learned that Manipal Health Enterprises is preparing to launch its IPO as early as next week. Sources tell us that the offering is expected to comprise a sizable fresh issue along with an offer for sale by existing shareholders. The fresh issue proceeds are likely to be used to reduce the debt and even strengthen the company's balance sheet, while also funding the acquisition of a minority stake in subsidiary Sayadri Hospitals. And on the offer for sale side, several existing investors are expected to pair their holdings, with promoter Temasek likely to be the largest selling shareholder. So the Manipal Group, TPG and a number of financial investors are also expected to participate. Manipal Health has declined to comment on the proposed listing, and if launched as planned, the IPO could be one of the most closely watched healthcare offerings of the year. Here's the impact of West Asia conflict is now being felt across global trade routes, with freight costs surging and export shipments facing significant delays. Industry bodies are saying that shipping rates on key routes have jumped sharply, while war risk surcharges have added to the burden for the exporters. Now, exporters tell NDTV Profit that securing vessels and even containers has become increasingly difficult, with many left scrambling for space. Now, freight costs to the US, Europe, Turkey and West Asia have risen substantially, while transit times have stretched by several weeks because of the disruptions around the Red Sea and even the Strait of Hormuz. So industry players are also flagging congestion at major Indian ports, adding to the logistical challenges. And authorities have directed terminal operators to speed up the movement of the containers, but exporters warn that higher costs and longer delivery timelines are beginning to hurt the competitiveness and even disrupt the supply chains. Whereas the government says that airfares remain under close watch even as airlines grapple with higher fuel costs triggered by the geopolitical tensions in West Asia. Civil Aviation Minister Ram Mohan Naidu has informed the Lok Sabha that the rise in aviation turbine fuel prices have led the airlines to introduce fuel surcharges earlier this year, with rates sequentially revised based on the flight distance. And at the same time, the Directorate General of Civil Aviation's Tariff Monitoring Unit is tracking fares on a number of routes to ensure there is no exclusive pricing. However, the government has reiterated that airlines are free to determine ticket prices based on commercial and even operational considerations. New Delhi continues to favor a market-driven approach, arguing that competition rather than regulation is the best way to keep the fares in check for the passengers. Fears Interglobe Aviation, that is Indigo, is out with its Q1 results. Let me take you through the numbers first. So it has incurred a loss at 238 crores versus estimate of 1,084 crore of profit. Revenue stands at 24,584 crores versus estimates of 24,386 crores. My colleague Somit is joining us on the phone line to break down the number for our viewers. Somit, please take it away. Somit, he'll be back shortly, viewers, but let me take you through the numbers once again. So Indigo has incurred a loss at 238 crores versus estimate of 1,084 crores of profit. Revenue stands at 24,584 crores versus an estimate of 24,386 crores. And revenue is up 19.9%, as I can see, as compared to last year. And if I can get more numbers on my screen, EBITDA margin stands at 15.8% versus 28.6% annually. And viewers, we'll be back with more on the Indigo earnings shortly. But moving on with Market Express, we have Mercedes-Benz, which is stepping up its performance car portfolio in India with the launch of the new AMG E53 hybrid. And the luxury car maker is bringing back the E53 badge, and this time as a plug-in hybrid that combines performance with electric driving capability. So the sedan delivers sports car-like acceleration while also offering an electric-only range of up to around 100 kilometers. And the AMG E53 comes loaded with performance-focused features, including all-wheel drive, rear axle steering, and air suspension, and even upgraded braking system. So inside, buyers get a premium cabin packed with digital displays, connected car technology, and even advanced safety features. So Mercedes is saying the model is aimed at enthusiasts looking for performance without compromising on efficiency and with no direct rival in the Indian market. The AMG E53 hybrid further expands the company's growing lineup of electrified luxury vehicles. And moving on to some national news now, viewers, Parliament has witnessed another day of high political drama as the ruling NDA and the opposition, the Indy bloc, has held face-off protests outside the House over the NEET paper leak controversy. So while opposition MPs have demanded the resignation of Education Minister Dharmendra Pradhan, the ruling alliance has accused the opposition of politicizing the issue. With slogans, banners and counter-protests dominating the Parliament complex, the standoff has raised the likelihood of yet another disrupted day in both the houses. And viewers, the Corporate Janata Party's protest at Delhi's Jantar Mantar has entered another day with supporters refusing to back down. Protesters are demanding accountability over alleged irregularities in the competitive examinations, including NEET UG 2026, broader reforms in the education system and the resignation of Union Education Minister Dharmendra Pradhan. The agitation continues to gather attention as pressure mounts on the centre to respond to the protesters' demands. And viewers, in a major announcement amid the ongoing NEET UG controversy, Prime Minister Narendra Modi has said that the government will set up fast-track courts to deal with paper leak cases, calling for swift and stringent punishment for those involved. The Prime Minister has said that the move is aimed at ensuring faster justice and also restoring confidence in the examination system. The announcement comes as protests over alleged exam irregularities continue across India. And viewers, rescue teams have recovered 22 bodies from the collapsed NHPC tunnel in Sikkim. While the search continues for 3 missing workers, authorities say that a suspected methane gas explosion inside the under-construction tunnel has triggered the collapse, releasing toxic fumes that have made rescue operations extremely challenging. The state government has ordered a detailed probe into the incident. Viewers, the centre has appointed Anurag Jain as the new Chief Executive Officer of Niti Aayog for a 2-year term. A 1989 batch IAS officer from the Madhya Pradesh cadre, Jain is currently serving as the state's Chief Secretary. So he takes charge of the government's top policy think tank after a vacancy in the CEO's post. So Anurag Jain has previously held key positions in the Prime Minister's office and even the Department of Promotion of Industry and Internal Trade. Here's the Supreme Court has come down heavily on the Rajasthan government over the worsening pollution in the Jojari River, calling it shameful if the state wants to poison its own citizens. So the court has dismissed the SIT probe as a mere eyewash after an expert panel found highly acidic water still flowing through the river. So the bench has warned that decades of regulatory failure and administrative apathy have put the lives and livelihoods of lakhs of people across the region at risk. Meanwhile, viewers, heavy rain continues to lash Western India, with the IMD issuing an orange alert for Mumbai, warning of very heavy rainfall and gusty winds of up to 70 kilometers per hour. The weather agency has upgraded neighbouring Thane and Palghar to a red alert, signalling the risk of extremely heavy rain. Meanwhile, Gujarat, Madhya Pradesh, Maharashtra and parts of Konkan region are also bracing for another intense spell of rainfall after torrential showers.